What's up, guys? Good morning. FOMC day. How's everybody doing? Sorry about the music. Sorry about all that stuff. Just trying to get to it. Look at old pal here with his little model having ass. I hope y'all are doing well. I hope you guys got some sleep. Hope you guys are ready for the day. We're gonna get right into it. If you could hit that like button, subscribe. Let me know that you're here. What's your name? Are you new? Are you a veteran? What you're looking at today? What you want to work on? What would you like to get out of today? What do you want to get out of the meeting? What do you think is going to happen in the meeting? All that fun stuff. I'm Justin. I've been trading for about 10 years, probably over 10 years now. I think I've been saying that for 10 years. So yeah, hit that like button, subscribe if you haven't already done so. Right now, I'm just getting a few things posted really quickly. So I do apologize, but this is what I go through in the mornings. But yeah. All right, let's do it. So, man, there was some movers yesterday. Let's go through we'll first start with the markets. Now, here's what I want to talk about. Here's the first thing I want to talk about. Let's talk about Monday. Let's talk about why it was not surprising that yesterday I stated do not be surprised if you get some weakness today, as in yesterday. Why did I say that? There's a few reasons. Monday afternoon, I know you guys can hear me. Sorry, I'm just logging into my broker real quick. Let me turn this down. This way I know that I have sound and all that good stuff. All right, so yesterday, I'll say this one more time. Yesterday I said, and it's all live. You guys can go back and look. It's probably a few minutes into the stream. So on the S&Ps, I said yesterday for the overall markets, do not be surprised if you have some weakness today. Okay? Don't be surprised if you have some weakness. All right, here's why I said this. Yesterday, or Monday, was a really nice day. And I want you guys to use this stuff going forward. All right? You know, we made some progress here, right? Monday, we just sat up here and held the 20-day moving average. You pulled back. You tested these levels, okay? And then we had a really nice day, or a really nice ending to the day on Monday, right? Today's Wednesday. This is today. It has not really started yet. So you'll notice here, this strong recovery. You broke the 20-day and you quickly recovered it. I expected, okay, cool. We're back up, closing. And if you look at this on a daily candle, you closed specifically above that level. And I myself was like, man, this would be a really nice time if you could come in the next day with the gap up. I even thought about buying calls at the end of the day, very small, because they could have went to zero. I would have went probably 2-3 days on. I probably wouldn't have went to a Friday, all right, because anything can happen. We got 2-3 wars going on, so I probably would have went with the dailies and spent maybe 20, 30, 40 cents a contract. You specifically closed up here on Monday, so when we come in yesterday, and we come in with a gap down, I'm like, oh wait, hold up, we are not above that level anymore. This was not a good open. You can see the rollover. Monday was a really nice day that we held. Okay, cool. We just consolidated up here. We cracked the 20, but quickly recovered it, and then we closed above that 510. It's like 510 level. And then when you come in with a gap down, I'm like, whoa, wait, that's not good. We should have. I would have at least wanted to come in and started making progress up in this area. We didn't. We sat here all morning. Resistance, resistance, resistance. And that is why I said, along with the sentiment, because it felt real good that we were able to hold that yesterday. And that's why I said, do not be surprised. And I gave you 502. I gave you 502 yesterday. Yesterday, you could have saw this. Maybe you could. It depends how long you've been doing this. But you could have sensed, like, wait, that's not a good look that we did not and cannot get up above, back above that level that we closed above Monday. This was not a good sign for me yesterday. I did not like this. I wanted to see a gap up to, I don't care, something above this high, that Monday's highs. We never got it. We never got it. So yesterday was a clear sign of weakness. Early, right out the gates. As soon as I woke up, I turned my computer on, let it run up, make coffee, come back. I'm like, oh, snap. That's not good. That's not good. We made this real nice, strong recovery. So yesterday it did not surprise me. I wasn't confident enough to take any trades on it. I was eyeing 502. It started off, it started the day off sluggish a little bit yesterday. We finally cracked it. I did almost take this trade in the afternoon yesterday. I almost took that short. If you guys see here, we'll go to an hourly chart. You could have seen this even just right there. Look at that. You just turn this 506 back into resistance. Look at that 506 level. Right? You have this 506 level right here, and you just turn that into resistance. And I just about took that trade, but I didn't. I was really tired yesterday. I've been running back and forth to the hospital and doing a couple different things. So I was just, you know what? Monday, I missed my Tesla trade because I had to go run some errands, and I just did not feel comfortable going long Tesla and trying to manage that position behind the wheel, running around. So I let her go, that gap up, double bottom. But this was a trade late in the afternoon that, was sitting there. I thought about it. I almost took it, but I said, let me just hold up. We got FOMC meeting. We have all these earnings coming up. Let's just take it slow. All right. So today, what do we look for? I'm watching 502. I'm going to watch for that level again. You are trying to make this area support here. What I want to see is if we end up breaking 500, 490, 498. If we break this level and turn it into resistance. All right. Longer term, I think that you're going to get a bounce here, and I'll show you why. If I take you to a daily chart, we're going to start right up with the indexes. I'm going to go a longer term. And this is what I do for Fed meetings as well. I want you guys to see this. We're coming into the 100-day. All right, not only do we have the 100-day, but I would expect, where are we now? We below it. We're at 500 now. Yeah, we're at 500 now. I want to run back up to 502 and test that level if we can. If we haven't done it pre-market already, you can see here a nice clear double top to the left. All right, this was our first test, really. I mean, we tested it 2 weeks ago, but this is our first drawdown from it. I would honestly just look to be short. Starbucks down, right? You're getting Ulta. You're getting all these retail names that are coming out, and sales are pulling back, right? The consumer is getting a little. You're seeing it in the earnings. So I think a lot of it's going to have to do with FOMC. Obviously, the labor numbers, obviously, demand. FOMC, you guys may not. Here's what I took from the last meeting, and this is what I wanted to show you guys is what I did. You see these little blue boxes here? We are yesterday or Monday. I was thinking we were going to try to get back to the last Fed meeting because this Fed meeting here, Powell mentioned the lag effect and how when the FOMC, when we came into this blackout period, I was really thankful for it. I'm like, finally, get these truckers to, be quiet because we know what's going on. Oh, this is the level here. I'm sorry, too. By the way, the SPY, look for 495. This 495 level, it's really 490. We'll use both of them because you have the 100-day sitting right here also. So that's going to be the support level I'll look for at 497, 495 in that area. It's going to be an area, but if that does crack, you got to look for that. It's like 2 Fed minutes ago, and what is that? That's not Nvidia earnings, is it? No, that's Nvidia gap up right there. It's going to be tough. But as I was saying, Powell mentioned the lag effect and how they weren't just going to throw this economy into a recession. I feel like they would much rather have strong employment numbers and time on their side as far as inflation is concerned. Yes, it's sitting here. It's stuck at 3%. There's a lot of things going on right now. You have the Houthis and the Straits with Russia, Ukraine. You have all these things going on. So once China reopened, you guys saw that it just made everything a lot easier. Manufacturing picked up. There were goods that met that demand. We'll have to wait and see what Powell says. And I still think we will be getting rate cuts, whether it's a 25 basis point, whether it's because of an emergency, whether it's not. Listen, these banks, here's the thing that they're not talking about, is these banks are still at risk, right? This could cause a lot of problems. And they want to do this stuff smoothly. They have tight labor market. That's a good. Tight labor market. We're good. People are working. They have money. Okay, cool. Inflation came down. It's not where we want it, but we're almost there. Maybe we give that a little bit more time. We've held rates for almost 2 years now, a year and a half, a year and 3/4. Okay, it's going to have its effect, and we know it. We've already seen GDP come in down at 1%, and we were at 3, and then we come all the way back down to 1. I think we're coming close. Just using the labor market, GDP, and some of the other things that are going on, I think, if not this meeting, you should start to see it in the summertime. That's my opinion. People are going to say no. I still think we'll get 1 to 2 cuts possibly, depending on what's going on. Because there's an issue where these banks are also, would U.S. Fed, I don't know. They could. People say no, they're not. I don't think they are. Listen, the Fed does not surprise the markets. And here's what you need to look at, is the CME Fed rate tool decision. Okay? This is what the Fed, if this is what's been traded in, this is what the Fed's going to go by, because this is what the market has priced in. They do not want to surprise the market. They don't want to throw the market for a loop, because you have real underlying, you have retirement accounts, you have monetary policy that depends, and there is a reaction for the action, right? The Fed acts, and there is a reaction in the markets. And it has its spider webs, right? There's just this whole entanglement between rates. So let's go out to the year end. All right. If you go out, you'll go out to the year end. Where are we? Right here. September, November, December 24. So right now there is they're saying we'll get 225 basis point cuts. And that's only a 42% chance. I personally think this is wrong, but this is where they're trading at. That doesn't mean that I'm right, they're wrong, or they're right and I'm wrong. It doesn't mean that. It's just you'll see this stuff change like earnings, right? If we continue to get these stores and different sentiment that should hint the Fed, they need to start cutting, because energy's been high, rates have been high. It just has its effect, and it takes a little bit of time, right? The consumer doesn't have that extra income. They've been able to hang on because there's been Uber and all these other things that have been built from COVID that has kept the consumer going, right? Whether they've got 2 jobs, and they Uber on the weekends or whatever, but that still does not mean that, after 2 years of high energy, high everything, they just, they kind of just give up. And you'll see it. You're seeing more and more CEOs, stepping down while the market's at the highs and taking their money, because what is to come is still unknown. It doesn't mean that it's going to be that bad. Maybe it's mild. Maybe we have nothing. Maybe there's a soft landing. But in order for them to have a soft landing, I think they need to start cutting soon. That's just my personal opinion, because you still have this banking issue that the banks, unless the Fed is going to reopen this bank term lending program, it's only a matter of time. Now, I don't know the ins and outs of this stuff. I'm not a banker. I'm not an economist. This, to me, right here, along with financial conditions, I think this right here is in part financial conditions. You can see this is pretty much the SPY. You've seen the SPY rally, right? This is that long rally that we've had for the past 6 to 8 months since October. And then you have this double top, and then it pulls back. And what do you have in the SPY? Same thing, right? Long rally, double top, boop, boop, double top, and then it pulls back. And what do you notice? It's the same thing, right? So as far as the FOMC minutes, the Fed is not going to raise rates or lower rates today. I most certainly guarantee you, unless something crazy happens, which I do not think, the Fed will not raise rates. I can almost kind of certainly say that. I would look real, it's not that I can certainly say anything. I can just guarantee that the Fed's not going to risk throwing the economy into a recession by saying, oh, we just need to raise rates. The labor market's still tight. We haven't really seen much. They're not dumb, right? They're not dumb. And you're taking a chance of not only the lag effect catching up to you, but now you're taking more of a chance to throw yourself in a deeper recession. So I do not think we're going to get rate cuts today. I would watch this though, and I would continue to watch it when you hear news with whatever geopolitical events happen, earnings. Okay, you get more and more stores that are like, man, you start seeing bankruptcies. You start seeing maybe more and more banks. You guys just saw a bank around where I'm at. The FDIC just came in and took over that. So we're right back to where we were last March. All right. There's a reason why that when interest rates get to a point, especially from where we've came from, that this is why I feel like the Fed will start to lower it within the next. I think we get one by fall. I do. I think we get at least one. I think they start that trajectory, and I think maybe they may need the market to start to price it in. If the market says, okay, you're doing too much too quick, then it may force the Fed to start to cut rates and start to think about what it is that they're doing. We'll find out today. We'll find out. And I think you're going to get more of it. I think you're going to get more of Powell saying, hey, we do have this lag effect. We've held rates up for a while. We're not going to cut today, but, we're starting that process. And that's what we got last meeting. And a lot of people did not take that. And that's what I took from it was, hey, I'm bringing to you guys' attention that I know that there's a lag effect, right? What I'm not also saying and what you're not asking me as journalists, because, when the journalists ask questions is the banking system and the retail banks that are affected by these rates, right? And if you start having layoffs and money starts getting tight, these regional banks have trouble. And then they have to start selling assets off and bonds off at a loss. And that's when you have the FDIC coming in. You have banks trying to raise money again. And what I've been doing, which I've been keeping an eye on, is credit default swaps for all the different banks. You guys can always look at that. And you can get an insight on credit default swaps early on what banks are at risk and which ones aren't. And you should be able to see the signs. Maybe there's a trade there, for you. It's something I look at. I'll cover it further. But let's go into charts. I want to go through some news. We had AMD, Starbucks. We had these earnings. And that's what I want to start getting. I want to get a game plan in for today. My trade idea was Tesla Monday. Yesterday, I liked Shopify. It looked like it had some relative strength. And then this thing just tanked. Look at this. Look at that downside move yesterday. So this was a big move that I did not take because I seen the resistance up here at 75. But look at that downside. And if you look here, just look at the steady increase in price. This is something I haven't watched in a while. It's not something I keep my eye on. But it looked like, for the most part, it had some relative volume with it. And it definitely, I feel like, sucked some people in long, at least to try to get to the 50-day up here at 75 bucks. And then this thing fell out of bed and never recovered. So there was news, I think, a couple days ago. But You know, I never took that yesterday again. I was more so like, hey, let's just let the day go. We'll do some research, and then we'll you know, pick it up tomorrow. And look, it's getting a nice pop today. So let's go to the overall markets. Here's what I like to do, guys. Oh, and this is what I wanted to show you. FOMC. What I like to do is take the high and the low for the morning session before the FOMC minutes come out. Well, you guys can see here. You guys will see here that you see this box. You see this box here with the high and the low, and this is something I like to do as far as direction, right? You'll put in this sideways type of action here, and I'll put this box in before the interest rate decision comes out. And then what I'll do is, once it leaves and pulls back into the box and holds, and it gives us a direction, you guys can see here on a 30-minute chart, more times than not, you will leave that box and revisit it, or you'll get to the top end. You'll see here the first move down into the bottom. You could not break the bottom. It did not make a new low a day. And then it just reverts back to the previous high a day, and then leaves and tests it, and then it goes. So you guys will see me do this again today, and it's a good way to help you trade through the FOMC minutes. I think it's really effective. I do. Just like here, right? This was leading up to the Fed minutes. We put in 486.40, right, as our low, 489, and then what happens? It goes to the top end of the day, the day's range, cannot break through it, and that direction is picked, and then it reverses, and then it leaves. Where does it go? It goes from one end, breaks out to the other, but inside of this, it tests it, then it continues. You get your continuation. So these are a few things that I like to do for FOMC minutes. So let's go through the overall markets here and see where we are. Where's the Dow? Where's the SPY? What do we want to be long? What do we want to be short? What sector? Obviously, let's go look first and foremost. You know, Bitcoin was holding on. So I want to look at the dollar, yields, Bitcoin. So Bitcoin broke down from 60. I was hoping to get a test of like 62,000 on Bitcoin. Never happened. It never came back to test that level before. That was my ultimate goal, was get down to 60, right? Get this pullback here. It bounces back, and you get a bounce back to 62 and kind of turn this 62,000 area into resistance. And I never got it. You know, it doesn't mean that you can't get it later on in the future, but that's what I was looking for, and we never got it. So you have nothing here. You have nothing. You have nothing holding you other than this little consolidation. Come on. Oh, shoot. We have some data getting ready to come out here. I think you got to look for 52 eventually. I think it's coming because this is only going to keep you up a little bit. See if we get a bounce back into the 60s. I doubt it. You could just sit in this whole area and consolidate. All right, that's Bitcoin. All right, that's Bitcoin. You have a little support there, but not much. Not much at all. Looks like you're aiming for 50,000. Let's go check out our yields, and we'll look at our dollar. Kind of climbing, but still in the range. Looking like this might be a lower high. Dollar put in a new high. Close to a new high? No, it did not put in a new high. Closing high, yes. Not a new one, because we obviously were a lot higher than that back here. So that's that. The dollar is still... You have a small gap there, too. Do you guys see that right here? You guys see that small gap right there? Up there at 106.6. It's kind of funny, isn't it? How all this stuff works out. So maybe we have a little bit further to go. let's go look at natural gas or gasoline futures. This was a trade I never put on, but it was cool to see that this worked out. Usually I'm not one to do all of this, but this was a nice wedge here. This here, right? This trend line down. This is just showing you the reversal that was getting ready to come, right? You guys can see on a daily chart right here how you had it's showing you negative, positive divergence, if you want to call it that, negative, positive, whatever, right? Positive because it was going higher, so you can see, right? Here was your divergence, and you're just seeing strength in weakness. And I'm like, okay, it puts in this wedge here, breaks out, pulls back to it, and I said, okay, we got this huge gap up here. It's probably where we're headed, and it just did it in the time span that I had it, which is a little bit funnier. But I'm not one to go crazy with all that stuff, like having that stuff all over the place. So gasoline futures pulling back. Let's see here. So let's go into the markets. All right, let's get our game plan today. So the S&Ps are officially, we put in a new low, we recovered. Let's go to the Qs. Now, I may do things a little bit differently than others, and that's all right. So the Qs are back down to this lower support. So what I'm doing right now is seeing what sector, whether it's the Dow, IWM, technology, whatever. Look, the Dow is still, see that I can't really use it this early for the Dow to see what do I think is going to lead me to the downside. Yields, the dollar, they're all still where they're at. So I'm not getting like a breakout in the 10 years saying, okay, let's look at tech. But it does seem like, it seems like the markets are kind of matched up right now, if you had to ask me. All right, I just, everything is still sitting here. That's the IWM, the Qs. Still sitting at this pivot low. Looks like the Qs actually are making this into support, and the IWM is a little bit below it. Made it a rejection point. Looks like the SPY is pulling back at it now, and possibly going to bounce. So I would keep my eye on the Qs to be a leader. All right, see if it can hold this level here, and see if it can try to bounce, even if it just goes up to reject 423. We'll start with the obvious. Let's go with I'm at the Qs right now. So AMD, Amazon, Starbucks, 3% decrease in sales or in growth or whatever it was in sales in the U.S., 11% in China. So the IWM yesterday cracked the 100-day moving average. So if we know we cracked the 100-day moving average yesterday, here's the 20-day. I would love to see us hold up here and try to rally and test 428 again. But that would mean that you got back through the 100-day, and that would be tricky. I don't think we're going to. I don't see why we couldn't, actually. I don't see why we couldn't get back up through the 100-day moving average. I really don't. I think we might, and I think it might surprise people. So this is what I would look for. This is what I would look for on the Qs, is to see if we can get semiconductors, and that's where I'm actually going to go to right now is AMD. So I think I cleared everything for the most part. Where are we at? 147. 147. Nice. So it did not put in a new low. 147.08, 148.14. Wait. Oh, okay. I see now. I see. All right. 148.80. All right. So this is the level I'm going to watch for on AMD. You have this double bottom right here, or double top, right there at 150. And let's go to You have, wow, so you do have the 20-day right there as well. You know, I may not trade this today because I think, you know, the trade is about, you know, usually when people, you know, see it, the following day they try to trade it and it sits sideways, but then you get like 2-3 days later where you get the actual move when everybody's worried about whatever, like let's just say Nvidia or Boeing or some other company reports and they're sidetracked. All right, so that's a nice rejection there. I would watch this level here. I would watch this level to see if you can get up above it and hold it up at 150. Wait, where are we? We're at 148. Okay, yeah, 150. I'd be watching 150. Now you can see here at this pennant. Look, more job layoffs, guys. Breakout. Sorry, I'm just removing this. All right, so we have that, and we're at 150, right? So we have the 200-day moving average. That's if this market gets going. I still think AMD held on okay for the most part. What is that, 140? All right, so
internet freedom, which is totally disqualifying for letting them control one of the world's most important social media networks with incredible surveillance potential and also potential for collecting information.
Your thought on this is not that it's necessarily a national security risk right now, but that no matter what happens down
yeah, I think we got it. I seriously think we need to break up through this 150 level here. Yeah, 149, 150. And I think we're going to start to get it now. It's such an ugly chart, in my opinion. I'd be eyeing 152. That's the level I would be eyeing. But I'm going to need a pullback. Is that 152? Yeah, 152. So let's see if AMD, if we do have some type of strength if we have some type of strength in technology and or AMD, if it has the volume and it gives us a move, I would look for AMD to get to 152. That looks better, doesn't it? What do you guys think? 154. Oh no, shit, I did not have the chat up live. My fault. My apologies. Alright, so we have that. 151 support.
I think, someone's got to get creative and maybe a very wealthy individual, something like that, and maybe could shake stuff up. Maybe TikTok can, introduce some competition.
But do you think that without the algorithm, that anyone can actually really do this competitively? Because what I imagine happening is the Chinese say, look, we're either not going to sell the whole thing at all, or we're going to sell it to you with the user data. You can have the users, you can have the name in the United States. You can't have the algorithm. You have to develop your own algorithm. Yeah. Well, if you have to develop your own algorithm, in the time it's going to take you to develop an algorithm that's even anything.
Yeah, this thing is just.
What TikTok is like today.
I'm gonna wait and give AMD just a little bit. I don't think she's ready yet. I honestly don't. But that's your range. See if you pull back to like in that like 146 area, and try to hold that prior pivot low, and see if you can't get a bounce off of that area and try to get back into like 150 to 152. But it looks like 150 right now is a rejection point. As of now, right? You bounced in it, rejected it. A nice pullback right here to 147. That actually looks a lot better. Now I kind of see what's going on. right? It's pulling back, pulled back into 147. We'll see it close down there. So yeah, 147, and we'll see what happens here. See if it can start to pick up a little bit of steam and try to go up there, but I don't think so. It looks like it might have one little more downside, and then you'll get your pop. So let it just hang out. Let's go through some of the news. And if you guys have questions, I urge you, post them down below. Hit the like button. Subscribe if you haven't already subscribed. If you have any question about the markets, a ticker, throw them in the chat. I'd be happy to answer it. Give you guys my thoughts and some trade ideas for the day. So some of the names that I have been watching. Yesterday we were watching I started watching Coinbase. See, I don't want to get sidetracked, but Coinbase had a nice day yesterday, and it got there. We said the low 200s, that Coinbase might be ready to get back down to the low 200s, and that's what she did. She got back down to put in a low yesterday at 202.50. I mean, you guys can see this was a really nice rejection there. Bounced back up into 240. 240 was that level. The 50-day moving average, Monday. And it rejects the 20-day moving average, come in with a gap up to reject the 50-day. And now it looks like a perfect trade right on down to 190. I think there's more left on Coinbase. And I think you could see Coinbase back down at the 100-day moving average. So if we watch Bitcoin, I want to have Coinbase on my watch list. I want to watch Coinbase. All right. If you've noticed the past few days, or the past couple weeks where, let me have a cup of coffee real quick. If you've noticed the past few weeks, Mara, Riot, all these names have been in play with Bitcoin, popping higher, consolidating up at highs, and now we're starting to get that pullback. Coinbase is coming right into that 100-day moving average, and on a long-term trend, you guys can see that 200 level, psychological level. Well, feels like that's your target. All right, that 200 level. But we have the 100-day coming in right here to this prior support level. It's at it's like in the low 190s, like 193, 193.50. All right. And that's what I'd watch for today. I'd watch to see if you can see all these tails here. So there are buyers that are down at 197. I was upset with myself, guys, when this thing took off to $60 it was, or whatever. Yeah, right there. Right? I asked myself, I said, guys, how did we not buy any Coinbase down at $40, $30, $50 a share? How did we not pick any up? And if you did, you got rewarded. Look at that volume.
On or about opening of trading on May 3rd. That is AEZS.
Sorry, I just got to clean up my stuff. Alright, so let's go into this real quick. I want to make sure that when I come in today, my charts are clear and they're not a mess. Alright, I don't need any of this stuff, I don't think. 225. Came in with a gap down. That's not good. Yeah, I would look for 200, 199.99 on Coinbase to look and see if you can get your rejection there, and look to see if you can't pull it back into the 100-day moving average. I think you need to wait for a bounce, though. I don't think this is in play right now. I think the trade was yesterday, and you had to be in it yesterday.
During their meeting today, he won't accept a deal that will include any.
I would keep an eye on it, though, because if it starts going, Related in Alabama. Let's see here. Let me see.
Licensing and milestone payments. Volition RX, VNRX. Download the free app now.
Let's go look at small caps real quick. IMCC. One of these names I was watching yesterday. $1.20 PLTN. That's not good. Not good. Decision point systems. Looks like an earnings there.
Right now, maybe it's not leading to volatility, but what I have been hearing from financial advisors, people on Wall Street, strategists, is that this comes up.
Oh, Gunjan's on. Always like her. TGTX. It's a nice rally. It's a nice rally. TG Therapeutics. If you guys have noticed, I gave this out a few days ago. Back here, beginning of the week. This was a nice rally on Biogen. They started to break out. You guys were seeing the end of last week and the beginning of this week. You're seeing a rotation into some of these names here. Maybe keep an eye on them. You know, well, it is in a downtrend. Maybe this does get short. I don't know the liquidity on this thing. I don't know how it is. I have not looked yet. This could be a nice rejection. This could be a nice trade setup here for a short. I'm just being honest here. I would watch that. I would. There's a trade idea right there. Pull back off of that 220 level. And you can see for 2 days it's already rejected it. Alright. You do have some nice volume. Just make sure that you're not competing with some news. Because if there's some real news here, you know what I mean, you could get hurt. So that's that. Biogen. I might actually look at this myself. I don't know how the liquidity is. Speaking of that, mRNA, they have earnings coming up tomorrow, so I won't be playing this. Shit.
RIOT, right? Blockchain is out. KHC.
That's funny. Riot earnings are out. Big pop there.
Kilo Hotel Charlie.
It's not. And Andy, you're asking about volatility. We're already seeing election-related volatility. Think about Donald Trump's social media company. It's
CNDT Conduit reporting 46 cents. The estimate was.
Sorry guys, let me just set this up real quick, and we'll keep going. We'll keep it going. Keep it moving. Because I will be prepared today. I will be prepared. Starbucks, look at Riot go, guys. Riot's just running and gunning, baby. Running and gunning. So, we'll see if it gets taken back, but that was a really nice pop there.
LDOS, Leidos awarded $206 million NGO mission software monetization contract.
That was a
That was a
perfect area yesterday for Starbucks. If anybody looked at the daily chart and saw where it pulled in back into,
platforms reporting
1004. Where are we at here?
Loss of 14 cents. Sales coming in below estimate at 79.
Okay, bid and ask 1039, ask 1050.
LDOS for
I feel like it's got to reject. It's got to get below $10, or it's going to get above 1050, or it's going to get up towards 1250. It looks like. You can see this clear range that Riot puts in right here. Right there. That's the range I would look for. Either a break to the top or a break down and out. Look at the bid, 1010. It's already starting to break. And you have a gap. See the gap there? You guys have 1, 2 gaps. So I would expect it to pull back. That doesn't mean that it will. Just longer term, and not just today either. Yeah, look at that reversal. So, all right, that was Riot. We can cover their earnings if you want. Come on, man.
S&P futures down by 22. The Nasdaq
MA MasterCard reporting $3.31.
elevated from where we were at this point
The
yesterday.
estimate on MasterCard
467.
was
2 years at 5.
$3.23 from Michael Alpha
Did-
MA.
I was like, why did the Qs just do that?
CVS shares are plummeting this morning. Earlier today, it reported earnings.
Revenue 6.3
CVS Health, dude.
39 billion estimate from Michael
Things are getting retail is getting hit, guys. They're talking about CVS right now on CNBC.
Turn it into a true healthcare company from its history and its legacy as a big drugstore chain. The CEO
Look at this,
called it
smacked.
release a near-term challenge. It says
These things are hurting. You know,
deal with this.
you have this switch from online retail from Amazon, right? Amazon will just bring it to your house. You don't even have to leave. Like, talk about extra lazy and the separation of people and interaction. You're seeing it. Starbucks, like, you know, Starbucks obviously isn't like this. That's a little extra. There's news with Pfizer as well, PFE. So we'll cover it all. I'm trying to get through it. It's a lot. Like, there's just an insane amount of just things going on. It is, you got to be thankful to be alive. You do. You got to be thankful that you're a part of the markets right now, because it doesn't matter what sector, what area of the market. There is just a ton of opportunity out there. From, you know, Riot just reporting earnings, Coinbase pulling back, to Pfizer, to CVS, to Starbucks, to semiconductors. Like, you name it, you got it. What is going on? Why is this thing freezing on me? It doesn't want to zoom in. Let me go to another ticker. This was a trade we called out last week for Goldman Sachs to put in a new high, and it did. This was a big one, guys. This was a big trade. This was our stop loss below Friday's low. Boom, boom. Those things went from, you could have got in anywhere $1.85 to $2.25, maybe $2.50 depending on your broker. There's like $2 contracts went all the way to $16, $18 from $2. Big trade. And we said 8. Not we, but me. We said 8. Goldman Sachs, new highs. New highs. Got to look for a new high there. That was a good analysis there. So let me go back. All right, so Riot's holding up here. All right, so there's Pfizer, CVS down, Pfizer down. All right, let's go through some of the names we're looking at. All right, been going through a lot of names here. Microsoft. All right, let's start with Microsoft. Microsoft has been really weak, and I want to delete these levels. All right, I want to delete these levels. I'll keep that one. It just cannot get a bounce back at all. It hasn't been able to. Hasn't been able to do anything other than be weak. And it worried me yesterday. Like yesterday I was looking to say, okay, can we get a little bit of a bounce back? But look at the day. Look at the candle it put in yesterday. Look at the candle that it put in. So if we go to the daily chart, we'll start with the long-term trend. It's obviously, you know, pretty weak right now. I mean, you don't really have anything here. All right, you don't really have much here to hold you up. So what is that, 390? All right, 390. No. Okay, here it is. Here it is. There it is. You got a bit of a double bottom here, support. I know it doesn't look that good, but 385. Man, this sure is an ugly chart, isn't it? Yeah, 385. 384.75 to 385. I would look for. I feel like you could get a bounce here on Microsoft. Look. Do you guys see the weakness here? Like, it should be holding this area. It should be holding 390, and it's not. Doesn't it feel like it wants to pull back off of 390? In my opinion, it does. I don't know, man. This chart is just, it's tough. I'll probably end up leaving this alone. If you get a bounce back into like yesterday's close, I don't really have anything on the daily chart to reject and get short off of. You know, maybe 395. Maybe 395 if you can get up there. It should start to hold here. Should start to hold. Yeah, that's what I would look for. I'd look for like 395. If you get up to 395 and you start rejecting up there. But I think this trade's over with. I do. I got to be honest. I think that trade's over with. NVIDIA. Looks like it's pulling back. It's holding up okay, right? It's not making new lows. At least it could be on a long-term trend. Could be on a long-term trend. It's getting ready to pull into the 50-day moving average today. So I would watch for that to see if it breaks or if it holds. You also have your 20-day down there. 20-day crossing below the 50-day. Nice support level right here at 156, 158. Oh, I'm sorry, 160, 159. Sorry, it's an area. Let me actually go back. Sorry for being bad at this. Yeah, I would look for this, and you could break. I feel like the support level would be back down here at 840. But it can hold. We'll see with AMD earnings. They weren't too bad. Like, it didn't take it bad. It didn't, like, AMD didn't put in a new low. Right? It didn't just, I'll show you what I mean by that. Oh, so you did crack it. You are below the 50-day. All right, that's an easy setup. That's an easy setup. You got to watch 850 and that 50-day moving average. That $50 area, that whole range on NVIDIA. That's what I would be watching, that whole range there.
Right now on MA Mastercard. Sales coming in below estimate for Mastercard.
Dude, what is going on today? Wow. All right, so yeah, I would look for NVIDIA to, if you can get short a pop. We'll see. I'm not going to just randomly say things, but you're below the 50-day now. You got to watch for that 860 and that 50-day moving average to act as resistance coming up in the prior day's close. Right up here. Was this off of Amazon or something? Or just AMD? NVIDIA was really getting worked like that off of AMD earnings? Or was it off of SMCI? It might have been SMCI then. Yeah, 860. I think you got to watch for 860. What will happen is I think you get a bounce. I think you even get, you should try to get back above that. I'm going to tell you what I think. I think you're going to get, you could get a nice bounce on NVIDIA. I think you'll get a nice bounce because you're so far away from the prior day's close. You know what I mean? That I would expect like a, here's what I would expect, a pullback into that 840. So that's not even, that's not that much of room. This 840 level, see if you can, see it's not going to. You may just start, you're probably going to run up there right now. You're going to run up there right now. I think by the time we open, we'll be up here. I think we're going to be up at 860 by the time we open. Yeah. But if you can get a pullback, yeah, it's starting to. Here's what I think. Right here, I think you get your pullback. Let's see if NVIDIA can get here. Let me pull it down a little bit. think you get to like right there. I think you get up to like right here. And by the time you open up, something like that. I would like to see another extension there, though. It could go either way. I'm not going to just, you know, I'm not going to try and be exact with it. But that's what I would look for. I'd look for bounce backs in the 860, that 50-day moving average. If we open up there, maybe you get a quick wick higher on NVIDIA. And then you get short that wick, possibly. You know, we'll see what the markets are doing. We'll see where we are.
It looks like the real thing.
It's an actual extension of our house. Sure, I'm a paid actor, and this isn't a real company, but there's no way to fake how Upwork can help your business. Search talent all over the world with over 10,000.
Yeah, that would be my trade, guys. Is if we can get a pop. If we open up here in the 855s, 856, I'll look for a quick pop into like, you know, honestly, yeah, if you're up here, if we are up at like that 50-day moving average, I'll look for a quick wick higher up into like 860, 862 or so. It's NVIDIA, so like a wick could be $4 or $5, $3 or so. Look for that quick wick. I would probably take a short and then look for a pullback down into like 840. If we open up down at 840, then I'm going to look to try and possibly take a long back into that prior day's close, like that area. You may not get there, at least into the 50-day 860 area. So 860 and that 50-day, depending on how we do it. So here, listen, I have not been watching semiconductors really because AMD has not reported earnings. Because they had earnings coming up. So I was kind of just waiting there. Fucking get some coffee. So names that I have been watching, and we were talking about this, but this trade is over with. Coinbase this is over with, in my opinion. I think that trade is, what is going on? Guys, I apologize. Like, I don't know what's going on with this thing here.
192,000 versus 165,000
There's your
expected on the ADP.
There's your ADP employment change. That's coming out right now. You just got it. 192,000. You just got that. I don't think the markets are going to move off of that. Let's go look. Yeah, they're not moving off of it. I didn't expect them to either. I want to see if we can hold this level and try to make some upside. Make a move back to 502. I really want that 502 for me to get short. I also am not ruling out a possible upside today. Like, kind of like the market throws people for, like, a little, like it tries to whipsaw everybody. And I'm going to look to see, like, it wouldn't surprise me if we do break above 502. All right. If we do break above 502, I got to be honest, I'll look for 504, 506. 502. Yeah, 504 to 506. What's that, 509? I know I have way too many levels up here. All right, anyway, yeah, 504, and then we'll worry about things after that as it pertains to the market, the overall market. That was some nice volume yesterday, too. I need to find some names. Let's go look. Because I've been trading, like, let me go back. Because I hate when I have to turn my composition book. So Microsoft happened yesterday. So we've had Goldman. We were watching Moderna, Goldman Sachs, DJT, Baba. Oh, Baba, that's right, Alibaba. So Baba. Now I like to watch. Oh, and Tesla. Let's do it. Let's go. We got plenty of good stuff here. All right. Sorry about that. let's start with Baba because this one's a little easier. Yesterday I brought this up, or the past couple days I brought it up yesterday. I've been watching it. I haven't brought it up until yesterday. Yesterday we were looking for a pullback. We got it. I did not trade this. Again, I was a little tired yesterday, and I didn't trade it. It happened, and it just never really triggered, is what I should say. So you'll notice how you have this whole resistance up here at 77 on Alibaba. Looks like now you did break below that level. I would like to, guys, I'm going to tell you, I want to try to get down to the low 70s. So if we can get a bounce back into like 75, take a short up at 75, and try to fill this gap, but get it like at like 73 to 72. Those would be the levels I would watch for. Let me go to this. Nope, it's going to bounce today, isn't it? These things trade weird, so I would be careful. There's relative strength, right? It's got some volume. Look at the volume. Right? Look at the volume. It's kind of decent. Kind of? So you're back below that 75.50 level. And then this thing just, can you guys see it? Like, doesn't it look weird? Like, this chart just looks like awful. It really does. It really does. It looks awful in my opinion. So yeah, I would watch Baba. I would watch that 75. The thing is it's actually setting up to where it may set up for a long today. Let me see. Damn. Yeah, if you get a quick pullback to like 74, you got to watch for 74 to hold and watch for a long. If you get down there, look for that long to happen over the next couple days to take you back up to 77. So this still may not be a play. I might just trade the indexes today. It's what it's looking like. Until I go through the breaking news and stuff like that. Watch 75, right? Watch 75. It continues to act as resistance. I just think, you know what? Here's what I'm going to do. I'm going to take pre-market and after hours off because it's kind of, it doesn't have much pre-market volume. So I could be getting a mixed signal there. Yeah, 75. Yeah, short-term bounce is what it's looking like. It's looking like a short-term bounce. Was that 74? Yeah, look for a bounce off of 74, and then if you can't get through 75, we could probably look for a short up there at 75. All right, 75. If we cannot get through it, I'm gonna look for a short. All right, that's my idea. Trade your plan your trade. Sorry, I know it's a little boring right now. I was just trying to get to that. Yeah, so we'll see. 75 is the level, though. 75 is what I'd be looking for on Alibaba to reject. To see if it can reject, right? The volume is not, it's not really there. This could be a low volume pullback and it holds like we're underneath it now. So if you guys have tickers, throw them in the chat and we'll cover them. Trying to think of the stuff that, because like a lot of it happened. It's Wednesday, a lot of it. Oh, Tesla. I want to give Nvidia, AMD, and SMCI a minute. I mean, I can go over to SMCI. I haven't been there yet. All right, Tesla. So Tesla, I started looking at the end of last week. I started looking at it last Thursday. I was kind of hoping to get a test of this. Wasn't 158, it was 154, right? Why does this look so weird? TSLA. That is Tesla. Yeah.
This hearing is
All right. So that's a rejection with the 100-day and that 200 level.
what happened, why it happened, and then we will look at what steps we need to be taking. Certainly cybersecurity, whether it's in healthcare or other sectors, is top of mind for
Okay.
Americans.
There's your 50-day still there.
Information online.
20-day moving average.
The committee is working on protecting American privacy rights online. We've also worked on lower cost, more transparent.
This is actually going to be yanked up a good amount today, depending on where we open up at. So it looks like if you get a bounce back to like 189, 189.50 to 190, I would look for a pullback. See if we can't test the bottom end of this range and try to get this 50-day. It may consolidate up here at like 188, which would help it to get this 50-day back up to like 180, 179, 178, 180, this whole area here. And that way you get Tesla to like kind of like meet it, right? And then you try to get your bounce. We'll see where it's at right now. But that's your support level is 180.50, 180, 180.50. That should be your support level. The thing is you can see we just gapped above that 50-day. And I was really trying to get 165. It might have been 164. I'm not sure. I forget what level it was. But it was like right... Yeah, it was right here. It was this level right here at 154. So I wasn't sure when I was when I started watching this last Thursday. I was looking at this as support and then this as resistance right there. And I should have noticed that it was holding with all those tails right there, that it was holding for the long. There are some other things that I'm not going to say right now that I was looking at that I was like, okay, we could get 154, that area, like 155, 154. We could get that support level. Along because of pre-market, there were a few different things there, but we never got it. I did mention the 158 could hold, and then you get the long. That happened. I never was able to take it. But yesterday was a nice call out, pullbacks into so these dotted lines are entries and exits depending on if it's like this small dotted line. These are entries. These are supposed to be entries, right? Pullback into 184.50, 185, long, right? Long to get to that 100-day moving average. Let's see here. So, all right. That's what I would look for. I would look for pullbacks in the 180. I think it's that simple. Oh, look, you are below this area now at 179.95, 180. You're below it right now. So, I think you got to look for the fit. No, you're above it. Yeah, it got back above it. Yeah, that's not a good look. So, if you end up back below this level, then you got to look for the bottom end of the range and look for a 50-day test. Tesla, I might not trade. It all depends. I just don't see... Yeah, that thing's getting taken back right now. Look at that. It's getting taken back right now. Look at that wick. Wow. So that pivot low, I guess you could say it's like almost like a double bottom from yesterday.
They help you print like a pro. So whether you want to impress your fans or grow your business, choose Uprinting when it has to be right the first time. Weekdays on CNBC, the Power Player.
So that'll be something to keep our eyes on. Yeah, I would look for a test of the 50-day. I wouldn't get overly crazy like it's going to pull back. But I'll tell you right now, a pullback back into 172.50, pull back right into this area would be a really nice long setup if you can get down here. You might get it. You might get it. You might get it today. like soon, like going into like, it all depends. Like all these charts, I hate to say it, guys, they don't look good. They don't look good. They really don't. Like as far as like entry points, entries and exits, they don't look that great. But if anybody has tickers, what's up, man? Good morning, Basic. That's what I would do, guys, is play the range. I would play the range on Tesla. I mean, there's nothing really else to do there. Because like the minute you break this 180, you got the 50-day waiting there for you too. And that prior support level at 175. So it's like every $5 increment. Like this is what I would look for. If you can't hold 180, then I'm looking for like it's just like 175, 174. Yeah. 175. You know what I mean? And along with the 50-day. So that's why I think you could see Tesla kind of consolidate between 185, 175, and just consolidate between there, and try to get this 20-day and get this 50-day moving average, this red box, this green box, start to like get it up here, have them both meet there, and that could give you a nice buy trigger in the next few days. If they can both meet and set up nicely at 180, you get a nice long there. And look, you know what? Tesla does like to, once you get these pullbacks here, you remember, they're still short from 260, right? That's some big money. They've made a lot of money. They went heavy on the short, right? Them as in institutions. This is a big short. So I would remember that, you know, just because something's oversold, overbought, you know, that's not necessarily, that doesn't mean that you couldn't get a big covering along with buying on top of it. This thing could still continue to trend. So that's why I'm just like, I'll let it show me what it wants to do. I'll let Tesla show me what she wants to do. I'm not really going to look at indicators and other things, but I will just watch the level and see. I'll see what the price action does, and that's what's most important. Apple has earnings coming up. Still just stuck in the range. Microsoft is weak. Meta. Let's look at Meta. So Meta's starting to pull back off the 100-day. You guys can see that. You have some support down here. A gap fill takes you back down to like 399, 400 area. So the Treasury's going to be auctioning off $125 billion for their quarterly refunding. $125 billion in securities in the quarterly refunding. Just so you guys know about that. Let me do this. Because the month is pretty much over. Let's see. Two other details here to highlight in this release. Treasury is going to be launching its debt. I wish I could go out like the month prior, because once the month ends, it kind of messes. It's going to be starting on May 29th, and they're going to be I'll just do the week, whatever. All right. Sorry that I've been lagging here a little bit. Still just trying to find me something. All right, so looks like Meta is trying to turn that 429.50 into resistance. Turned the 100-day into resistance yesterday. We were kind of sitting in no man's land. I would watch for these previous lows at like 420. This is why I also think that like I still think the market may like snuff some people into going low, and it breaks above 502 on the SPY. like Meta. Meta's, I gotta say it, it's just overdone. Meta's like, it's just overdone. But look, it's just wicking up here. So I would watch that level at 430. If you notice that it keeps bouncing into it, bounces, and it just can't break through that level, then I would look to get back down to 415. You don't really have anything stopping you at like 420, but 415 would be the level that I would look for. That was prior low. All right, there's prior low, and then you have the opening price from earnings, which is over here at like 420. Let's do this right here. I'm going to make this a line because I still think that this can break. All right. I haven't written anything down just yet. It sucks that Moderna and some of these other... Oh, we still have Roku. We were watching Roku. All right, so let me write this down. Let me get my pen. All right, Meta. Let me make sure that there's nothing in the way here. Nothing. We don't have anything. Yeah, I want to see if I can't take a short on Meta. The volume, take notice that the volume wasn't that great yesterday, and it hardly moved. So this also may not be a trade. May not be a trade. Just keep it on watch. And what's the ATR there? 139.60. So 440, 430. So it's about a $10 move, and that's usually about what Meta does. Is about $10 on an average day. 431, 445. So that's like, we'll call it $14, $15 there. But you can obviously see after earnings, it's going to slow up a little bit. 439, 428. We'll say $11. We'll still say $10. So we'll look for an average of $10. So when this thing pulls and goes like, whether it makes a high or it makes a low, we're going to know that when we enter, we're going to look from high to low roughly. We're looking for around $8 to $10 to be safe. All right. It's also Fed Day, so obviously the bigger move may come in the afternoon. Let's go over some of the news. So that's what I'm watching right now, and that's Meta. All right. I just started watching Meta yesterday. An entry point would be up there at this flat bottom. It's at like 430. Let me actually put up like a 5-minute chart here. Yeah, so you guys can see here this like 530. You even have resistance up there at like 535 also. I don't know why I have that there. That pivot low. Some of these charts are just bad looking.
Maybe it was regarded as a bit of an offset to the ECI report, which obviously was not so favorable.
So you can see it was holding 430. It breaks below it. It's trying to turn it into resistance. Kind of like DJT, which I'll cover. But I want to go over some of the news from today for everybody. I just have to get everything set up, even though I don't need this. It's at 414. And here's the other thing, right? How do we know that this is something we would want to play? So if you take where we are right now, okay, the expected move, right? Here's what I like to do. So we are... So we're pulling up into 430, right? We're pulling up into 430. And if we reject 430, where is that going to take us? It's going to take us right into 420, 419, which is that previous low. And opening price after earnings, let's see. What is that, 415? Let's look for 435. I wonder if we can get 435, even though it rejected already. I'm going to be patient and watch. But 435, I'll be looking to take it back down to this pre-market low. But no, 430, 420. Let's see here.
The thing that might happen is that you're getting some pushback from some of the members of the
425.
who are a little bit more worried and would like to see a little bit of
419. Yeah. That's what I'm going to look for is if we're up at 430 and we can't break it, I'm going to look for a pullback into 420. That's what it is. That's what I'm rolling with. I'm rolling with that. Bounce into 430. Unless we open up here, then I'll look for the rejection and I'll pull back down to 414, 415. We'll see. We went over Tesla, right? We're going to watch this 184 level. And if anybody sees anything that I don't see or wants to mention something, please throw it in the chat. So we're starting to turn that into support. I know I've already covered this a little bit. Yeah, 180 is a nice support level there. Should be. It's crazy you broke it pre-market and turned 178 into support there on Tesla. 178. I don't get it. I don't understand what's going on with 178 that makes it so. Like, I would much rather see it at 175. Like 175 looks a lot better.
Wealth management begins and ends with you. We believe the more personal the solution.
Okay. All right. Watch yesterday's close on Tesla, 184, 183.50. All right, 183.50, that area. Let me see here. Come on. Dude, like I'm clicking it and it's not doing anything. Let's go here. Let's go look at some of our breaking news. Let's refresh it and let's go through the markets. I skimmed through. I did skim through some of the whatchamacallit plays. Oh, PayPal. We could look at PayPal. That's a good idea. I did look through some of the small caps. All right, so we got a list of names, guys. So Amazon rose 1.7%. The e-commerce giant. Come on.
In our previous home, we had wood. I never liked it. I wanted a sustainable option, and that made TimberTech the obvious choice for me. I love the indoor, outdoor.
Amazon rose 1.7%. The e-commerce tech giant first quarter earnings beat estimates. However, gains were limited as its revenue forecast disappointed. So it's the same thing as, you know, every other company, right? Disappointment after disappointment after disappointment. So let's go look at Amazon and Google. I forget. Let's go look at those.
Global distributors now include IDEX and Fuji. $23 million in licensing and milestone.
AMCN. Still holding up okay. It's at the 50-day moving average. That was a big ascending wedge that it just was saying. It was just screaming pullback off of that wedge there. These charts are so ugly. Like, they really are. They really are. I mean, you got to look for a pullback to 160. Not sure if it's going to do it today or not. But it just tried to break out the new highs and couldn't. I think you need a pullback to 160 on Tesla. Let me go turn on this AC real quick, guys. Or not the AC, but let me go shut the window. And let me go pour myself a coffee real quick. Amazon, you got to look for 180. Look for a rejection up there at 180.
Paychecks raises its dividend from 89 cents to 98 cents. Alpha Yankee X-ray PAYX.
I'm looking for a bounce into 180.
From companies connected to Israel, roughly 100 people were arrested. New York Mayor Eric Adams spoke to Morning Joe in the last hour.
Oh my gosh, come on. Why can't I write with my gel pen? Okay, baby. Let me go feed my cat real quick. Amazon 180 rejection. I'll do some more work on that as soon as I'm done with her. You have the 50-day. Oh, you're up above it. So you have the 20-day up there. Look for 180, though, and see if you reject and see what you do here at 178 for the, with that 50-day that's right there. I'm coming, baby. I'm coming, Turkey.
Taken over in the night before this coming weeks after
I'm coming. You have food. Don't act like you're starving. I fed you already. And you still have food in your boat.
Arrested. New York Mayor Eric Adams spoke to Morning Joe
I'm coming.
in the last hour.
Yeah, 181.
We want the schools across the city to be clear.
Can you guys hear that?
The property of the schools are for the students.
I'm coming,
more
bro.
than just Columbia. It's more than what we saw at City College. This needs to be a clarion call for our country. These are our children.
I'm coming,
and we
Abby.
can't allow them to be radicalized like children are being radicalized across the globe.
Earlier this week, a Jewish
They're
student filed a
being
class action lawsuit
radicalized.
against the
This
school
guy's
for
saying
allegedly
they're being
failing to provide
radicalized.
a
Holy
safe
shit.
learning environment. It's a fascinating lawsuit that could have much larger implications. Joining us right now is Jay Edelson, the lawyer for that student. We should mention we've also reached out to the law firm representing Columbia and have not yet heard back, but it's nice to see you this morning. This is effectively a breach of contract lawsuit, which is to say that students effectively pay to go to school, and you're saying they can't.
They can't. Yeah, and I think I'm a lawyer. We always have to say allegedly, not in this case. They absolutely breached their contract. I don't even think Columbia is arguing otherwise. We've been talking to Columbia. We already did a court hearing yesterday, and they've agreed that they cannot maintain a safe environment. You've got kids who work their whole lives to get into one of the most prestigious
I'm going to take
universities
this
in
one
the world.
away. Even though that's
and they
where
can't
the
go to
earnings
class, and they're being
was,
forced off
I'm going to take that
because
away.
they're Jewish.
Gotta look.
It's insane. This is America.
This is why I got to do
that
the
should not be
analysis.
happening.
And so you brought this case.
Yes.
You've gotten phone calls from all over the country. I imagine this is just
Dude,
going to
if
be
I could
potentially
only
the first
just
of
get
many
this thing
lawsuits
to
similar
just
to
stop
this.
being ridiculous.
Well, we'll see. So, it's really interesting. You see universities dealing with it different ways, and I appreciate the mayor's comments. I think he's right. What we're going to see as this case develops and the facts come out, it's not just student protesters. It's really outside agitators, people who have much different agendas, who are not, what they're saying to the public is different than what they actually believe. So when you hear them talk and they say, we are calling for terrorist attacks on Jews, we're calling for terrorist attacks on America, that's not really coming from the students. That's coming from the outside forces. And that's what we're going to develop, and I think that's true in other universities
When you say
as well.
develop, you're going to develop in discovery.
Yeah, guys.
Yeah.
I'm
As
watching
this lawsuit
180.
progresses.
This case is moving quickly. We have asked for
I'm watching
immediate
180.
injunctive relief. The court has been terrific.
What is
so
injunctive
far.
See if you get a
relief look like
rejection
in this
here at 180.
case?
Injunctive
And then
relief.
I would watch for to see if the 50-day moving average, if the 50-day moving average can't hold. Look, it's running up through there. What's the SPY doing? Is the SPY running? Is the SPY getting through? This is what I'm talking about. Is the SPY? Yeah, SPY's trying to make some progress here. That's a nice hold of this area. You guys see this little support area right there?
What you can't do, though, is incite violence and actually
Right there.
violence, and that's what we're seeing. We're seeing Jewish kids are being physically.
I'm going to have every freaking level, and I'm going to get pissed that I have every level. So there's a SPY going. So Q.
Jews in America. That's not free speech.
When did Columbia's administration go wrong? What was their first misstep? How have they not corrected?
Yep, Amazon running and gunning to that 100-day, 20-day moving average. I might come back and delete some of this, some of these levels, but watch 182.
They start suspending kids.
23 cents in earnings. That does not compare with the 68 cents
Yeah, watch 182
estimate for SDI
as well. Watch 182. I'll be right back.
and they're being told from leaders, especially at Columbia, that that the goal is to actually kill Jews in America.
I'll be 2 seconds.
That's not free speech.
When did Columbia's administration go wrong? What was their first misstep? How have they not corrected since then?
Great question. So let's compare it to other schools like University of Florida. University of Florida, the second there started to be violent protests and illegality, they start suspending kids. Columbia has equivocated. Every 2 days, they've got a different view. It's, you know, here's our ultimatum, and then the ultimatum happens, and then they go backwards. So even now, we appreciate they finally called the police in, which they needed to do. They should have done it weeks ago. But the question is, are they going to hold strong, or are they going to give in to demands that they're going to give amnesty to some of these kids who are calling for violence on fellow students? So that's where they went wrong. You got to be strong, decisive, and clear. Otherwise, you're just really furthering this.
You think they are going to call for amnesty? Is that the expectation you have, that they will say all these kids who they've suspended and expelled, forget it, you're allowed to come back in?
That's absolutely what the student groups are going to be asking for. And we saw Barnard College lifted all the suspensions right away. It sends the worst message. If we're very clear to the students on our campuses nationwide, you're allowed to. We want you to engage in free speech. You cannot threaten people. You cannot push people. You cannot attack people. If you do, you don't get to be at one of the best universities in the world.
Do you believe that Columbia's president should remain Columbia's president?
Yes. Yeah, we're not calling for the Columbia's president to resign. What we're asking is that Columbia's president does the right thing now.
What about the professors who are on the payroll of Columbia that have been engaged with these students as part of these protests?
Well, it depends. If they're engaged in free speech, then that's fine. But what we're hearing already is that a lot of the professors are engaged in potentially retaliatory actions. You've got a lot of students that are worried that their grades are going to suffer. We heard from one person who was getting an A in a class who somehow got a 0 on a test. That person happened to be Jewish. Those things have no part of the...
What do you think is going on here? Meaning, really? I mean, I think, look, I'm Jewish.
Yes.
What do you think is going on here? Where do you think that this anti-Semitism has it been here the whole time? Has it been under the surface? Is it these agitators have taken over the campus? Is it actually the students themselves? What do you think is really happening?
So, I mean, I
know it's a big question.
That might be too big a question for me. My answer is that I'm surprised at the amount of anti-Semitism that's been in America. It caught me off guard. And you know, the second you give people an excuse to like really explain what their feelings are, I was at Columbia the other day, and the amount of venom they had to Jewish people was really scary. Not all the protesters. A lot of protesters are totally fine. But it's not just anti-Semitism. It's an anti-American sentiment as well.
It's been around, and it's been in mainstream media. Many people guilty of seeing people kneel at the anthem and wear pigs on their socks, and that all was fine until it got to the point where, I mean, this is serious now. And you can have a whole faction of the House of Representatives on the Democratic side that's called a squad that panders in exactly what you're talking about right now. And it's been out in the open, and they've been defended by Nancy Pelosi when she was Speaker. And these things have consequences when it goes unchecked, and this is where we ended up. And they don't want to hear that, and they're going to bring up Charlottesville and say it's 100 skinheads.
Sorry, guys.
That started this. It's not. It's tens of thousands on the left, on the progressive side of things, that are to blame for this.
Well, you're speaking of someone on the left.
I know. And now,
I agree with you. I would go further. It's not that AOC and the squad are pandering. They're leading.
That's what I mean.
Yes.
But we were fine with it, and so was corporate America. They were part and parcel.
Jay, let me ask you this, though. There are only 3 weeks left of school here.
Yep.
If you are not successful in terms of getting the entire campus back to campus effectively, which does seem hard given the fact that they're going to have police there till May 17th. I don't know what's going to happen with this hybrid program in terms of having people on campus, off campus.
I wonder if we can get up to 182, hold the 20-day moving average on Amazon, and then rally to like 184 or so. I'm really curious if we're able to do that. Let me actually, and look, we still have a major resistance level that we have not tested up here. Let me pay my phone bill real quick. Give me one second.
To be able to go to school.
Yeah, so
what kind of damages could be on top of the
sorry,
tuition?
they've been. I just
would you
got
be
a
looking
message
for tuition
just a
reimbursement
second ago.
plus punitive damage? I mean, how does that work?
Well, let's think about this.
Yo,
You're a parent, you send your kid to Columbia, and they've worked their whole lives for it. You're spending a huge amount of money for the semester. This isn't COVID where they were just, off campus with everybody else. They're under a hostile environment where they're under attack and they're scared to go to the university. How much would you pay for that?
Right.
Send your kids there? Zero. So there's certainly damages in this case. We don't want that to be the focus. The focus, at least short term, is that we want to restore some sort of adult voices to this. And if we do turn this into a damage case, it's going to remain pro bono.
Do you think the University of Florida historically will be viewed positively, or the way that it was handled down there? Because in this case, I think you're going to hear police brutality. If that tack had been taken with some of these previous demonstrations, not this one, not what's happening now, but if you were as heavy-handed as University of Florida was, there would have been pushback. Pick your demonstration over the last 5-10 years.
It depends on the demonstration, right? If it's right wing, then people say that's terrific. If it's left wing, then for some reason there's an exception. Right. The second a protest turns violent and ugly, which is what's happened, the second you've got protesters who are calling for terrorist attacks on America. The idea that anybody would tolerate that, let alone negotiate with them, which is what you've got schools like Northwestern doing. What are your lists of demands? We're happy to accede to them. Right. All that does is it leads to more and more of the same.
Jay, I want to thank you for coming in. Please keep us updated on your progress with the lawsuit.
Thank you so much.
Thank you.
When we come back, Amazon in focus. We will get into first quarter earnings from the e-commerce giant. And a reminder for you, this Saturday is the Berkshire Hathaway annual meeting. Warren Buffett will take the stage in Omaha to answer shareholder questions for 5 hours. And you can see it all right here on CNBC.
All right, let's get going because it's 8:55. I feel like I don't have much here. Just some of these setups just don't look that great. Like Tesla looks okay. Got a nice rejection up there. Maybe you can look for a pullback off of 185, 184. And try to get down to the 50-day. But I just don't know if you're going to get the continuation. That's the thing. Let's see here. Do you guys have any tickers? If you could, throw them in the chat. Any questions or anything? Let me make sure everything is good here. Yeah, I would watch this 155, or I'm sorry. I'd watch this 185 level. Yeah, 185, 184. SMC, Starbucks, Estee Lauder. Starbucks, Pinterest, AMD, Yum Brands. This is something I'm also watching. Look at DJT, man. This thing just has gone. This is gone with the wind. All right, so I got to start deleting some stuff here. Let's just delete everything. I probably won't even trade this anyway. But look, this was the idea. It got back to the top of the range. I never traded it, but I was watching this level here at 40. And I said, guys, if we break through 40, watch the 50-day. You saw the rejection Friday. You closed just below it. You guys can see there. You closed just below that 50-day moving average right there. You had a long wick, and it's just pressured Monday. Boom. That was another trade idea we gave out and said, look, hey, you end up breaking through 45. You got to look for 50 for the top of that range there. And that was the case. That's exactly what happened. Just a massive uptrend here. Not sure outside of here where it's going to go. 55 is like one of the last areas I would look at. It kind of reminds me of GameStop a little bit. So, wow, you're already at 55. You're kidding me. All right, guys, look and see if today you get a breakout day on DJT. Look for a possible breakout day on DJT. This thing is just wild. So pullbacks, I think you got to look for a pullback to $50. It just doesn't seem like it wants to pull back. Every dip is being bought for anybody that didn't take profit. It looks like you're getting another short squeeze on top of a short squeeze, right? Like this thing just is feeding upon itself. So I would not be surprised to see 60 get hit today. I wouldn't be surprised at all. All right. Let's go check in on Bitcoin and stuff really quickly. Dude, what is going on? I know, like, there is a lot going on here. All right, Bitcoin's bouncing.
TGTX,
10-year. Dixie pulling back. That's helping the market a little bit. Watch for support right here. See if that puts you right, like with the SPY, the rejection point on the SPY and the Qs. And look, kinda. Not really, but kinda. All right. SQ. So there was just some news on SQ here. Look at SQ getting hammered, guys, to the downside.
Yeah, look, some of it was because there's a belief that really this happened in the last few hours yesterday. That if
so block. Same old bullshit from Morgan Stanley.
or decrease in rates, it puts him in a horrible bind. What is he going to say? Now, this was literally the narrative I heard yesterday as interest rates ticked up. And
Nobody's reporting it yet.
people are going to try to trap the chairman.
Nobody's reported it yet.
No, he's not. Although you're not necessarily in favor of the press conferences, as I recall.
No, because these people are teenagers. I mean, I ran a press conference. I've run press conferences and I've been in press conferences, and I am not impressed with this Hollywood Squares group that they put together.
Let's go here. See if anybody's reported it on Twitter yet. See if people know about this yet. Prosecutors are examining financial transactions at Block, owner of Cash App. Prosecutors. That is kind of funny. They're spreading fraud the day before earnings. It is funny.
Consumer confidence was very bad, but Chicago PMI was very bad. Instead, we had this index of suddenly people saying it's the be all and end all, which is this.
I don't have a plan. Shit. I do not have a plan today, guys. Everybody got a plan until they punched in the mouth. I guess I'll take it to the daily. Here, let me, looks like we're headed there for 66. Let me just throw this right here. I'm gonna hurry up and go over like even just FANG names or something, to have something on my watch list. Okay, so we're down here. All right, so it's trying to test the 200-day moving average. All right, I see what's going on here. Boom, $70. Run it, gun it, $70. Remove, remove, remove. I hate having a whole bunch of shit on my charts. Okay, so that's the top end is 80. Bottom end of the trend line is 62. So you guys can see here, you have a nice support level here at $62. $60. Oh my gosh.
Chose to resupply Israel during the Yom Kippur War and saved Israel from destruction.
Yep, in 1973. All right, can we get to earnings now? Want to talk Amazon, talk AMD, talk, I don't even know, Pfizer, CVS, J&J.
What do you guys think? 60? We'll just say 59.17ish, something like that. All right. We have the 200-day moving average anyway, right there. I would watch that for Square if you can get a bounce. It's a day before earnings, so I'm not going to trade that. I'm not going to trade it. But we can keep an eye on it. Premium is going to be hell. You know, I think you're going to be fighting Delta all day. So unless you want to sell some spreads on it, maybe that's the best route to take there. But other than that, I don't think I'll be trading Square because they have earnings tomorrow. So nice support level right there at 65. You break 65, it's on. How about that? Meet me out, cash me outside. Break 65, it's on. All right, $65. I would watch that level. If you break it, you break the 200-day, you're headed right for 60. All right, that is Square. Prosecutors are checking them out. And their Square is probably saying, I'm not leaving. All right, Microsoft. We already talked about this earlier. Starting to get a bounce. I would like to see a bounce back. I would like to see it. You know, I'm not making anybody do anything they don't want to do. But we need a bounce off of 390. Microsoft needs a bounce. Nice support level there. Shit.
This would be an enormous company, as we pointed out many times in its own right, with an incredible growth rate. What about CapEx? What do we make of the spend there? And has anybody done the math yet, just adding up between Meta, Alphabet, Amazon, and Microsoft, what they're going to be spending on CapEx?
Because they're spending so much internally.
Right.
And so it's difficult to get a number, although they will tell you that they've gotten right with Jensen.
This sucks. This chart blows. Excuse my language, but that chart blows. I don't want nothing to do with that. All right, we said Meta. We were looking for rejection to like 430, possibly get down to like 420, 414 or so. It might take a little time to get that.
Cloud and then artificial intelligence, and that has restarted. There's been a normalization of companies going to
Yep, I'm looking for a rejection of this level right there at 430, guys. I'm starting to think that's my trade. You rejected the 100-day. This is a nice level of support and resistance, or now trying to make it resistance.
We're at $100 billion plus annualized revenue run rate. Yet 85% or more of the global IT spend remains on premises.
Now, don't be surprised if Meta like wicks up a little bit here to like 432, 433, which I could actually put. I'll show you guys what I'm talking about. Like this level right there. That level right there. See what I'm saying? 432.50. So we have Amazon 180 rejection. We have Meta 430, 432 rejection. So we're looking short. All right, and where are my targets? That's the other part to this. Where are the targets? Where are we going? Well, we gave you the ATR already, so you got to break pre-market lows, and we're looking for 420 to 414. So 430, 432, Meta rejection, target. We're targeting 420, 420, 415. Let me go back to Amazon real quick. All right, Amazon.
The bulls told me it's a bottleneck. It's not a demand problem. True? There's not even a bottleneck.
I don't need this up there, do I?
The issue is, why should she say this 5-6?
We're not going to get there in one day, are we? 186. That was some mean volume yesterday. All right, so we're getting above that level, y'all. We're up there at 182 right now. That was a 182. So we're at 182 on Amazon. Come on. We got 10 minutes, guys. Just under 10. Wait, no. 9:10. Yeah, 9:10. Sorry, it's 9:10. We got 20 minutes. All right, so you guys can see here a nice rejection point at nice rejection here at 184. I got to be honest, I may take a long here at 180. So I want to have both in my arsenal. I just think that's a nice recovery there. I think longer term trend would be to the upside. Oh, heck yeah. We got to hold this. We don't really have to hold it right now, but oh, shit. Man, this thing is just I don't want to get stuck inside of like a consolidation here, but I like 179.95, 180 for a hold here and a long off of 180 on Amazon. So if we can hold 180, I will try to take a long off of 180. I need 180 though. I'm telling you right now, I need 180. I need this thing to pull back, pullbacks into 180. I'm a buyer. Pullbacks into 180, I'm a buyer. Amazon 180. I know we put 180 rejection, but we're going to take that away because we're above it.
That one's going for
180 long and see if we can't break. So we'll target 182, 183, 184. No, 182 and 184. Yeah. 183 and 184. I need my $3 off that jump, bro. I need that. Wait. Come on, gang. Come on, gang. All right, yeah. So 182 is resistance and support. Shit, we might have to do a whole 182 and a 180 hold. Yeah, I need a pullback to 180. I need that pullback, gang. There's a couple different things going on here, but the bigger picture would be the trade to 185. Like, I could actually move this. Well, see, look. It gets above it, breaks. Look, gets above it here. Support. Support at 185. And that's why I'm thinking 185. It rallies. But then this one here pulls back right down to like 184.25. Pretty much 184. Bounces. But then it gaps down to 182. And where does it go? 186. Oh my God. There's like every dollar is a freaking level. If I looked at it from here, sell-off, the sell-off stops at 185. Rallies, 188. Pulls back to where? 182. Bounces to where? 184.70. Pretty much 185. So the resistance level to the left of me is at 184.50 to 185. So what I'm going to do is I'll do one of these. I'll do one of these. I'll do the old trading view. Right there. We could look at GLD for a possible long. Alright, that's our target up there. And we have all of the moving averages, right?
Coming up at
We do.
9:45, the S&P U.S. manufacturing PMI.
That 20 day is going to be yanked down, yo.
At 10 a.m., construction spending forecast, the manufacturing PMI for April, and Jolts job openings.
I'd like to get a pullback to 180 long to 185. I'd like to try to get that. 184, like, you know, up there. So, all right. Not sure if it's going to happen, but we'll see. I'm going to take my time. If I got to trade the overall indexes, I got to trade the overall indexes. I don't really have much more than that. We'll look at semiconductors. If 182 breaks, I will look for a rejection up there at 185. I'll just let it go, and I'll try to get a whatchamacallit. And look, yesterday's price was pricing in $13 on Amazon. That's the other part that I forgot about this. It had earnings yesterday. It was pricing in $13. Is this where it closed yesterday? 175, and we're at 185 or 183, 175. Wow. Amazon was pricing in $13. That's crazy. You're talking 190 damn near. You're talking 180, 75, 185, 6, 7, 8. Yeah, 188. So, yeah, maybe we can get up here, guys. Let's see if that happens. I've been saying this for a while now. To look and see what is being priced in versus what it does. And if it's above or below that number, or if it hasn't put the move in, and see if it does put it in. It did pulled all the way to 165. So right now, we're at, this is how I would do this. I would say, all right, Amazon is at 180, 182. It's pricing in $13. And it closed yesterday at 175. I would say 188, 186 is probably where it's headed to. That's pretty much the move that it's pricing in, guys and girls. Let's just see if it does it. See if it pulls back to the 20-day, the 20-day holds, and you get that bounce. And just look to the left. Look at pre-market highs yesterday. Where is it? 186. Isn't that funny? Isn't that funny? Looks like we might revisit that. So if we get any type of pullback, I'll look to try and take it. Take your time today. I really don't see much. Like AMD struggling here. I think, you know, I think you need more. SMCI, I think got hurt yesterday. No, it recovered as well. So look for semiconductors to bounce today. 902 on SMCI.
But there's no question that the occasional customer is cutting back on visits to us. We have not been able to communicate to them the value.
17 SMCI.
So what we are doing about it is it's not business as usual, but there's an
950, 940, 950, 950. AMD, TSM.
what we're doing for that.
TSM. That's too slow for me.
What you will see is you will see value that they haven't seen because they've not been part of that environment. There are drops that are going to happen every Monday. There are bundles that we're putting in place that are attractive for them. For example, a beverage.
It's a nice double bottom there, up at 190. Maybe Tesla tries to retest 190 again. Maybe it tries to retest 190. But you do have a mean rejection here at 184, 183.50. Let me get all of my stuff straight real quick. I'll keep Bobble on my list too, just to see the volume and stuff that comes in. Okay, 3 minute.
It's at the tail of the loyalty program, particularly those that are, in the 90-day active, as we call it. The folks that didn't come back, they again are very similar to the occasional customers. We have an action plan in place.
Sorry guys, just give me 1 second, and we're going to keep it. We're going to get it. All right. And I may have to go to like Trading View.
Right, that's necessary. But what's more important, I think, is the late quarter decline. Now, let me, before I turn it over to my colleagues, you said it's not business as usual, and I want to make a point here, sir. You are still expanding.
So look, yesterday, by the way, the power. I don't know what happened, if there was an accident or what. The power shut off. So if something happens randomly. I don't know if they're working on the power lines or what is going on. I'll be right back on. If you guys, just to give you guys a heads up right now. So these dotted lines were from yesterday. These were some of the targets we were looking for the past couple days. It looks like you broke this support level that you opened up at 185. We'll look for that to be a possible rejection. And I will fix these also.
I regard them as being seminal companies that are just as good when it comes to what McDonald's says you are losing share. I can't go against those three companies. They are too good and too honest and too big for me to dismiss.
Right. This guy's a goofball. Tell him, Kramer. Tell him, Kramer.
Doubled. Our sales in Japan expanded double digits. Our business outside of Malaysia and Indonesia in Asia Pacific showed growth.
Kramer got on his ass.
If you look at the U.S. business and look at the fundamentals of the U.S. business, we are holding share in the U.S. We are still the largest player in out-of-home coffee.
180 long.
If you look at some of the metrics that we
Dunkin'
have...
Donuts, Tim Horton said you are not holding share, sir. I regard them as being seminal companies that are just as good when it comes to what McDonald's says you are losing share. I can't go against those three companies. They are too good and too honest and too big for me to dismiss.
There's our 180.50.
We are the leading category player in...
All right, guys. Good luck today. I hope everyone has a great day. Let's get it. Let's get it. All right, let's get it. So we have Tesla. All right, Amazon. Get a little bit of a pullback there. Look for 180 to hold. See if we can get a pullback into 180. Okay, 922 Coinbase. Coinbase is still weak. That's still a $10 move. If you can get a pop anywhere, like even if you can just get a pop and go short on Coinbase, if
endlessly here, as you well know, and it's far from clear that there really is a deteriorating economic outlook. So, what is it you're seeing that perhaps many others are not?
if Coinbase can pop and get a rejection up there at 205 short, that could be really nice. You get that bounce back into 206, 205. That's a hell of a nice short back into 190. That one you might need to give a couple days as well. That's what I would look for out of Coinbase. $259 might actually be your rejection. My fault. My fault. My fault, gang. Look at this. Boop. Look at this. And now you're rejecting it. Or we're trying to. I thought you were. 23.
A lot of what you're saying, Locksman, reminds me of what the McDonald's CEO said yesterday, and I'll quote him. He says, in some markets, our relative superiority on affordability has declined. Is that a point of view with which you can empathize?
I can empathize that with the occasional customers. The loyal customers still come in as frequently as they do. The most loyal ones.
So that's going to involve...
I wonder if my guy has a drug problem. He's over here sniffing and stuff like crazy.
product or vice versa?
I think it's a combination of how we communicate and deliver value. It is about product, but it's also about speed of service. You know, we have people coming into our stores today or on mobile auto pay who don't fulfill their transaction.
Oh my gosh. Come on, man.
The team has done a phenomenal job in the U.S. in improving speed of service.
I'm not watching Coinbase. The heck with it. Maybe I will watch it actually. So what I was trying to do right there was get this. You guys can see a possible rejection up here, and then you know that 190 level. I don't know.
I think, David, the speed of service improvements we've
202.58.
the opportunities that we have with the new processes that we're rolling out suggest to us that we can make that even better. And the entire leadership team is focused on it and ensuring that we make improvements as we go in order to increase that speed of service even more.
Well, Luxman, the speed of service is real. That's a fanciful statement. It's the exact opposite of what is happening. And I don't know how you can say it on our air.
That's funny. Yo, they're going off on this dude, yo.
Speed of service quarter over quarter. If you look at how
They're going off, man.
what we are finding is
DJT. Reddit, still underneath of there. ARM. I have not looked at ARM in quite some time.
People are using the mobile app and they are not able to get what they want because they can't. It's too slow. I think your throughput is awful, sir. And I do not understand how you can say service is good and also say at the same time that throughput is awful.
So, Jim, throughput has improved. There are opportunities for us to improve it even further. And that's what the team is focused on.
Well, you can say that, and you may even believe it.
Bro, he is not. That's not a. Yo, Jim is going ham right now on my guy, bro. He's a CEO of a company that this dude could just get fired.
Peak.
But you said
Listen.
that people are using the mobile app and they are not able to get what they want because they can't. It's too slow. I think your throughput is awful, sir, and I do not understand how you can say service is good and also say at the same time that throughput is awful.
So, Jim, throughput has improved. There are opportunities for us to improve it even further, and that's what the team is focused on.
Well, you can say that, and you
Well,
may
you
even
can say
believe
that.
it.
Yo, my boy going ham, cut.
Hey, finally, Luxman, Yum Brands is out today, and they argue that the impact from the Middle East conflict might be improving in the most affected markets. Can you go along with that?
I think that we are seeing some improvement in certain markets for sure, but this will take time to normalize.
Look for Arm to get back down to 95. I might try and get a short
but
there.
I am very concerned because this is a great institution, and I do want to hear something.
I'm looking for an entry. I know we got a minute left.
This stock through the next quarter, even as you said that
I'm going to look for that
bad.
100,
Do I have
that 100-day
any reason to
rejection,
own
100
this
level.
stock in the
See if we
next
can't get
quarter?
back down to 95.
Jim, first of all,
100
we
rejection.
are completely focused
95
on
target.
a plan
It's
that's
still a good
not
stock
business
in
as
my
usual
opinion.
to reverse some of the trends that we have
Shit,
seen.
I knew I was going to do this to myself.
And we have demand that we can meet. We have products in the pipeline that are strong. And
I'm
on
not
top
even
of that, what
watching
we have
Coinbase.
is we have a plan
have it
to
up.
actively
3 minute,
communicate
3
value
minute, 3
to
minute.
those customers who don't see it.
3
When they
minute.
see it, they choose to participate in our
101
plan.
actually
So
might be a nice
that's the
rejection.
near-term plan.
I'll let you guys
Further,
know what I do if I do take
we
that.
have an opportunity across day parts in terms of occasions, including
All right,
what we're
good
doing
luck today,
overtime.
everybody.
It's a business we're building, and
I'll let you
there's
guys
real
know what I
opportunity over
do.
the course of the next 5 years to build a $2
All
billion
that fun
leg
stuff
there.
if you even want to know.
Furthermore, I think what you've seen
take your
is
time
real
today.
progress as a business. If you look,
Let's see if we can't Tesla up there at 184, 185. Let's see what happens. Or a pullback back into 180. All right. Take your time. Let me go to BABA over here. BABA. Look at the 75 rejection rate happening right now on BABA. Possibly happening right now. That could be a really nice rejection point on BABA. Oh my god, I'm sorry guys. Look for that 74. If you get that 75 rejection on BABA. Alright, Amazon pulling back. Trying to look, Amazon holding the 20-day moving average. Amazon's trying to hold it. Trying, not doing a good job. We'll look at fucking Tesla gone. All right, there we go. Come on, let's go. Hurry, 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 hurry. Come on, man.
Dow Jones Industrial Average up 17.94 after the open. Nasdaq down 10.15. S&P 5.98. BACA IMAC Holdings said on May 1st enters settlement and release agreement with Theralink. That's Bravo Alpha Charlie Kilo, BACA.
Just give me 1 second, guys. I'm sorry. Just give me 1 second. All right, so Tesla bouncing right up into yesterday's low. That's a nice wick there off of Tesla's, whatchamacallit. I have, let me throw up the live chat real quick. I'm going to hold off on Tesla real quick to see if we can get a bounce back to like 190. I know I'm changing up the game plan a little bit, but I want to see something here. See if we can't start making some progress. If we get back down to 180 to hold 180. I want to try to hold 180, guys.
Linux, for example, that they felt was going to be additive to the business. So far, the strategy not going that well. And to your point, yeah, in many cities where unfortunately things are behind lock and key, your CVS as well on the retail side, you're much easier just defaulting to Amazon, knowing you're going to get it same day or the next day.
Front of store comps were down too.
It's a pincer move between the people who come in the shrinkage and Andy Jassy, who's decided he wants this business by how quickly he can get the product to you. One more reason why Amazon deserves to be much higher, because there is not a business I know that they have gone into and not destroyed. And by the way, they're coming after grocery stores big time with this new small form.
Watch 183.30. All right, Amazon pulling back, did not hold. All right, so 178, 178, 188. Let's see here. I wouldn't mind. Let's see, what's the volume like here? Bro, come on. All right, GLD. Nice gap up on GLD. I wonder if we see a little bit of outperformance here and a rally to 214 on GLD. Nice pullback, hold, rally, boom, bing, bang, boom. AMD. Nice bounce there on AMD. ARM. Pulling back. I haven't been watching ARM that much, so. Yeah, I think you could see ARM back down at 95. That's a nice rejection up there. You reject. See if you continue to reject 100-day. Look for ARM to get back down to 95. Man, it's already so overdone, though. I really think so. I really think she's overdone.
Marriott miss, MasterCard not really guiding much higher for the year.
Well, look, I think MasterCard's doing okay. I see that, and I raised it with Steve Squared yesterday, telling me at the annual meeting that I cannot believe how well American Express is doing. That may be a winner take all, loser take none suit. That's how well he's doing with Gen X, with millennials. So I think American Express is saying good things. Bank of America is saying good things in terms of.
I haven't watched the banks in a little while. No, I haven't. Well, I mean, ever since Goldman Sachs went to a new high, I kind of like fell off of that a little bit. Let's look at JP Morgan real quick, see what's going on in the overall markets. Banks look like they're pulling back. UNH with a nice little bounce. Roku. Roku, Shop. Shop's been volatile lately. Yesterday was a nut of a day. A nut ass day for Shopify. Screamed to the upside and then just fell. Square, SQ. See if you know, Square has a level here at $70. You got to watch for a double bottom at like 70. Looks like it's trying to reject up there and sell off again. I won't be playing this because they do have earnings tomorrow. Yeah, look at that prior support and resistance level there for Square. I would look for a short up here at 70 bucks on Square. See if you get a nice short up there. You got to watch and be careful that the premiums aren't too much and you're not paying way too much money for these. which I still think you are. It's a $66 stock, and the frickin' options are $3. So I would lay off of it. But if you can short the stock itself, I would look to try and take it back down to $66, $65. All right, that's square. Trying to get down to the 200-day moving average. Take profits in front of 66.50, which is pre-market lows. Nice resistance and support that it broke, and it just bounced into that area, right? You can see it bounces into that area. I would have a stop loss up above there, but I still think, you'll probably get a bounce and then a rejection, but I don't think you get far too up above that $70 level, 70.10, 70.10 or so. You can see it pulling back here. Maybe you get another test of it, but I wouldn't trade it. I wouldn't be looking at it. Amazon, let's look at Microsoft. So Amazon held the 50-day. Look at Microsoft, some nice volume here. All right, it's got some nice volume, but that doesn't mean much. It's got weakness deep down inside, underneath of it. It's weak. All right, it's weak. $398.
Coming up at 9:45, the S&P Global U.S. Manufacturing PMI for April 49.
Sorry for moving that around a lot. Double top there. 397, 398-ish. Let's see. It's just not a good looking chart there at all. It's just not good looking. Look for 395.50. Look for this trade right here. Flat top resistance. Get a little rally up into there. Watch the overall markets. Okay, right there. 395. Let's look at Tesla. Where's Tesla? Where do I have Tesla? That's Microsoft. Let's look at Tesla. Look, ARM rejecting. We said look for a pullback on ARM. See if you can't take it back down to 95. You have to watch the pre-market lows, though, here at 98. Oh, and I forgot about those. Dang it. You got to watch MSO. There's big news with weed names right now. Shoot. Fuck. Sorry for the curse words. Let me make sure that the 100-day is still there. Nope, the 100-day is not there anymore. Yeah, I would look for pullbacks into 94, 91, 95. I look for pullbacks into 95 on the ARM. You could try to get that. Look at the volume so far. It's... Volume's really low.
And again, you're seeing a positive reaction in the overall stock market for that.
90. Why do I have indigestion? Damn it. Yeah, it looks like it's going to pop here. Yeah, ARM could start to get a nice bounce. Keep your eye on semiconductors. Let's go look at MSOS and some of those weed names. Okay, so pulling back here. They've been running for a little while now. Pullbacks. Man, I still think you need a further pullback. These are your levels, all right? These will be your levels that I would look for. You have 1050. All right.
Yeah, your line Palisade Bio getting
I would use 10. Let me make sure I'm looking at this correctly.
45%.
Yeah, look at $10. Look, and that's right where it opened up at too, right there at $10, 10.11. I mean,
Candidate Alling 2101 demonstrates potent anti-inflammatory effects in ex vivo study of whole blood samples.
Okay.
Pro-inflammatory.
You have this double top, triple top here on MSOS on the daily. Yeah, 1025. Is that what it is? See where it stops at? 1025. See if it stops like right here. Right there at yesterday's opening price. That's why it opened up there. You guys probably can't see it because it's too small. I need to get rid of some of this stuff here. I'll just leave it. This doesn't... Does this even really mean anything? Like, can you get... Like, I don't see how this helps bring in... I mean, I don't know. I haven't looked, so I can't see... I can't say that I can't see how it helps, blah, 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 because I haven't even looked into it. To get institutional money, right? Institutional order flow into this name, into these names. You know, I'll have to look into it to find out. You have to know the news to know how to take this. I would watch this level. If you start holding here and you start to get an increase in volume, watch out. You know, watch out. You may be headed to 14. I may buy some calls on MSOS. Some brokers may not have it, like your Chinese brokers, and I don't know if Robinhood has it or not. They might. I don't know. I'm not sure if, you know, you have to be able to trade OTC stocks, because that's what they trade off of. But there's a news catalyst here with these. So we'll look for a pullback into this range, and we'll look to try and get long at 1050. We're coming into it now. Let's see what we got. Why is there a random gap up right there? Oh, because it's a 15-minute chart. I'm like, what the heck is going on? There's a lot of people that may sell into this strength. That's why these names are a little hard to trust. Okay, alright, so it's pulling back. I don't need to sit here and watch it pull back. Let's go over to Amazon. And listen, if you guys see anything, please don't hesitate. Throw the ticker in the chat. We will... Okay, Amazon, nice bounce back to the 20-day. Flipping goodness. Sorry. Alright, let me... Right now I'm looking at the SPY. SPY pulling back. What did we say? 502? We said 502 this morning, right? You got up to 501 something. Yesterday, 502 was the target. I wasn't sure if we would get there in one day. I will say I was very surprised we got there yesterday, but 502 was just a easy level to just notice and identify to get that we wanted to get to on the SPY yesterday pre-market. And I explained this morning why yesterday it was just as when I opened up again. You made progress, made some good progress Monday, finished the end of the day with a take-back rally of that 20-day moving average, and then to come in with a gap down pre-market, like normally you would want to see it above Monday's highs, at Monday's highs, trying to get there. It didn't. That's when I knew pre-market, 7 o'clock in the morning, we were going to have a down day because of how it opened up, right? That progress came to an end Tuesday morning. So... I still think you may get a whipsaw here. If we pull into 499, I may try to get that scalp bounce back. This could be a really nice short back into 502. All right. I would like another, like a double top. See if we can't put in like a double top up here to get there. You know, honestly, I would like 503, this area. I don't think we get it, though. 502 is the area. And it looks like you already wicked into there. Do you guys remember what I was saying pre-market? How we would wick, like we would open up and it would like wick up. Like it would, you know, we would open the bell, rally real quick, get that short on that wick higher. It's exactly what the SPY is doing right now. And that's some of the names we were looking at. I was saying, let's see if off the bell you get this little bounce and then you get short the bounce. But these charts are just... See that bounce? Take it back. Rejection. So it looks like the SPY's headed to 500. 505. Watch the QQQ. See what your leaders are. Whether it's the IWM, the Dow. It sound like a rap song. It a 470 and a 10. Yeah, we still have some data getting ready to come out, so be careful.
For 2024, the three before it
Amazon
was 50. Now it is 50. So 49.9, the final read becomes 50. We keep the streak. All four readings, January, February, March, and April now are 50 or higher. This is the lowest of the year. Takes us back to when we were under 50 for the last 2 months of last year. And, of course, we still have construction spending, Jolts, ISM manufacturing, and, of course, the Fed today. ADP earlier was right around the time we put the high yields of the session in, right around 470 and a 10. We're now down 4 basis points on 2s. Parallel shift in the yield curve down 4 basis points on 10s as we get ready for more data. And, of course, the Fed decision, which should be very little new information other than the fact that inflation's hot. Squawk on the Street will return after a short break.
Okay. Meta. Okay, so Meta got back above. So Meta got back above the 180 or 430 level. I think you gotta look for 438, honestly. Look for that pullback. Hold pre-market highs. I'll go look at it in a second. 435. Alright, let's see. I did not have the chat up, so I'm sorry. And again, if anybody has questions, you know, tickers they want to look at. If you guys see anything with relative strength, relative weakness, you know, you can throw it in the chat. And we're all here to work together and make money together. Let's look at Microsoft. And I have Tesla to the left. Look, remember what I said this morning? How Tesla was looking a little like it would consolidate to bring that 50-day up. It'll pull back. It'll bounce. And look what it's doing. It's not even moving. So that was a good read there. There was a lot that just did not look right. See if Microsoft rejects 392, you might be able to pull it into 390. That's $1. That's not. It's not good, man. The charts are not setting up that great. They're really, at least I haven't seen much. JP Morgan broke 190, 150, just pulled back to it, retesting it. What are some other names that we've been watching? Tesla. Let me roll this back.
No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go.
Myrna, but they have earnings. So that's the confliction here, is that like some of these have earnings that are like today going into tomorrow, and they're not worth really trading right now.
We've covered most of them. CVS, Starbucks, Skyworks, SMCI, all double-digit in the wake of earnings and news. Dow hanging on to some slight gains here thanks to Amazon, upgraded 3M, up 14 points. Back in just a moment.
What did Nvidia do? So everything looks like it's just sitting here, guys, consolidating. And that's what the chart said. So the analysis is pretty accurate that, you know, everything for the most part is still just setting up, just blah, I guess you could say. It's not really, there's really, we could look at like, let's go see, EMPH, big pullback, Shopify, Snow, I haven't looked at, Carvana. It has earnings today, this afternoon.
Time for growth. Funding from Biz2 Credit makes it possible.
Look at AI.
Process makes it simple to take the next step on your journey. Biz2 Credit. Funding what's next.
When it comes to investing, we live in uncertain times. Some assets can evaporate at the click of a button. Others can deflate with a single policy change. Savvy investors know that gold has stood the test of time as a reliable, real asset. So how do you invest in gold? Sandstorm Gold Royalties is a publicly traded company offering a diversified portfolio of mining royalties in one simple investment. Learn more about a brighter way to invest in gold at sandstormgold.com.
For 150 years, it's been an icon of racing and luxury. The first Saturday in May, the world turns its attention to you. The 150th Kentucky Derby on NBC and Peacock.
You've been with us from our first store to now nearly 20. We are hiring like crazy, so of course our healthcare has gotten complex and costly.
What do we got here? What do we got here? I'm gonna go look at look at some of the look and see what some of these names are that are on the scanners. I looked at them earlier.
CBiz, your trusted local advisors, backed by specialists nationwide.
It's a Piper to an overweight.
Inside every Splendor
That's the very Yankee Charlie Bravo NYCB.
healthier, longer lives that keep it easier to reduce
Pally.
with a delicious sweet taste and quality you can trust. You take pride with everyday millions say.
Pally's halted right now, guys.
The first time I experienced vertigo, the room was spinning.
Look at Amazon right back up to high a day. I think this is where I'm gonna look. It's not really a clear setup.
Community Bank right now are moving back.
Look, more bank news.
Now 322.
More banking news.
On their earnings report, that's NYCB.
Oh, earnings.
Wingstop I have on tonight. They did have great comp numbers. Historically, the stock has rallied after initially a comeback. And then I'm trying to gauge the consumer, so I'm going off premise. I'm going to Steve Yalof Tanger, which is see whether people are looking for a bargain. I think people want a bargain, and they're tired of paying.
Coming up, Jolts job openings expecting 8.68.
This is going to get the markets to move, so be prepared. That don't get sucked into the move, right? Don't get sucked into the move and get snuck. All right, Pally pulled back. Pally, want a cracker? Weren't we just trading this a little while ago? Wasn't this on the list? Like, wasn't this just traded a little bit ago? Pretty sure it was.
Funding from Biz2 Credit makes it possible. Our easy and convenient process makes it simple to take the next step on your journey. Biz2 Credit. Funding what's next.
CLRO, Oscar getting a pot to the highs, up about 10%.
That means having a smart plan.
On relatively light volume.
How long it needs to last,
perhaps where it will go when you're gone.
PALI, Palisade Bio resumed trade. Papa Alpha Lima, India.
Throughout your retirement. Or perhaps become a legacy.
All right. What I would watch
Up about 26%.
right there, 763. See if you get a bounce there. Right there. It's gonna be hard because it's an area.
If you're planning to retire or already there,
This is such an ugly chart. Look for $10. If it can hold, I would target $10 in that 200-day moving average. Outside of that, I'd have to watch that level right there at like 758 or so. I don't want to forget about this. Right there, and then I would watch right.
My oldest daughter, Camilla, she came out fighting. 2 days old, she had to have open heart surgery. All of a sudden, she's on.
Yeah, same here. That sounds just like me.
Got so tight. She said, GoodRx can save you a lot of money. Save that extra $200 to $300 a month.
No volume.
You were able to save with using GoodRx. We're able to do all these extra activities. She can hit hard too for a little skinny thing. So it puts less stress on our household and it puts less stress on our pockets.
With gold and copper prices pushing towards all-time highs,
This could be a buy here, guys. It's a low volume pullback on poly. With a stop, you got to have a stop below that. Low risk, high reward, or high risk, high reward. So what I mean by that is low position size. And then it... what you gonna do? Watch your time and sales. Watch level 2. Watch the order flow. Oh, what is this? What is this here? Oh, this is your level. That's your level. $7. $6.99. Sorry. Sorry. This looks to be the level. $7. It looks like it's going to go back down to $7. Looks like that's where it wants to go. Yeah, I wouldn't trade this. I'd be out of this. After looking at that, look, just turned it into to resistance, and now it's going to pull back to 7. So, all right, so there is the data. There's the data.
ISM manufacturing, PMI 49.2 versus 50 expected.
Oh, I was hoping that the SPY was going to hold 500. It didn't. I was looking for that 500 area to hold. And that's why I said, don't let it snake you. Don't get snooked. Or snuck. Sorry. That's wild. 422 on the Qs. Is it going to hold? No. Is it going to turn it into resistance? Boom. Give up. Go higher. Go on higher. Let's go. Let's do it. Go higher. That was it. It's good. I love being able to read the markets. Being able to see that there. Got to make some progress, though, if you're going to hold it. I don't know if you guys can see it or not. Yeah, it's going to go higher. I didn't even read the data yet. So, you could tell there that it broke it, shook them out, but then, like, once it bounced to go... It bounced into this level right here. Right? It bounced into this level right there. 421.99, 422 on the Qs, and even the SPY. It broke it, you know, was going back to retest it. Look at Meta go, guys. Look at Meta go. Meta's going. And then it got above it. It got above it, pulled back down to it, held it as support, and then ripped. And that's when I was like, here it goes. It should start to rip. Let's see, but it's got to hold it. Let's go look at the data real quick. I don't think this data means much. It feels like the markets may just hang out. I got to find something, man. Today, tomorrow, I'm frustrated with Tesla Monday, but... I ISM manufacturing 49, lower than expected. That's no bueno. Jolts job openings 8.4, way under expectations and consensus. I think this market will pull back off of that. I think we get a nice little pullback. We'll see. That is what the Fed wants. So I think, how do I say this? I think the market would be more concerned with. I don't think you're going to get much out of this. It's kind of like ISM is still right in line. It's slowing, yes. You're seeing a contraction. Joel's job openings, a lot lower than expected, obviously. That's what they want to see. So it's like a mixed bag here as far as, like, it's not bad data. This stuff isn't bad. Because, you know, you want to slowly see the labor market open up. The question is, with these Jolts job openings is, does it get a lot worse? And does that start to signal the Fed doing too much? That's why you'll get like a little bit of a mixed reaction there. It all comes down to the meeting. All right, so there's the SPY. Amazon back up at that level. I need to find something to trade, y'all. Meta just on a roll, guys. 433. Yeah, you would look at interest rates. You could look at rates and see what they did there. See what how they reacted off of that. I just don't think you're going to get much of a reaction off of it. I think the move is already decided. You'll get a little volatility like we got there. We just got a little back and forth action. See what happens here if 500, 550 does break on the SPY. Which it's already broke on the Qs, so it's going to break on the SPY. It's going to break. It already did on the Qs. You could use the Qs as your arbitrage, as an arbitrage play there. Oh no, they're actually. I don't know. I'm not gonna go overboard with that, but you see, because criminals double down. Oh my God, some people should not be on the internet. Oh my God, I had to show you guys what I just saw. This guy is like 60 years old. AMC is under $3 because of criminals. Holy shit. Alright, Amazon pulling back. Just stuck between the 20 and the 50, it looks like. See if it holds 179. I'm going to go back to my charts and try to find something here. Man, it's just not moving. Let's go look at Microsoft. It's kind of somewhat of a double top there. See, a lot of things are sideways except Meta. Meta's the only one that's actually moving, guys. Look at that breakout on volume. Nice, nice. Okay, so Meta, don't get too crazy here. And we mentioned, and I did mention that volume was a lot lower. Oh, it's already pulled back, didn't it? 440? Is that what we're looking for? 440?
As our results show, customers are shopping but remain cautious, trading down on price when they can, and seeking out deals. The category is slowing down, and
I would look for a pullback there, guys.
I think everybody knows that the consumer
433, 434.
Estee Lauder CFO said impact from business disruption in Israel and other parts of the Middle East was a penny dilutive to earnings in Q3.
Right here.
That on their conference call, that's EL.
See if you can get an entry there. See if it holds up. I would be caught. Listen, if you take a long or you take a position, Please take profits if it gives it to you. Don't rush into anything. Nothing. There's no like really nice setups, in my opinion. I mean, not that I've seen. I'm sure there's some out there. I just haven't found them. All right, I haven't found them.
We see, on balance, continues to remain healthy and spending is robust.
Once again, we saw RevPAR growth across all three of our customer segments: group, leisure transient, and business transient.
Fuck, it's not gonna pull back. It's not gonna give it to me.
Fuck. Powered by healthy consumer spending and strong cross-border volume growth of 18% year over year on a local currency basis.
Is anybody thinking about meta here? Well, you should get a pullback right here. If we get a pullback and can hold it, I would like to try and test the top end of this range. What's going on with this? This chart's messed up. Hold on. What's going on here?
I was thinking experiences with the first two examples that you used there, but then MasterCard
experiences a little bit too.
Okay, I guess that's not so bad.
And trying to revitalize some of their brands. But the bottom line is there's pressure on the consumer, and it's no wonder. You know, on Fed Day, our data team at CNBC does a good job showing just how much rates have changed for things that we use, for mortgages, for consumer loans. Go back to March 2022. That's before the Fed started raising interest rates.
440.
And look then and now. Okay? 30-year mortgage, and it had already run up in anticipation of all these rate hikes at 4.29. It's now 7.45. Try getting a home equity loan now. Again, these numbers have substantially increased, and this is where the pain is on the consumer and on the economy. Just in the markets, the difference in the 10-year note yield, it was 2. It's now, bumping up against 4.7, and the S&P 500 is higher because the economy has remained resilient throughout these high.
That was the entry.
Mean though that we're not going to see deterioration. Remember those lags that the Fed was talking about? We just kind of brushed them away because everyone saw the soft landing. Well, the lags matter because people feel
427, 435. It's already almost did its full ATR, guys. It's already did $8, almost $10. Pulled back to 427, and you just hit 436. Just under 436. So it's moved like $9 already. So it looks like these rallies have been taken back. 431, 46.
Wells Fargo CIO for Wealth and Investment Management, target of 5,200. It's great to have you in DC. I noticed the regional bank ETF is up 1.5%, and I'm wondering if you think someone's trying to sniff out Powell not going uber hawkish today.
That might be. I don't think Powell can go uber hawkish. There's just no way. I mean, he's not going to fight the fact that the markets have walked back the 6-to-1 rate cut. He's going to let that stand. He's going to say basically that inflation's made progress, but the progress is uneven, right? And we need to be more data dependent and keep going. I think the small bank index, there's a huge bifurcation you guys have been talking about all morning between, the high-end consumer, the low-end consumer, services and goods, big company confidence, small company confidence, and big banks and small banks, right? The small banks are really struggling right now, and so I'm not sure that they're a great play.
Okay, it's a nice little rejection. Let me go over here.
Whether you're in the stock market, whether you have a ton of home equity or not, or mortgage free or not, right? Other big delineation.
Tesla pulling back.
I think that's the narrative. People keep trying to figure out the consumer, figure out the economy, and what they're missing here is just that complete bifurcation of the economy, right? The high end, the low end, that I just talked about. What's interesting is if you buy into the fact that the consumer and small business are the engine of the U.S. economy, right? So take the Conference Board consumer confidence number, 21-month low, right? We know because, mortgage rates are higher, payments are higher. If you look at the low-end consumer, the last 3 years, Carl,
their non-mortgage payments, right, what they're paying in cash flow out of pocket is up 70%. 70 is a real number, right? That hits them hard. You couple that with small business optimism from NFIB, right, which is below the average now for 27 months and in the 4th percentile, right? It's really low. So small business optimism is low. Consumer optimism is.
Does anybody see anything that just looks exciting to trade today? Or is it just me that everything looks like blah? It just looks sloppy. Like, looks like you're forcing a trade because it's not at areas. Looks like Tesla's headed to the 50-day.
Few days, we've taken the 20-day moving average and pierced the now starting to downward slope 50-day moving average from above, right? Which is never a good sign when that happens, right? So
No, come on.
short-term pressure at play, right? And when that happens, there's a lot of blue sky between the 50-day and the 200-day that we've got to go down to. To us, it looks like you could see a correction down to that 40.
173. Is that what we're doing with Tesla?
Somewhere in that range, which would be a material nice correction. You know, we're exactly 6 months in. Remember, we started this rally November 1. It's now May 1. Exactly 6 months into this strong rally.
75, 173. The volume's weak.
What the dollar's doing and rates are doing and everything else.
I was just going to say, is the key determinant here of where the market goes next, both stocks and bonds, just what the inflation reads are going to look like, and making sure that we start to see some progress on disinflation.
So you nailed it, right, Sarah? Because here's the thing, right? The enemy of the markets right now is inflation, right? So what's going to push inflation down or continue the deflation?
So it just broke. Look, there's your test. There was your test.
We say, oh, that's bad for the economy. It won't be. It will be actually good for markets.
You know, even if you see that, is your risk to reward worth it, guys? You could have support right here at 179.50. So just because it breaks the level, pulls back to it, and retests it, doesn't mean that that's a trade. Because you're going to get a little bit of a down. You could get a little downside move, and then boop, get right back up there. You need to be short up at 184 at that double, triple top up there. But again, you could just continue to get the continuation. Just watch this level right there. Is that turning into resistance right now? 179.95 to 179. There's a dollar there. You at least could get a dollar. I'm good on that. I don't want a dollar. I want to know that I got a real trade on my hands. All right? Like, I might try to take a reversal on Tesla. I might. I just might.
And from the seas to the street, cruise operator Viking goes public today, set to be the biggest IPO of the year so far. Company's going to join us first on CNBC. And Squawk on the Street continues.
At Morgan Stanley, old school hard work meets bold new thinking. To help you
Let's see here.
possibilities and relentlessly work with you to make them real. When Lila was ready to sell her ring, she sent it to Worthy, where they took care of everything and auctioned it.
I'm so pissed that Meta did that, man.
Worthy sent Lila her money. You're worthy of more. Get started at worthy.com.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire. I need it.
Amazon's just playing around.
Indeed Instant Match instantly delivers quality candidates.
Roku, not doing anything. Baba, not doing anything. A lot of names aren't doing anything today. So, what have we been watching? ARM is at 197. Is at 97 right now. We said look for 95. Bounces into 100, gets short. Look to take it down to 95.
CTMX, Cytomex Therapeutics popping to the high $4.68. shares were halted at the highs, waiting for resumption on that. CTMX.
He was always a blowhard. It's All American Roofing Spring Sale. Install your new roof now and pay later with no payments and no interest until 2025.
Google. Nice little rally out of Google. You may have some resistance there on Google.
But the good news is, Xfinity Mobile just got even better. Now, you can automatically connect to Wi-Fi speeds up to a gig on the go. Plus, buy one unlimited line and get one free for a year. I gotta get this deal. That's like $20 a month per unlimited line. I don't want to miss that. That's amazing.
Mobile savings are calling. Visit XfinityMobile.com to learn more.
We expect the combination of AWS's re-accelerating growth and high demand for Gen AI to meaningfully increase year-over-year capital expenditures in 2024, which, given the way the AWS business model works, is a positive sign of the future growth. The more demand AWS has, the more we have to procure new data centers, power, and hardware.
That was the Amazon CEO on the call last night. The company posting a beat on the top and bottom line. Stock is up nicely, almost 3%. Joining us is TD Cowen's John Blackledge. He has a $225 price target buy rating on the stock. John, lot for investors to like here in terms of the beat, 12.5% sales growth, re-acceleration, and AWS.
I can't think of anything, guys. I really can't. Let me look at the scanner here. I know CTMX is. Look at CTMX. That's going. Be any small cap traders.
CTMX.
Still making a new high there.
$5.60 at the high of 225%. That's Charlie Tango Michael X-Ray CTMX. 234% now. Shares continuing to spike here on heavy volume. CTMX.
And then the op income was huge, over $15 billion, 21% above our street high number, 35% above consensus, driven by high margin AWS and advertising businesses, and then the rest of the biz kind of turned positive. So yeah, I think that's a big reason why the stock's up today. Those two metrics.
Hey, John, you mentioned the CapEx for Q1, likely the low of the year. How high does that get? And how do you carry
Sorry, I was looking at the scanner here.
Microsoft and Alphabet and Meta in the same front?
Yeah, thanks. So 14 billion CapEx in 1Q, low water.
CTMX.
We went to 62 billion for the total company. That versus we had 54 billion going in, so it was like
Dude, come on.
raise. Within that, we have AWS CapEx of about $40 billion. It's up 60% year over year. As management called out, most of the acceleration is on the AWS side, building out for Gen AI infrastructure capacity, which is what we heard.
Sorry, my one computer is just going crazy here. It's going nuts. Does anybody see anything today that has like, I don't know, relative strength? We like anything that's anything that's not in a range. What time is it? 9:21 already? Are you serious? Damn.
AWS posts a record 37% margin. So Amazon and AWS has proven like, hey, we're going to invest ahead of future needs, and then we'll show the margin, revenue and margin.
Speaking of margins, what are your estimates for combined margins? Obviously, you point out AWS advertising, obviously a strong margin.
HKD, AMTD digital shares popping here on Kilo Delta, $3.59.
Yeah, for this year we have
They reported their earnings.
DJ, look at DJT, guys. DJT. 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 Hammered. Hammered off of that 55 level. Shit. I missed it. Oh my goodness. That's a massive pullback. Think we can get to the 50-day? I need a bounce. I need a bounce into like yesterday's low or something to try to get short. That sucks. I didn't see it, guys. Sorry. But I knew that that level was going to be tough to break through, and shit, man. I cannot believe I missed that. See what I mean? When nobody's watching it, everybody's watching something, and they're not watching. Like that's when these things make moves. Fudge.
Future of EVs and Tesla as Musk disbands that supercharging network team. As we go to break, watch another
I don't know if it's still a play. I don't know. I mean, you could probably get to the 50-day. It's still a couple dollars. I got to use the restroom. I'll be right back. Just give me 1 second. Ah, man, that sucks, man.
The regional fulfillment, and then, but there's more to be done. So, yeah, we have margins up this year and up, kind of going forward.
All right, the bull case on Amazon there with stock up 3%. Thank you very much, John Blackledge.
Thanks. Thank you.
Still to come today, the future of EVs and Tesla as Musk disbands that supercharging network team. As we go to break, watch another rough day for Bitcoin coming off the worst monthly performance of the year, now hitting its lowest level since February. Be right back.
Realtor.com is the only site that lets you find homes with assumable mortgages, so you could take over the seller's mortgage at a lower interest rate.
Don't all apps do that?
Not really.
Shares off the highs now, $5.28.
Every year, 10 million people die of cancer. Now, Transcode Therapeutics, a NASDAQ company, symbol RNAZ, with top scientists from Harvard Medical School, has developed a disruptive metastatic cancer treatment. Transcode is using RNA therapeutics, a groundbreaking field in medicine, to treat breast and pancreatic cancer. In preclinical studies, Transcode's drug candidate showed complete regression.
I'm just going to grab a bottle of water real quick.
Transcode, RNAZ. Time for funding from Biz2 Credit makes it possible. Our easy and convenient process makes it simple to take the next step on your journey. Biz2 Credit. Funding what's next.
This isn't just your normal bike. It folds, it unfolds, and it just goes. You can climb that hill, no problem. And if you're looking for speed, you've come to the right place. 28 miles per hour, up to 60.
That's bullshit, man. That's crazy, bro. It's down 10%, guys. That's a massive trade there. Just pissed that I missed it. That sucks, bro. Double top on Amazon.
CNBC. Live ambitiously. The Fed expected to pause again, but will it send signals for future cuts, or have recent inflation reports put them off the table? Fed Chair Powell's remarks.
I gotta grab my charger. Let me get something to drink. I gotta grab my charger. Give me a second. See if I can get a bounce back on. There it goes right now.
Non-COVID sales, the company's Q1 results also benefiting from a smaller than feared drop in sales for its COVID antiviral Paxlovid. Stock is down though more than 30% over the last full year of trading and down about 8 year to date.
Yeah, 20 year as well. Let's talk Tesla. It is cutting its supercharger team, impacting an estimated 500 employees. CEO Elon Musk took to his social media platform X last night to explain the decision, saying, quote, Tesla still plans to grow the supercharger network just at a slower pace for new locations and will focus on 100% uptime and expansion.
CNBC.
Check out shares of Pfizer today, topping revenue estimates, hiking its profit outlook on some cost cuts, strong non-COVID sales. The company's Q1 results also benefiting from a smaller than feared drop in sales for its COVID antiviral Paxlovid. Stock is down though more than 30% on over the last full year of trading and down about 8 year to date.
Yeah, I always like to look at the 20 year as well.
Let's talk Tesla. It is cutting its supercharger team, impacting
Let's see if we can go short Tesla down to 175.
CEO Elon Musk took to his
Let me
social
try to
media
put this
platform
on.
X last night to explain the decision, saying, quote, Tesla still plans to grow the supercharger network just at a slower pace for new locations and more focus on 100% uptime and expansion of existing locations. Phil LeBeau joins us now. He can tell us what this actually means for Tesla. And as well, of course, Phil, there are others who rely on that charging network as well.
Absolutely. We'll talk about those other automakers who, over the course of this year and next year and 2026, will be making the Tesla supercharging standard, their charging standard, the standard that they can use for their vehicles as well. In terms of the Tesla supercharger network, it is largely considered by most who have EVs to be the gold standard in terms of number of places that you can access it, which is stations 6,249 worldwide, about 2,500 of those here in the U.S. That's the estimation. And in terms of charging ports within those locations, worldwide, more than 57,000. The estimate is that somewhere between 24 and 25,000 charging ports are here
actually
in the
might
United
hold
States.
up really well.
Because it has been so successful. And you can probably see Tesla supercharging stations in a lot of places where you don't see other charging networks. You now have a number of automakers who have said, you know what, we're going with this standard. This year, it'll be GM, Ford, Hyundai, Mercedes-Benz. They're either in the process or they will adopt the Tesla charging standard. By the way, CNBC reached out to Ford, which is in the process of giving adapters to its current EV owners that can be used at Tesla supercharging sites. They are not changing their plans at all. Also, as you take a look at who will do this next year, Toyota, Honda, Nissan, BMW. We also showed you the EV charging companies, the public ones, ChargePoint, EVgo, Blink, and there you see shares of Tesla. Bottom line is this, guys. Tesla, as we say, we've been reporting, they're cutting more than 10% of their staff. And it was widely reported that Elon Musk wanted to do 20%. So it's not a huge surprise that the decision was made. We don't need the current staff that are part of the supercharger network team. Now, whether or not they do more with others, and that's how they expand the supercharger network in the future, that remains to be seen. Don't forget, guys, they also are getting money from the federal government for their supercharger network. So it's not like they're turning it off completely.
No, when he says, more focus on 100% uptime, what does that exactly mean? Where are we in terms of how long it takes these days?
Depends. Generally speaking, David, I haven't checked the most recent. They are among the fastest in terms of how quickly you can get an 80% charge, whether that's over the course of 20 minutes, 25 minutes. It is improving steadily in terms of how quickly you can charge a vehicle. Remember, the holy grail, what everybody would love to see eventually, is that recharging your vehicle is about the same length of time as it takes to fill up if you go to a gas station.
Yeah.
Still to come, we're going to get you ready for the Fomc concludes its two-day meeting today. We're also gearing up for the biggest IPO of the year so far. Cruise operator Viking set to begin trading today. The company's CEO and founder joins us first on CNBC when we come right back.
Now it's your turn to get in early and start building a portfolio of industry leaders, disruptors, and pioneers with the Fundrise Innovation Fund. The future is now.
Okay. Man, that sucks, man. I missed that move early. It happens like that. That's why it's good to get with the group and start being able to locate some of these things early. And if you guys see anything, shout it out, throw it in chat. All that fun stuff. Not sure if anybody had seen any of the whatchamacallit. If anybody seen or if anybody took any of the the ideas from today. Let's see what.
You've come far enough to know success is for those who take it. This to credit. Funding. What's next?
Edwin Dorsey says more problems at EXP World Holdings.
What's this? Gentlemen, it's a beautiful day to fly.
Jansen's Market, our newly expanded cafe, brings our made-to-order sandwiches and all-day breakfast menu outdoors.
Our ovens are busy making
Okay, so
Our produce is local, fresh, and hand-selected.
Tesla. If you look at the bottom right, you guys have this, prior resistant level. A little bit of support here, resistant level. So see if it breaks there, then you could very well test the 50-day on Tesla, your 50-day moving average. What I would do is keep an eye on VWAP and that low a day here at like 181.50 for a rejection. DJT, clear weakness, 186, or not 186, but 46 was a nice level to
Meanwhile, police clashed with protesters this morning after officers began removing a pro-Palestine encampment at the University of
that's so ridiculous.
The removal comes just
So ridiculous. All right, nice bull flag here on a 3-minute. Look at that.
City police officers sent special units into a building breached by protesters on the Columbia.
It's a really nice bear flag.
Welcome back. I'm Silvana Hanau with your CNBC News Update. Secretary of State Antony Blinken met with the Israeli Prime Minister today in a bid to get more aid into Gaza. The State Department says he also reiterated the U.S. position that Hamas was standing in the way of a ceasefire deal that would halt fighting and see the release of some Hamas hostages. Meanwhile, police clashed with protesters
the Hamas
this morning
hostages
after
are dead,
officers
if
began
you want to ask
removing
me.
a
That's why they haven't given them back.
encampment at the University of Wisconsin
Like,
Madison.
let's be real
The
here.
removal comes just hours after violent clashes broke out at UCLA and after New York City police officers sent special units into a building breached by protesters on the Columbia University campus. And Georgia Republican Marjorie Taylor Greene says she will force a vote next week to oust House Speaker Mike Johnson. She accuses him of betraying the GOP by going against conservative wishes on government funding bills and passing aid for Ukraine, among other issues. It comes a day after Minority Leader Hakeem Jeffries said Democrats would help save the Speaker's job. Carl, I'll send it back to you.
Silvana, thanks. Let's get another check on Starbucks this morning. Shares are.
Is we are making it attractive for them to come back into the Starbucks app and join it.
Let's do that. Let's look at.
Trump media shares pull back from the highs that
Yeah, we know. We know. You're late on that.
down about 8% for Delta Juliet Tango.
We asked them about some of the comps from McDonald's lately, from young brands.
Starbucks. That's what I was pulling up. So Amazon is just sitting sideways. Wow. So Starbucks is back down to 74. Already back down to 74. Wow. That's crazy. This $80 level, 79 level looked like a decent spot, but this thing is below. Holy cow. That's not good. That is not good. Looks like it might be heading towards $70.
SPI shares bounced off the lows now. Find that show report. $9.69.
What is it? XPI? Is that what it was? XPI?
Obviously, we always appreciate the CEO's willingness to come on and answer those difficult questions. That's the lows of the day, by the way. I think down 60%. Even on the loyalty program, Sarah, they saw a decline, at least brief, perhaps over year, no, but quarter to quarter, yes.
And that's why you have analysts out there like BTIG, who's still a bull on the stock, saying the weakness in the the consumer was stark, broad-based, and still somewhat unexpected.
Energy's down.
Results were very poor. We can offer no defense.
I don't know what I had here. Shit.
And that's from the bull.
Sorry for the language.
The macro situation there. They're not the only ones to warn about that. But pricing has always been a headwind for Starbucks. That they have, $8 drinks, and that's always been. And yes, it doesn't make things easier in this more challenging environment, but they've managed to draw people in, whether it's through their innovations and their drinks or their promotions or
They were not safe. Dunkin' Donuts is not safe.
And once again, I forgot. I had a stock in my mind here. XLE. Here we go. XLE. So energy's down. GLD. Let's look to see if GLD also pulls back. Yeah, GLD is up, but it's pulling back sharply. That's some weakness there on DJT.
S&P says Tesla triple B ratings affirmed despite pressure on margins and cash flows. Outlook stable.
Tesla just broke.
If anything, they plan to do about it. Here's the risk scenario. The worst case risk I
Says expect Tesla to maintain an adequate ratings cushion.
Oh, that was a
relative
nice.
to investment grade peers in 2024 and 2025.
That was a nice bounce back into that level from yesterday. I did not see that until now. That 181 rejection.
Form 4 filing. Cleveland Cliffs insider purchase of 25,000 shares at average price.
Come on, man.
$98 per share. CLF.
if they don't say that the goals of low unemployment and stable inflation are moving into better times. You want to watch that line in the statement. Most likely Powell and the Fed, they play for time. The 2-year yield has increased most of this year, including since the last meeting. So that's tightened financial conditions without changing rates. So Powell...
No, it has not tightened financial conditions. Stop, Steve Leisman. Stop lying. Stop lying, Steve. Stop. All right? Stop lying, Steve. Do not listen to Steve Leisman. Do not listen to him. Financial conditions are at an all-time low. Not an all-time low. Don't listen to me when I say that either. They are at 2022 lows. Okay? Financial conditions have not tightened at all. Okay? Let's see. This might be a double bottom here, and let's see if we can start going a little bit higher. Then we can say whether or not, financial conditions have tightened. Because they have not. He's just talking just to talk on the TV. And that's all that is. Alright? I can throw him on real quick. I like Steve, but,
off the table.
He likes to hang out with them data
now.
brokers.
Hopes and dreams of markets for cuts now in the fall or the winter, November and December up to 77%. I think it's best to expect the most moderate changes the Fed can credibly get away with given the changes in the outlook. There remains a persistent view out there among a lot of economists that at least some of the inflation we've seen has been seasonal, both in wages and prices linked to the turn of the year. Powell and the Fed will likely keep that possibility open while they maintain what they think is a still restrictive rate for the economy that they think will cool the economy and inflation. Remember, guys, it's a year in July since they reached that peak rate. So this idea of long and variable lags, I think Powell's going to rely on that.
Steve, or do you know your number in the order today yet?
No, we don't. We don't ever know our number. We can be last, we can be first. You just don't know, David.
All right. Well, we'll be.
That's a good question because he has to have a lot of questions in mind.
I know. I've always wondered, Steve, you do go first sometimes. So I've always
sometimes I get to go first. Sometimes I get to go first. I'm always, don't expect that. But when it comes, you got to be ready with a series of questions.
Because you guys want to know what I would ask? Here's what I would ask Powell. What are you more concerned about? A tight labor market, inflation a little bit above 2%, or too long, too much, too long, too quick, loosen up that unemployment, and risk a recession, a possible above average recession, or maybe not get a mild recession, and what I would ask the question around, what are you more worried about? Are you worried about losing the labor market, or are you worried about inflation? What are your two main concerns? Because each have an action and a reaction, right? In order to get inflation under control, you got to get the labor market under control. To get the labor market under control, you get on inflation under control. So, would you rather have a tight labor market, which I think they would, and an inflation at 3-4%, than to over tighten and cool things off? I think they could do a real good job at bringing some deals in here, tightening things up, helping, because you got to think about all the other generations that are going to be coming before us, and they'll get priced out. This is how, when they don't do enough, is how people continue to get priced out of things. This is how wages do not keep up with inflation. They don't. They can sit there and say till they're blue in the face, oh, it's up. It's not up. It's not up. People are behind. Average people that don't have a skill, or it's hard to say, man. I think it's just my opinion. All right, let's get back to the market. But anyway, okay, so the SPY is holding that 500 level right now. No, I'm not going to do that. Okay, so I want to find a trade here, guys. I want to find a trade. If I don't, I don't, but I would like to find something. So Alibaba's relatively strong. I just missed DJT, unfortunately. That really sucks because, we were watching it for quite some time here.
Luxury cruise line Viking Holdings begins trading today, pricing at $24 a share, near the top of a marketed range, implying a valuation of $10.4 billion. The company operates 92 cruise vessels around the world. And joining us now is CEO Tor Hagen and our own Seema Modi, of course, who covers the cruise industry. It's good to have you. Tor, your story, first of all, you founded this company back in the late 90s. Why? What makes it so different?
Well, we're 27 years old, and we founded with 2 guys, 2 mobile phones, and 4 small river vessels. And today we are a real company, and I think we can prove by being here on the stock exchange.
But you're not just any other cruise company. Why?
Well, we're different. I think when you live life, you should try to do things differently and better. So we are very different from the big cruise lines. So we have a few distinguishing factors. We don't allow children under 18 on board. We don't have a casino on board. It's a quiet, serene environment for people in their up in their ages, and for curious people who want to go to destinations, not to go to water slides and the like. So we're a very different company.
It's interesting, at a time when all the cruise lines are changing up their product, they're adding new attractions and activities on board. You sort of stuck with this idea that
Let's go look at let's go look at the heat map real quick, gang.
and your 9 ocean-based carriers, Tor, I believe, also look very similar. Does that strategy
Let's go look at the heat map.
Extremely well.
Let's see what we have going on.
You work on something,
Oracle.
you get it right in the first place, and then you just cookie cutter it. And that's really what we have done, and it has a lot of advantages.
Qualcomm, Baidu, all making new highs. Let's see here. All right, Meta. That's a nice one. We got that. J&J looking very strong. Banks. Regionals are doing okay today. Makes sense on a day of Fed Day. Maybe they can get a sign of relief with the Fed, because I'm telling you guys, they could be in trouble. J&J, so Walmart, all those, Costco, Target, all down. Baidu, Pinterest. Oh, that's right, guys. Pinterest yesterday. I forgot about that. Pins reported yesterday. And it was up. It had a, I take it, they were perceived pretty well. So that would mean names like Baidu and Meta. Look at Baidu, doing really well today. It was at the 50-day moving average there at 106, 105.
We normally ask the cruise line CEOs about capacity and how much they want to gamble on future capacity growth. How do you think about that?
We are very fortunate because we can look. We have our guest book far in advance, so we have a good indication of what bookings are going to be. But of course, it is in the future, so you don't have any guarantees. But I think there's a huge demand for the product we have. There are more and more people who get into middle age, and 60s and 70s and 80s even, and we have had problems just having enough capacity as it has been.
And you're benefiting from sort of a demographic boom in that age group.
Absolutely.
Is growth coming from additional routes to the
Man, this sucks.
countries or new countries overall?
This stinks, man. All right, so Johnson & Johnson is already up. That trade might be gone. Might be. 150.
The rest is Europe. And if you want to go to Europe, when do you think you should go?
Spring?
No, you should go in the winter. You don't have all the tourists. You have and it's turned out to be a big success for us. So we go in the winter, and that's how we are. We are contrarians.
I'm going to keep that in mind, Tor. But now that you're going to be a public company, of course, your investors. Excuse me?
Nothing.
Your investors are going to care about growth. To build on Carl's question, what is the growth strategy? Is it by adding more capacity, raising price?
We have been.
What was this news on J&J? Does anybody know?
We behave quite well, and we have had the fortunate position of having private equity with us, so we dare to place orders for ships.
What had taken place today?
So we now have capacity coming on stream at reasonable prices. So of course there's going to be growth in
For reorganization by its LLT management subsidiary for the resolution of current future ovarian
our pricing is so that everything is included. People know
cancer.
exactly what it costs to go on a Viking cruise.
Okay.
We don't do any additional things.
Myrna pulling back. Moderna, I think, has earnings today. Yeah, later on after the bell.
Typically during a recession, when the high-income consumer gets hurt.
Look at Baba. Baba's just ripping and roaring, guys. Maybe I'll take a quick long here on Baba and try to scalp. Get a few points to the upside there. Damn. This whole sector, Pinterest, Baidu, Baba, Meta, right? This whole sector is up today on the back of Pinterest earnings. Look, it's coming right into resistance right there. You might have a little bit of resistance right here.
And with that age comes also time. They have time. So
Oh, that sucks.
go after. Of course, you say that rich people tend to suffer less in recessionary periods, but they suffer a little bit. But our guests have funds. We try not to be overly expensive, but we have a great product. And of course, by being public, they will demand things from us. I
Tuh.
written a letter to shareholders
Unbelievable.
where I say there are some things we will do, but there are 4 things we will not do or will continue to do. They are, and with that age comes also time. They have time. So it's the right group to go after. Of course, you say that rich people tend to suffer less in recessionary periods, but they suffer a little bit. But our guests have funds. We try not to be overly expensive, but we have a great product. And of course, by being public, as you said, they will demand things from us, I think. But I've written a letter to shareholders where I say there are some things we will do, but there are 4 things we will not do or will continue to do. First, we obsess about customers. And I took this inspiration from, without too strong a comparison, Jeff Bezos. He wrote a letter in 1997 to his shareholder. I have it in my briefcase, and said, we obsess about our shareholders. Second, we treat our staff well, and we have the first call on staff. Thirdly, we like to be contrarians. We're in business to create long-term value for our shareholders, and we shall not worry too much about quarterly results. Of course, we worry a little bit, but it shouldn't drive us. And finally, we say we should be concerned about the environment, where we have been leading the pack in terms of what kind of propulsion we have on ships and so forth. So it's a big day for us here.
Yes.
And it gives us a good platform to develop our ambitions further.
Well, we appreciate you taking some time to talk to us and the viewers about it. We'll watch for the open. Tor, thank you. Seema?
Thank you very much.
As well.
Thank you.
We're going to be right back here. We've come back a little bit. Dow's up 75. The S&P 500 is trying to fight back, still down a little more than 0.1%. We'll be right back.
Just keeping an eye out here for, staying vigilant. Staying vigilant. Oh, shit. You know what? I forgot about the damn MSOS names. Alright, Amazon's breaking down. I wonder if this will be the start. See if Amazon can break a new low. Let's see. It's not able to hold that level, and you got to think after just testing. It's like, okay, when does it give it up?
Nine.
Watching the chips, as always, AMD down sharply post results. Christina Partsenevelos here at Post 9 to break down the numbers and the pain which appears to be spreading across the sector.
The two major reasons that we're seeing AMD down. The first one has to do with continued weakness in their embedded business, which was really just programmable chips, and the weakness in gaming. Those two segments are why many analysts have reduced their estimates. The other major driver for the negative swing is AMD's MI300. That's the AI chip. They had a $3.5 billion revenue guidance for the year. They increased it to $4 billion.
It's got to break
this is a chip
above
that's going to give NVIDIA a run
$423.50
for its
if you
money.
fail.
But the street was hoping for at least $5 billion with buy-side whispers.
I don't know why that was talking still.
AM Eastern on the Schwab Network.
Look, there it is. Tesla could not hold. It's not good. Give me just a few minutes, guys. I'm gonna scan these markets and see if we can't find something. What's up, Animal? How you doing, man? It's good to see you, buddy. Haven't seen you in a while. How is everything? I hope all is well, my guy. Hope all is well, my friend.
Good morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's Fed Day. We have a slew of earnings and a lot of economic news that continues to pour out as well. In the meantime, our 360 Spotlight will focus on the capital market environment, and our guest will walk us through the current M&A activity that we have been seeing. A disruptor today, Seagate, after catching an upgrade from Wedbush. And our 360 round will break down those earnings from Amazon. Take a look here at the markets right now.
I get those two
the Dow
always
Jones
mixed up.
Industrial average is up 101 points. You're seeing a mixed bag as far as how stocks are faring on the heels of some of the big names that we've been watching. AMD, Amazon, Apple, just to name a few.
I'm so sorry,
and so
man.
With that,
I'm
the
so
S&P's
sorry.
at 50.27, down slightly. Nasdaq 17,000.
I really am. I'm sorry. I know.
The Dow is gaining. It's up
I know you've
102
been.
points, and the Russell is up just
I
fractionally.
know you've been doing that, man, and I'm sorry, bro. I just went through that myself. I've been actually going back and forth to the hospital. It's not that serious. I've been running around myself, and I just got over that same thing. So I am very sorry to hear that. Thanks for letting me know. If you need anything, message me. You can get a hold of me on Twitter. You know where to get a hold of me, man, if you need anything. So.
Good morning to you, Jenny.
Good morning, Nicole. And unfortunately, what was a pretty strong report from AMD was overshadowed by all things guidance. And I think that analysts were so quick
man,
to
my
poke
prayers
holes
for you and
in some of
your
these overall
family,
guidance
your
figures,
dad,
but unfortunately,
your mom.
seeing some selling today that's held. I mean, it's actually
you.
paling in comparison to Super Micro, which is also reporting it's down over 16%.
I was wondering about you. I was wondering where you were at, how you were doing, how things were.
AI accelerator product that
If you need anything, just give me a shot, man. You know how to get a hold of me.
$4 billion this year. That's up from their earlier projection of around $3.5 billion. But heading into this earnings call, analysts have been looking for around $6 billion in revenue for that product, and some projections were even higher than that. So maybe the street had almost gotten ahead of itself. But their CEO, Lisa Su, did highlight that demand for M300 overall that segment continues to strengthen. Well, longer term, she said the company is very much focused on working closer with some of their cloud enterprise customers as they expand and accelerate their AI presence as far as these software roadmaps are concerned. Revenue did rise to about $5.5 billion. That did beat, and it was up year over year. They saw 80% growth in their data centers revenue, which hit around $2.3 billion. But however, one major snag outside of even just maybe lackluster guidance was the fact that their gaming revenue fell 48% to $922 million. That was roughly about $40 million below what the street had been expecting. And then their embedded revenue was off 46% to around $846 million. That was $100 million below what the street had been forecasting, so not even close. So I think, unfortunately, for AMD, there are still various components of its business that are failing, and that is right now actually stealing some of the overall AI hype. As, mind you, 75% of their revenue right now is derived from data centers. They're trying to follow in NVIDIA's footsteps, but there's still other components of their business that has the street spooked today, clearly.
All right, Jenny Horn, thank you. A good look there at AMD today. Appreciate it. Thank you, Jenny. Let's get some insights on news shaping the markets. William Lee is with us, Chief Economist, Milken Institute. Thank you so much for being here. Today is Fed Day. No one's expecting the Fed to make any moves, but they could make moves, for example, on
Hell
off
yeah,
that
bro.
balance sheet, maybe doing less with treasuries, for example. What do you think we might hear today?
We're going to have to hear something from Chair
That's
Powell
awesome,
that
man.
says that he's not confident we're going
I'm
to get
glad
to
that
2%
I'm
by the
glad
end of
that
the
there
year.
was
I think he's going
a
to put the market on notice that
you know,
right
a
now
good
the
with the
inflation
bad.
has been
That's
stuck so
yo,
high
that's
above
awesome, bro.
the 2% target,
Good
especially
stuff,
in
man.
services.
And I said, man, you know, you may not get a response. You may not get a response, but if you keep doing it, somebody's going to reach out to you. Somebody will get back to you. That's what's up, bro. And that's just, you know what I mean? That right there is putting it out there in the world, what you want to do, and them knowing who you are, and you know what I'm saying? You know, you put it out there and you're receiving it. Right? This is what you like to do. This is what you want to do. You put it out there. Guess what? They picked up the phone. They picked up the phone. That's awesome, bro. That's awesome.
Well, getting many jobs, and the type of jobs that are being made
You
is
got
in the
this,
leisure
man.
and
You got
hospitality
it.
sector and government. These tend to be lower paying jobs, and so people are finding that, you know, they're having a hard time making ends meet. So there is some weakness out there, and I think the Fed knows that. And so we're not going to be worried about rate increases. We're not going to be worried that the Fed will reverse its posture. But what we should worry about is the timing of the next rate cut. And I don't think we're going to see anything until very close to the end of the year.
So September is at right now 39.4% likelihood when you use that CME Fed Watch tool, Fed Funds Futures. Where do you think we might see the cut, and how quickly would you like to see the Fed cut, if at all?
Being an old Fed staffer, I agree with the Chair Powell's assessment that we shouldn't be premature. Right now, the worst thing they
AMD
can do
is
is a
cracking
policy mistake where they cut
146. Look, now it's
prematurely,
starting to pick
and we
up
still
some
see
speed.
service inflation hanging out at 4%. One of the things that is always hurt the Fed's reputation in the past is that they did things at the wrong time for the wrong reasons. They just didn't get the economy right. And right now, the Fed needs to make sure that their decisions
believe I
will
missed
not have to be
DJT.
reversed in the future. The last time we talked transitory inflation, they got burned. And now they want to make sure that the decline is not transitory.
So that would be a policy mistake, in your opinion, and that they don't want to have to do something and then undo it. I see what you're saying. In the meantime, you do have concerns about, even though we have a good labor market, within the labor market, you have some concerns. Some people are carrying on multiple jobs, right, to sort of make ends meet because the inflation environment is still pretty hot. What do you say to folks who want to invest in the market, in commodities, different sectors? What do you tell them? I mean, in relation to how the economy could move?
I hate to sound like an echo of all the other analysts that you've had on the show, but the best place for investors to look is the places where we'll be improving the productivity of the economy. Right now, the one thing that makes the U.S. economy distinct from every other economy in the world is that our productivity is still very high, and it's one of the most attractive places in the world to invest. because we have technology really going like gangbusters, especially in the artificial intelligence field. That's the one game changer that will revolutionize how much people can be paid for the amount of education they really have. I gave a talk in Silicon Valley not so long ago where I said the challenge to software developers is to make people much more productive than they are. Someone with a high school education with the right equipment and the right kind of software can actually be more as productive as a PhD. And right now, that's the one thing that we need, because family incomes are starting to go down. For the last 4 years, family income adjusted for inflation has actually declined by 5%. So there's a lot of discontent out there, especially people at the lower end of the pay scale. And productivity is the key to everything. And that's where I think all investors should be looking.
Sorry, guys, just give me one
Yeah,
second.
without a doubt. I mean, also, how could the election, we have the Biden administration in, if you have a Republican, if it's President Trump, I'm less interested in politics, but more interested in policy and how it could affect folks. What are some things on your
policy
mind
going to get that man kicked
for
the hell
November, and how it could change either for the better or for worse, in your opinion,
taxes
for folks?
and take.
I think the onshoring trend is going to continue no matter who is in office. Our competition with China is still very severe. And one of the things that we have to make sure of is that we stay on the leading edge of technology. China is posing a big challenge in terms of artificial intelligence, electric vehicles, and so on.
Let's see
and
where
I think one of the
AMD's
things
going.
that the new administration, whether it's Republican or Democrat, is going to do is to make sure that we incentivize companies to invest in the leading edge technologies that will raise people's productivity, increase incomes, increase wages, and I think
looks
that's
like AMD could be
the
down at
areas
140
where I think
before
we
we
have to look at the
before
regulatory
we know it.
environment. For example,
You start breaking
a lot
this.
of people
You
talk
start
about
breaking
Elon Musk's
this
electric
area
vehicles
here.
and how self-driving
Say
is
hello
going to make
to my little
this
friend
revolutionary
140.
change. But don't forget, insurance companies have to give their okay for self-driving cars, and we have 50 state regulators for insurance. So there's going to be a huge regulatory
I'm looking for 140 on
one of the
AMD
things
if
that
this thing
policymakers
breaks.
are going to have to do is to say,
I'm looking
let's
for
coordinate our
140 if
policy, let's
AMD can
coordinate our
continue to break
regulations,
and-
let's make it so that it's easy for new innovations to come online and make people more productive and give them more income.
Yeah, and
that
I'm going to leave
level,
the
it
last
already did
question to
break,
you,
right?
because when I look at the
146.
big border, I see certain prints. I have 4.64 for the 10-year. The dollar has been pretty strong for the most part. Oil's it's sitting at $80, and Bitcoin has pulled back below even 60,000 now. Care to comment on any of those and why people should pay attention? Why should they care?
The one thing I would still focus on like a hawk is what the Fed does. Where's the real interest rate? The 10-year adjusted for expected inflation over the next 10 years. If that stays at a high level of 2+, then it's going to be very hard for American industry to finance its innovations. Now, fortunately, we have a lot of companies where they're cash rich and they don't really need to borrow right now, but that's not sustainable going forward. One of the other things to look at would be
I think
actually
we got to
Bitcoin.
look at it. That was a
The
nice
more people
rejection off
focus on Bitcoin
148.
and think of that as a
Man,
viable
I missed
investment, it questions
Missed
the
that
sovereignty
rejection
of countries,
there.
and there's geopolitical risk.
Low
will be very
volume
high.
bounce,
So
nice
for me, that's
pullback.
a counter indicator. Whenever Bitcoin becomes an attractive investment alternative, then there's something wrong going on with the world, and keep an eye out for that.
Right, as the risk indicator. Do you think the 10-year can go to 5% anytime soon?
Look at that. Bang. Look at that.
If the expected
148.
inflation rate keeps going up like this, yes, absolutely. And that depends on what's happening to the service numbers. If we see the service number inflation come back down below 4%, and it hasn't so far,
144.
then we will
I'm
have
gonna
a
see if I
top
can get-
on the 10-year.
See,
But
I don't know if
the inflation
AMD is
rate
going
on
to bounce
services
back for us or
continues to
not.
chug along at 4%.
It's already
then
below
I think
this
there's
level,
a very easy
so-
chance that we'll hit 5, because we have a lot of refunding
I think we gotta
issues
try and
coming
take
up
it to
at the
140.
second half of this year. Given the federal spending that's going on and the Treasury needs, there's going to be a lot of issuance.
I think they want way too
All
much
right,
for those
Billy,
140
thank you so
puts.
much of the Milken Institute.
But if you
Wonderful
can get
to
it back
see you. Thank you for being
at
here
146,
with us on a
that
big
would be
day.
a nice entry.
Thank you. Plenty more to come here on Trading 360. Up next, the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals. John Kaufman of Theo Trade takes us through the trades for the Treasury bond. We'll look at Bitcoin as well. Costco. We'll be right back.
Yeah. No, well, yeah, I mean, no, that's cool, but you know what I mean? You got to understand that was before they reported earnings. You know what I'm saying? Like, I meant right at that time. You know what I mean? Now that's, it's not to say that Meta wasn't a short, but it was just really strong, and it was due for a pullback, that's for sure. I was actually looking at Meta as well today. But yeah, I do remember that. You gotta watch, man. I mean, that's a good short idea. I think you were really nice. What's up, Matt? Starbucks, yeah, Starbucks. I think, man, it's bad. I think it might be a little overplayed. I think the China news on this thing is hurting it. Sorry, man, I didn't see the comment. If I had the chance right now, I would buy a few shares and stuff it in the long term. As it gives you, look for 70. I would look for $70. I think anything more than 70, you have to watch, because it might be like 71, 72, and you're at 73. So what's $3 on a share? Unless you're buying like 10, unless you're buying 1,000 shares. I think you have a gap here that's probably going to get tested. And that gap is down at, it's like 70 flat. I was just talking about this morning, about buying some. Just buying a little bit, right? I would buy a little bit. Long term is in a downtrend. That would be my thought. My thought is Starbucks isn't going anywhere, and do we still have this issue 5-10 years down the road? Maybe. I don't know. Major support there at 661. I don't know. I would say at your own risk, nibble on it. You know what I'm saying? You should at least be able to get a bounce back recovery if this market can turn around. It might actually be a tough time to buy it for a few different reasons. What I would do is every load that it puts in, I'd just watch it. I wouldn't have a problem buying some of it right now. And I thought about it. Maybe we get a chance at 70. Anything below 70, like, I just don't know if the market's going to give you 60 or 70. It might. I don't know if there's like serious problems. Like, Starbucks isn't going anywhere, is it? This is a big like head and shoulders here, but I don't think Starbucks is going anywhere, if you want me to be honest. And I think if you may be able to buy it lower, like let's just say the overall markets continue to pull back off of just weakness, like just because we're in this, we're going to start feeling the effect of rates. I would have to be a buyer. I would buy a little bit here. If it gives you a price lower, buy a little bit more. I think though it is kind of crazy. People aren't really buying it today. So like right now, 73.50, I'd have to buy a little bit, and then watch it for a couple days, and then own it. I don't know much. It's like I know about Starbucks, but I don't know about it as far as the stock. I don't know what the float is. I don't know if there's a dividend. I don't own this. I do not own this. You have to ask yourself, why was Starbucks down 11% in China? That would be my question. You know what I mean? It was down 3%. Sales were down 3% in the US, but 11% in China. Why is that? So I don't know if it's because Chinese, they're not spending their money either. I don't think Starbucks is going anywhere. I still think that there could be a small return left on the table. I don't know. Sometimes with these names, it's like, is it a stock? Like, we buy stocks to make money. If we look at a weekly chart, and this is why I say I don't know if there's a dividend or not. I mean, I'm sure there is. Like, ugh. Has this thing even done anything? You know, what is this? 2023, 2/1/19. COVID lows are $50. I mean, I guess it has made you money in that bull run. I don't know. I think it's a little bit expensive. If I would just nibble on it, that's all. I'll just say that, Matt. Yeah, no problem. I would just nibble on it if you want to. I just don't think there's going to be people that are in a rush to buy it just yet. The closer you get to 60, if you get that, then that's when you should start to see some buyers. I don't think it's going anywhere. I think it's a discounted price right now. But the fact that it isn't recovering today, you can see that people aren't in a rush to buy it. You know what I mean? Usually you'll start to see like this here, and then it like starts to like reverse because it's a company that people want to own. So, if you have the money, why not? It's a stock that's discounted right now. Where else are you going to find stocks that are discounted price? You know, I wouldn't empty the wallet on it just yet. Maybe just stuff a few in, see where it's at in the next few days, and see if it just continues to etch its way back down to like $65, $60. I don't think you're going to get 60, but if it starts getting in the 60s, I definitely would be buying it. I would definitely be buying it. And I thought about it. I woke up this morning and texted my other half about it. Like, about that. Yeah, let's go to Meta. But yeah, Meta definitely had its run. Okay, so there we go. We were looking at 435, so it ended up popping up to that range up at the 100-day. Let's go to the charts. I'm gonna scan around for just a minute.
Necessarily agree with.
And see if I can find something here. And if I put something on, I'll let you guys know. You know, I've really had. I'm lucky I didn't take Shopify yesterday. I wasn't lucky because I wasn't like, I don't know, like it wasn't setting up perfectly for that relative strength, but it looked good when I first saw it. I really liked Tesla Monday. Monday it was like a perfect setup for Tesla long. So if I find something, I'll let you guys know. I'm gonna scan through some charts real quick. I'll turn on Schwab and I'll scan through these markets. If you guys have any other tickers or anything you guys want to check out, you know, just throw them in the chat and I will or questions. I'll get to them and we'll scan around here. Keep in mind that DJT had a nice rejection there that we were watching, that 55 level. I did not take the long on this because at like every $5 I was like wasn't sure if it was going to break, and it always like really gave you the move. It would gap up, you know what I'm saying? So you can see here it rallies back off of 45 and it gaps from 46.80 to 50 some dollars. So I never took that long, but that 55 I had a feeling was going to be a major level of resistance, and that's what we got today. You guys can see that 55. So any bounces back into like 50, the closer we can get there, the more I'm interested in taking a short on this, especially with the volume today. I actually thought today was going to be one of those parabolic moves where it just, boom, it just goes and then we get the fall, like the pullbacks. But I'm going to keep my eye on DJT. I'm going to keep my eye on DJT because if I do get a bounce in the $48 with VWAP and we can't get above it, I'll take the short, and I'm going to try to take that down to $40 and the 50-day moving average. Massive data breach. Oh, it was, oh, that's right. Hi, Turkey. It's my cat. She just jumped up on the desk there. Okay, sweetheart, come on. Yeah, guys, let me go. I'm going to go give her... I got her a couple cans of turkey yesterday. And I don't know what it is about these cans of turkey, but they do have a lot of, like, juice in them and water in it. And she's really digging them, so she's wanting me to give her that. I'm going to go give her some of that so she can have what she wants. And she probably wants to eat and take a nap. And then I'm going to go back through some of these charts. DJT, let's see, Amazon. Amazon right here, bottom left. Come on. And then we'll get ready for this Fed meeting that's coming up. I got to throw some laundry in. AMD again. We're looking for 140. Look, it's falling out of bed now. Oh my God. The minute I chart it and go do something else, I forget about it. That's my ADHD right there. So looking for 140 on AMD. Any bounce backs, I'd look to get short. I would not trade it now. It's already pretty much done. Your risk to reward is kind of skewed now. Tesla hanging out. Meta pulling back off of 138, 139. I'm still watching Meta. That was our entry point. So let's see if we can get a pullback here. So Meta was kind of strong today because of Pinterest, Baidu. You can see like Baba, Meta, right? Pins, right? All up because of Pinterest. Baidu. You can see they're pulling back, but they all have one thing in common. They're pretty much the same type of company. And Pins had a really good earnings yesterday, so Pinterest is raising this. I'm coming, baby. I know. I don't know if you guys can hear me, Alan, but communication, internet content information. You guys can see there that they're all up because of Pinterest, and Pinterest is up 20%. Okay. I'm coming, Boo-Bo. I'm coming. Reddit. So energy is down. Energy is down. Banks are starting to go red. So it looks like the market's starting to roll over. You can see how much red we have going on here. Let me refresh it. So semiconductors red. Software infrastructure is trying to hang on. So if I look at it now, like this was all looked like it was all red. So keep an eye. It's like a mixed bag. So you can see why the markets are kind of flat. It's like I see more bright red than I see bright green. The only thing bright green I see is J&J, PFE, Pinterest, a few Kinsale Capital Corp. Never heard of it. Your regional banks are having a good day today. You could watch KRE. KRE would be the ETF for regional banks, and look at that. They are on a roll. So there's ideas there. Baby, I'm coming. I know you're mad. I'm coming, sweetheart. All right, so yes, that's that. Give me 1 second. I will be right back. you guys could, hit the like button, subscribe if you haven't done so. If you guys have any questions, throw them in the chat, and I'll get right to it as soon as I get back from feeding her. And I just want to say thank you. That's all. Thank you guys for joining us today. I'm coming, Boo Bill. I'm coming. Come on.
Up to, well, recently through that $700 level up to $790.
Yeah,
You can see on the 4-hour candle chart that
she's,
value also here has been
sidetracked with
and
the
continues
birds,
to be
so.
moving higher. Now, yeah, we're off that upper level. That's not necessarily what the bulls want to see, but still holding up above key areas that were established within this trend higher here. So let's add a little time on. Go from a 4-hour candle chart now into a daily candle chart. So we're going all the way back to when we were trading around 200 back in July of 2019. Look at this. It's well defined. Bottom left, top right. Looks like we're forming a bit of a balance up here. Again, off those highs here. So again, the bulls want to see us regain composure, get back above 750. It's kind of that pivot zone right now in this range that we've established. But even on this chart, I mean, you can see there could be further price decay. The one thing I did notice, there were a couple little areas where we paused briefly for a few days, a week or so at a time in that area, but I didn't really want to get too granular or too microscopic here on this one. I just sort of wanted to look at that bigger picture.
That could be dangerous.
Well-defined trend up here. What I'm seeing could start to bounce around 750. The bulls want to see us get above that, and then you target those upper levels around 800. Now, still holding below the 50. That's a bit of a disappointment.
Holy
RSI,
cow.
a reflection of what we've seen in terms of that recent price activity. It's really yet to establish regain composure here, but let's keep an eye on this one. Again, it looks to me still like the longer-term bulls are in charge here.
Wow, look at that. Just
He wouldn't agree with you on that one. And people are, they're checking the memberships. I mean, just like Netflix,
nice.
they're
that
cracking down on the
720
memberships.
level.
You can't go and get that cheap lunch over there, etc. So maybe that's helping the bottom line too. Don Kaufman, thank you for being here. Don Kaufman.
I will say, if
Ben
Costco
Lichtenstein on the charts there, thank you both. Coming up next, we'll spotlight capital markets, all the M&A
does
activity
pull back.
that's been running
it
hot,
has,
right, in 2024. We'll get to that next.
It has a lot of room to the downside. Sorry. Like, it just doesn't have anything to really stop it.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
All right, so I would look here to see if you can make a new high and get above the 725 level. Because if you don't get above 725 on Costco, then that's just saying, okay, we're struggling here. We're putting in lower highs. It's not, you can see that it's trying to curl itself back up and around. But that ain't doing you no good if you cannot break back above 730, 729. All right, this is the level I'd like to break and get to and above, and then you got to compete with 740. I'm not sure how Costco trades because I have not traded it this much at all, really. I may have traded it, but let's see. Can it hold here? 722.45. You want this thing to try to get to 725 today. This actually might be a good idea. You can see how it's sitting right in this. I think that's funny looking. Just like when you see the Dow with the lines where it goes below the line and it's red, and it goes above and then it's green. It goes green and then red above the line. It just look kind of funny. I'm going to go give her some food so she has some. I'll be right
Even
back.
right
She
here
has
at the
food, but
Stock Exchange now
she wants
back
something
in action,
specific.
and we've had a great conversation with Michael Harris here at the NYC just to learn more about
Might have
that.
to
And
wait
markets
for a
are seeing money backed up and
trade
ready
here
to be put to
for
work. So here to talk about
the
all
Fed.
of that with us is Ted
And what we'll
Swimmer,
do is we'll
Head
go
of Capital
through
Markets and Advisory over at Citizens. Thank you so much.
When I get back, we'll look and see what sector, what stocks we do want to trade today. If we're going to trade, which ones, you know, and how do we want to trade it? I'll cover that
Absolutely
as soon
do,
as I get
Nicole.
back.
It's almost
Not leaving.
as
I'm
in
just
last
feeding
November, the market got
my
turned on
cat.
again, and we saw an interest in making acquisitions. We saw an interest in putting money to work. There was a lot of activity, especially in the sponsor community, around companies of $25 to $100 million of EBITDA. That certainly started to pick up. The first quarter has not been as good as we've hoped from an M&A perspective. Transactions seem to be taking longer getting done, but we feel really good about the back half of the year and what we expect to see.
So when you're seeing, I mean, you're seeing that there's money that's wants to be put to work, and people are going to private equity, and they're trying to do different ways. Instead of just borrowing from banks, they're trying to find other ways, venture capitalists, private equity, to get things rolling. Are you seeing that as well?
Absolutely. The financing markets have been a lot stronger since the turn of the year. We've seen both bank market, the institutional bank market, and the direct lending market pick up. And there's a real competition to put money to work right now. So terms are getting more attractive for the issuing company, and banks feel more comfortable underwriting transactions. And we see the direct capital has raised so much money that they have a real interest in putting money to work. So there's significant competition amongst all of the investors, and that's will spur on the M&A activity also.
So would you say that the environment, so there's definitely the demand and people want to put money, you know, to work. You're even seeing it, you said institutional investors, private investors, and direct capital, but is there any sort of credit crunch that's happening at the banks at all because of this high rate environment or higher for longer? Is there anything that you're seeing there that would go into the credit crunch description?
I think coming off of the 3 bank failures last March, there was a concern that there was going to be a credit crunch, and there was, I would say, for 3 to 6 months. Banks ultimately make money on lending money, and we see a more selective, a little bit more selective, but there's nothing close to a credit crunch at this point. There's a lot of, we've seen a lot of, the first quarter was dominated by companies refinancing their bank deals, refinancing their bonds, because it was a very attractive market, and there still wasn't enough M&A to satisfy banks' appetites or investors' appetites on transactions.
When you talk about sectors, I mean, when you talk about refinancing, the first thing I go to is commercial real estate and things like that. But and those bank failures, at least in part, was related to commercial real estate. And I don't know that the regional banks, for example, are fully out of the woods there. I mean, do you have a thought there?
Well, at Citizens, at least I can speak to ourselves and the others. I would say there's a real still interest to learn. There is a commercial real estate problem, but I think that's really isolated to a select asset class. Most banks have reserved for that adequately, and now they really want to show their shareholders that they have growth. So we're not seeing that hold back, except to actually lending to commercial real estate companies. We're not seeing that hold back the appetite in the bank market right now. It's still very active.
And look, you know, I recently heard from a CEO from SL Green, for example, just saying how there's different areas. And to your point, there are areas that are booming, that are seeing great demand. And that one happens to be in office leasing. I mean, that's not necessarily usually a great spot right now for real estate. But other areas have certainly picked up, medical, shopping.
Industrial.
Right, industrial. So I wouldn't say commercial real estate is left for dead. I think there are bright spots. Over at Citizens, are you seeing demand for other sectors that are happening? In the intro said I've seen a lot of mergers happening in energy and healthcare. I mean, those were the two that came to mind right away.
We've seen healthcare certainly pick up. Commercial services is actually an area we're seeing a fair amount. Technology, we're starting to see some spark of life in the technology sector. There have been a couple IPOs recently in the technology sector. So that is, you know, after 2 years of being basically dormant, we're starting to see that pick up nicely. Still a long way to go to get back to anything where we were, but we're starting to see that pick up. Some industrial transactions we're starting to see. So it's getting more widespread. all over most of the industry, except really office real estate. It's the only thing, but we're not seeing a lot of acquisition or discussions on that yet.
Right, and I think that's why SL Green came out. To sort of buck the trend and say, look, I know that the others are struggling, but in fact, we're doing pretty great. That being said, when you look going forward, are you concerned about the headwinds at all? The likelihood the Fed may not cut the way people had hoped. As the money that's been flowing into private equity and mergers and acquisitions, is that likely to slow down because they're not getting the cut that they thought?
That is certainly a concern. The other side of that argument is that we really are in a 2.5-year period of time where we've seen very little in M&A. If you go back to 2021, that was a banner year for M&A and for new transactions. And really 22 and 23, both because of rising rates, difficulty financing companies, to financing acquisitions, we saw a slowdown. There's only so much money that can come into these private equity firms that can sit on the sidelines. And what we hear more and more from private equity companies is that their investors are demanding return on capital, not just marks up on their properties. They actually want to see cash on cash returns. As a result, I think there's more and more pressure to sell. And so even though there are some headwinds with rates not coming down, I think other things will offset that enough that we'll continue to see M&A pick up. We're having a conference in 2 weeks that we call our Engage conference. We've never had more financial sponsors interested in coming and more companies wanting to talk about selling. Our pipelines have never been bigger. So watching rates going down, as long as the economy stayed strong, would certainly be a net positive, but I still think it's a positive regardless, just given that there's so much demand for new product right now on the street.
And just on the big picture, you talked about commercial real estate, which seems to still be an area of weakness. Are we going to see more net charge-offs for anything else that could be higher risk, whether it's lending to consumers, or are you worried about any headwinds?
We're not. We were, certainly as rates went up in 22, 23, we spent a lot of time focusing on free cash flow and what our coverages were on the company. We've seen a lot of that subside recently. We are not nearly as concerned as we were. We feel pretty confident that the worst is behind us from that perspective.
Do you see more M&A activity maybe in the banking industry, in these regionals? Are there too many regionals?
There are a fair amount of regional banks. I think we still need some time for the banks to sort out all the issues that happened over the last couple of years, but I think the trend has to be to fewer banks and larger banks. It's just a question of when, not if, is my view on that.
Ted, thank you. It's great to see you.
Nice
Ted
to meet you.
Swimmer, head of capital markets and advisory at Citizens. Thank you.
Thank you, Nicole.
Coming up next, we're going to look at the disruptor Seagate. This got an upgrade over at Wedbush. We'll explain. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders.
Not sure if you guys wanted to watch that or not. That's, I could turn it back on. Just want to see if there's anything you guys want to cover or talk about or do going into FOMC. I know we said we could look at some relative strengths of So look, here's what we'll do. All right, there's only 2 people on right now. What I'll do is let me go throw some laundry in real quick. Give me about 10 minutes. Give me about 10 minutes, and then I will be back. Let me just throw some laundry in, and then we'll go through a list. We'll go through a list of stocks. All right, and we'll get a nice game plan together, and do what it does. We'll do what it does. 15-minute. Let's see here. All right, the S&Ps. You guys know what I like to do is, what I'll do is I'm gonna put this. You can see we're already in that range, which is actually kind of funny. It's actually kind of funny we're already there. Let me actually put this 2-minute. Oh wow. Yeah, I want to get a nice run. Get up above 502, try to hold this level, and try to get a run up to like 505, man. I would like that. I would really like that. All right, so what I'm going to do is I'm going to put this here. So far, this is our range. All right, that's the low, that's the high. And I will put
he talked about the lower guidance that had hit the stock. It does seem to be weighing on shares a bit. Said that is fully the result of FX headwinds. He said they wanted to be transparent about it. It does not reflect any sort of confidence in the consumer. He said they actually are feeling good about spending. Called it restaurant spending. Said consumers are really leaning towards travel and experiences and some of the services.
I wish I could make it.
Volume, which was strong for the quarter. Said he's seen broad-based strength in the consumer that is driven largely by record low unemployment, rising wage growth as well. He did say he has seen a decent amount of stability in terms of both.
That oddly looks really good. Like it really pops. The green and orange, or green and red, whatever you want to call it. So again, I do this to have the high and the low. We'll get our range before FOMC. So I still want to see if we can get a bounce back to 405. We tested it yesterday. I have not looked at futures at all yet. This is a pretty decent level that if you can't get through 502, pan it out a little bit, and you'll see 502 was a heavy support and resistance level with that. If you try X amount of times and you just can't get up through there, then chances are you're going to break and make a new low a day. So, so yeah. Take your time. The volume is pretty minor right now because of the obvious. All right, so I'll be right back, guys. Let me go ahead and put this. Let me throw some laundry in real quick, and then we'll come back and we'll cover like everything from mega cap tech, small cap tech, large cap tech, your Robloxes, your Snowflakes, your Costco's, to your Targets. Anything you guys want to look at. MGM, DKNG. I'm just going off the cuff right now. Love. Right? Apple. Under Armour. All right, when was the last time you heard of that? Luckin Coffee. It's still trading. That's so funny. Didi. HKD. Look at HKD ripping and roaring. That's actually pretty funny. That's funny. I didn't mean to do that. I didn't even mean to do that. All right. So yeah, let me go throw this laundry in, and we'll do what it does. We'll do what it does.
Spring season next quarter, and they're estimated to earn about 95 cents per share on an adjusted basis. But if you actually go forward in the next 4 quarters, it's actually jumping by about 5-fold to over $5.63. So it appears to me that based upon consensus estimates from Wall Street, that there's an enormous amount of cyclical growth here for Seagate Technologies.
And so how would you go about an example trade, George?
Okay, so overall, I think there's been some inventory builds that have hung up some of the component manufacturers. I'm going to throw in Western Digital in that space. You could also look at Intel, Taiwan Semiconductor as a couple of proxies for what's going on in the semiconductor space. So I suggest maybe in the next 6 weeks to perhaps a couple months, you may not necessarily see a lot of momentum and push in the component manufacturers higher like Seagate, but they did declare a 70-cent dividend per quarter, or $2.80 a share. So in order to participate in this continuation with that dividend, what I suggest in this case for a trade is place a covered call. In other words, buy a covered stock. So buy 100 shares of the stock around $84.50. You could actually sell the June monthly contract's $90 strike price. This is selling the $90 call for about $2 a share. So effectively, this reduces your cost basis on the long stock position to $82.50 because you're earning that premium. So essentially, one, you get to participate in the dividend coming up, and two, this reduces your cost basis on the stock. But the only thing you just don't participate in is if the stock reaches 90 or higher by expiration in 50 days. And so, you get to participate in all these different variables together.
Understood. George Sillis, thank you for that. We appreciate it. A good look at Seagate and an example trade as well. Thank you, George. Coming up next, we're going to take a look in our 360 round all about Amazon. The company saw substantial growth, advertising, cloud computing, and generative AI. More of that in the next decade. We'll dive right in. We'll be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. Time for our 360 round, all about Amazon. And Dan Romanoff is with us, and Arun Sundaram is with us. Thank you both for being here. Dan of Morningstar and Arun of CFRA. Arun, what did you think? Because I just heard all great things: the advertising, cloud, streaming, looking at NBA contracts, and AI, generative AI, the way of the future. I mean, how are you feeling about Amazon today, Arun?
Yeah, hey Nicole. Yeah, no, I thought it was a nearly perfect quarter. You mentioned a lot of the highlights. I think the two downsides of the report. One, the soft guidance, which we're not looking too much into because Amazon typically does guide conservatively. So I think you should take their guidance with a grain of salt. The other area of caution was on the CapEx line. They did say that they're going to significantly increase CapEx this year, which kind of worries investors because that could result in some near-term margin pressure. we're not overly worried about the step up in CapEx, and that's largely because Amazon is still growing operating profits and operating margins while also reinvesting in its business. So just because CapEx is going up, I don't think you'll see any material deterioration to Amazon's margins. So we were overall positive, and we continue to have a buy on the stock. And in fact, we did raise our target price. It's now up $12 to $233.
Up $12 to $233. Dan, where do you feel this is headed and why?
Yeah, I agree with that. I thought it was a really nice quarter from almost every angle. I thought the AWS acceleration was a key takeaway there. I like the discussion around AI. That's a multi-billion-dollar generative AI. Excuse me. That's a multi-billion-dollar run rate business for the company now. 17% year-over-year growth for Amazon. That's an acceleration versus last quarter and versus a year ago. So that looks really good to me. So those are the things that I was really pleased to see. I like the improvement in the e-commerce business as well, with improvements in margins, delivery speed, order frequency for Prime members. I think those things bode well for long term. And so I agree that the guidance, they do generally tend to guide a little on the conservative side. The operating profit guidance was sort of in line anyway with expectations. So you saw a little bit of downside to the revenue number, but not alarmingly so.
When we talk about CapEx, you sort of both mentioned this in AI. And so, for example, we heard from Meta and everybody sort of balked at the spending that they were going to be doing. I don't know if anybody's actually compiled the CapEx from all of these Mag 7 names. But what's interesting, and I guess it's a good thing, that they're all willing to spend more these days to sort of advance. They have to do exactly that. Right, Arun?
Yeah, exactly. And that's why we did take our CapEx estimate up. We're expecting about $64 billion in CapEx this year. That's about 22% of an increase compared to last year. And that's largely due to AWS and all the investments they're going to make into servers, chips, things of that nature to really capture the demand that's going to be there for the next at least the next decade or so with these new opportunities in generative AI. Again, I think the big difference between Amazon and some of the other big tech companies out there is that Amazon can continue to step up their CapEx investments while also growing margins, and that's because I think there's still a lot of retail margins or retail efficiencies left to be unlocked for Amazon, and so we do see Amazon continuing to grow operating margins this year as well as next year.
Yeah. And so, Dan, what are you thinking of when you expand this out and you think about Amazon? And what is your price target, Dan, right now for Amazon?
$193.
$193. When you look at the other names here in the Mag 7 or some of the other names you follow, are there other buys that you like right now?
I think that just, you sort of commented on the CapEx number. If you started adding just between Microsoft and Amazon, that's, if you go with around $65 billion this year for Amazon and $50 billion for Microsoft, I mean, you're talking about $115 billion in CapEx. Most of that is just data center capacity, so that's a very strong number. I think Microsoft and Amazon are both sort of long-term winners in AI, and so that's something we like. And they're both long-term winners in public cloud. So those are sort of two of the biggest secular growth stories in tech right now, and both of those are really well positioned.
Right. So setting up for data center and cloud, and that's their area of strength and continued strength. Arun, do you have any buys on some other names that you're following closely here?
Yes, I mainly cover retail. I'm not in the big tech space, but in amongst retailers, we like Amazon, we like Walmart, we like some of the discounters as well, Dollar General, and I also cover packaged foods companies as well. And we have a few buys in the packaged foods area. One of them is Kraft Heinz, which did report today, and we also like Lamb Weston is another packaged food company that we do like.
Yeah, I actually mentioned your name in one of the prior segments. That being said, just quickly, the consumer, are we feeling the consumer is going to hang tough here, Arun?
Yeah, there's clearly some signs of the consumer cracking, especially among the lower income consumers. But I think the middle income and the upper income consumer is holding up relatively well. And that's why those companies and retailers that are exposed to more of the middle and upper income are doing better than those that are exposed to that lower income. Clearly, the consumer spending environment has been strong for the past few years, but there are signs of it slowing down and will likely continue to slow down this year.
Yeah. Great to see you both. Thank you so very much, Dan Romanoff of Morningstar, Arun Sundaram of CFRA Research. Thank you both. Thank you, friends, for being with me here on Trading 360. I'm Nicole Petalides. Download our free Schwab Network app. It's available in the Apple App Store 24/7, schwabnetwork.com. I'll see you at 2 p.m. for the watch list. Fast Market is next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies and more earnings names. We're going to cover DoorDash, which is up about 109% over the last year into earnings after the bell, and Qualcomm, which is up about 15% in 2024 into their quarterly report. And like Foley will break down consumer sentiment data on eBay, which has risen about 18% this year into their earnings after the close. Now let's take a look at the major indices, which are just off the session lows here. The S&P 500 down about 0.4%. The Dow Industrials up 84 points, or nearly 0.25% on the back of some gains in Johnson & Johnson and Amazon and Microsoft. NASDAQ 100 down 0.9%, leading to the downside. And the Russell 2000 small caps off 0.3%. To help me break down this market action, let's bring in my co-host, Kevin Hinks. Kevin, when you look at this, lots to talk about, but it's all about the Fed coming up in about 2 hours.
Yes. What I talked to Oliver Rennick this morning about, it's like market moving events are coming in waves.
Yeah.
Right? I mean, it was data this morning. It was earnings this morning. It's still earnings and stories coming out. I mean, some of the moves this morning are incredible. And then it's going to be Jerome Powell in a couple hours here. It's going to be, he's going to take over everything. And then it's probably going to go back to data and earnings. And boy, we're getting some big moves. You and I were talking before we came on the air. The Starbucks move is harsh.
Yeah, that's harsh. 17%. We're back to levels.
When your CEO goes on air and doesn't really have an answer.
Right. Yeah.
So, and by the way, McDonald's showed slowness.
Yeah.
Starbucks shows slowness.
Yeah.
That's a pretty interesting sign for the consumer. But the data is kind of all over the board, and the earnings are some worrisome spending numbers. I think Amazon would be up a lot more if not for the spending.
Yeah.
Because they are spending a lot of money as well. It stacks up.
Yeah.
Because they're doing quite well.
Yeah.
AWS, remember we asked the question yesterday, is someone taking market share or is the pie getting bigger? Pie's getting bigger.
Yeah, the pie is getting bigger. And those AWS revenue numbers up 17%. That was better than the expected, about 14.7 to 15%. Percent on those numbers. So yeah, we're going to cover that more. But let's bring in our next guest. That's going to be Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, you know what? April was an ugly month for equities, right? After 3 solid gains in the first quarter, April was just ugly across the board. What's your take here on the market action?
Yeah, the technicals, I mean, look, up 10% in the first quarter. And then April, basically, it's the technicals has shifted in favor of the bears. That's just the bottom line. If you look at basically the moving averages, like on the S&P 500, we breached the 50 SMA. We've run back up into it, and it looks like we're getting rejected. You can also see this reflected in the Philly Semiconductor Index. You can also see this in the NASDAQ Composite. So what's the problem with these technicals rolling over here? Well, the dip buyers don't get rewarded. You have overhead supply. That means people that bought at higher prices, which are potentially sellers. And you come into this price discovery mode where is a fair price? And, last quarter, I think AI really kind of saved the bulls to some extent because that euphoria was in place and really sent the S&P and the NASDAQ up to fresh highs, rewarding the dip buyers, encouraging the technicians in terms of being in that uptrend. But you look at the way that, you mentioned Amazon that beat on AWS, great numbers. I think you're exactly right. If we were back in Q1, this stock would be up a lot more. And then you go back to, Microsoft earnings, for example, 31% on Azure, which was above, I think, the 28% that was expected. And then look at the price performance. Microsoft is below where it was prior to reporting those numbers. Alphabet, after gapping up to all-time highs, has pulled back quite significantly. Look at AMD, inline in terms of EPS, revenue, and guidance. Look what they do to that stock. Super Microcomputer, yes, they raised on guidance. Not enough. They send the stock down, $150 here. All this kind of leads me to give you a sense of where we stand in terms of investor sentiment and their willingness to pay for this AI growth story. And it's not just about the multiple, because a lot of people will say, hey, NVIDIA is only trading at a forward PE of 28 or 30 or whatever the case may be. This is about not even the forward EPS or PE multiple going forward. It's about the trajectory of that growth and the beat rate. So, for example, NVIDIA, which reports on May 22nd, last 3 quarters, they beat by $2 billion. On May 22nd, if they come in guidance that's like $1 billion above street estimates, I don't think that's going to be enough based on what I'm seeing.
Great point.
Great point. High bar. That's why.
The MI30 chip for AMD, $4 billion in revenue. Street wanted $5 billion.
Yeah.
That's why one of the reasons it's selling off, the expectations are so incredibly high that it is hard for these stocks to meet expectations. I mean, $4 billion in revenue, not enough.
Yeah, in line on EPS revenue, guidance in line. That's not good enough when your stock was up, 100% last year on that AI boom. But, we mentioned data a little bit, Kevin, here. If you look at the ISM manufacturing number, this is one that stuck out to me, and Oliver Rennick made a point of this. Prices paid jumped up to over 60, the over 60 level, highest since June of 2022. And the new orders fell to 49.1. And has been an expansion only 2 months. I mean,
so what is that?
The price
elasticity?
Prices paid going up, inflationary. New orders falling.
Is that elasticity of demand?
That's stagflation. I don't know.
Where does that fall in the economics definition? Because higher prices, lower numbers. Sounds like elasticity.
Yeah, it's a concern, I think, for these inflationary pressures. But Kevin, Jolts declined. That's a positive. They're down 325,000 to just under 8.5 million. So that's a good number, right?
That's a big drop.
But
8.48, that's a big drop.
But ADP comes in up above expectations again.
But here's the thing: within the ADP, how about the wages data in the ADP? Job changers. Remember, we were quoting these at 15, 16%. Right. It's now plus 9.3%, down 10.1%.
Right.
So job changers, those numbers are dropping. And job stayers, 5%. That's flat month over month. So there's a little softness in that number, even though more leisure and hospitality jobs. 56,000 leisure and hospitality jobs.
Yeah.
So a beat there, but a little bit of a question in the wages and salaries.
Yeah, quitters on that Jolts report dropped nearly 200K.
So you're seeing some signs.
Yeah, that the job market's tightening up here a little bit. Nate, when you look at, you mentioned the S&P 500, it failed at that 50-day moving average to the upside earlier this week. That's a concern moving forward, but this could all change on a dime. Jerome Powell says the right things today, right?
It could, but you know what? How likely is it that he's going to do that? Anything can happen, Tom.
Yeah,
you're right. We know in this market, anything can change on a dime. Sentiment can happen there. But I think what you guys are kind of pointing to on some of those data points is important, because the whole shift about this expectations around Fed rate policy and what it means for the economy is, is this harmful to the economy where we currently stand? And so markets are going to be keen to kind of sniff out any of those data points that might suggest that there's going to be some of that weakness. We saw GDP, the advanced read last week, 1.6%. That wasn't necessarily a weak number. It is declining from, 4.9 to 3.4 to now 1.6. But if you look at the Atlanta Fed's GDP now, it's 3.9% for the current quarter. That can change too. We know that that's their nowcast, not their forecast. But you look at the Jolts data, that was the lowest since July of 2021. Okay, but pre-pandemic, we were sitting around 7 million on Jolts, so that's not enough to really rattle the bulls. Let's go to a more leading indicator, initial weekly claims. Last week, 207K. That was the lowest since mid-February, so it's not showing up there. I think Kevin brings up a good point in terms of Starbucks, McDonald's. Maybe we're at this moment where we're starting to chip away at the consumer and seeing some signs of that. So if we had 3 tiers, lower income, middle income, higher income, maybe we know the lower income are getting hit because of inflation. Maybe we're starting to chip away at this middle demand or elasticity of demand here based on those pricing pressures that Starbucks and McDonald's are alluding to. But it's not quite enough yet to get concerned. So we're still kind of in this price discovery mode, figuring out where does the consumer stand and is the current Fed rate policy restrictive or not?
Yeah, and I think that's the whole key here is the announcement's probably going to be unchanged, right? They basically pushed back any cuts to December at this point. I don't think they're going to bring up anything about raising or hiking rates because we're still in restrictive territory. And it's starting to affect the consumer. You mentioned Starbucks, Kevin. That stock is getting obliterated, down 16.8% at this point.
It's amazing what's happened to
this is
stock.
One of the best well-known brands in the world.
Yeah.
And they can't right the ship because people are pulling away from that $7 latte because now that McDonald's meal that was $5 is now 10. I mean, it's kind of offsetting these inflationary pressures. They're going to stick around, too, because wages is one of the biggest components. We saw that in the ECI data yesterday, right?
Well, I mean, yes, there's a lot going on with Starbucks, right? I mean, think about it. The comparison that Nate made between McDonald's and Starbucks, you could buy a whole Happy Meal for a Starbucks for the same price of a Starbucks. It's that Susie Orman trade. Susie Orman, stop telling me people that don't go to Starbucks. You know, she's like, don't go to Starbucks. You want to save money? Stop going to Starbucks.
Right.
But it's amazing. Their CEO was on television this morning. He didn't have a lot of answers for it. He was just saying the consumer's backing off.
Yeah.
Same thing McDonald's said.
Yeah, and I saw the commentary last night on the conference call, and it was one bad point after the next, and then boom, they cut guidance for fiscal year 24. Nate, real quick here, when you look at earnings season, we've had pretty good results. According to FactSet, we're at over a 75% beat rate here, but earnings are not providing any lift here for markets.
They're not, and I think it has to do with just the current valuation and what seems to be like every week or so a little bit more uncertainty around this whole economic environment and what it means for corporate earnings going forward. I mean, the beat rates and everything, I think we're around 54% on the revenue side and maybe around 79% on the EPS side. Yeah, that's great and everything, but it's not an outlier in terms of the last 4-6 quarters when you look at those beat rates. Actually, the revenue beats have been coming down over the past 3 to 4 quarters. That's kind of, I would say, a little bit concerning because revenue you can't fake, EPS you can. It just has to do with this forward multiple of 20 and that we haven't priced in any potential for Fed rate hike or stagflation or getting some of these surprise data points, like if we get initial claims to start to jump up for a couple weeks in a row, or if we start to see guidance really come in and more cautious commentary. It's starting to seep in, but none of that's priced in at a 20 forward PE, so I think that's why it's been kind of a lackluster response to what we've gotten this far in earnings season.
Yeah, dip buyers taking a break here at this point the last couple of days, last month for that matter. All right, let's take a quick break, guys. When we come back, we're going to get into a discussion on more earnings. We're going to take a look at DoorDash. Stocks rallied about 30% so far this year. They report after the close. Fast Market will be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking more earnings. We're looking at DoorDash. Stocks had a good run over the last year and a half, up nearly 30% here in 2024. Let's bring in Caroline Woods, senior markets correspondent here on the network. Caroline, expectations, the bar is high on DoorDash going into earnings just from the market action that we're seeing, but they seem to have done pretty well over the last few quarters.
They certainly have, Tom. As you said, up about 30% year to date, but look out over the past year, up 107, 108% over the past 1 year. So yes, the bar is high, and we've been getting some kind of weak reads on the consumer, especially at the lower income. I was just taking a look just over the past couple of days. I've heard the Starbucks CEO say many customers are more exacting about where and how they choose to spend their money. We had the McDonald's CEO saying that consumers continue to be discriminating with every dollar that they spend. That's hurting the quick restaurant service industry. And then we had Coca-Cola saying that there's some purchasing power compression, especially among the lower income consumers. And I'll be honest, not only does DoorDash charge upwards of 12% for service and delivery fees, but if you actually take a look at their menu prices, they're significantly higher, from what I've found, than if you actually go to the restaurant itself. Likely because DoorDash charges restaurants about 30% fees, commission, just to be on DoorDash, but you pay a premium for convenience. So I'm curious to see if they'll feel the pinch from consumers pulling back. Wall Street does expect that DoorDash processed nearly 607,000 delivery orders. That would be up 18% from the same period last year. In terms of the actual numbers we're looking for, still operating at a loss. Wall Street expecting a loss of 7 cents per share, quite a bit narrower than the year ago period. Meanwhile, in terms of revenue, Wall Street's looking for $2.45 billion. That would be a growth of about 20.5%. So still pretty impressive top-line growth. That being said, it would be slowing from 40% growth in the year-ago period, and also slowing from the pace of growth in the previous quarter, where they posted nearly 27% growth, so a sequential decline. But, still strong top-line growth, still not expected to turn a profit. Wall Street thinks that Q3 will be when DoorDash finally becomes profitable. So I think outlook is going to be very key here. DoorDash shares under pressure today, down about 1% heading into this report tonight. But as you said, the bar is high, and we'll have to see if they can clear it.
Caroline, 550,000 restaurants, 37 million users. The moat from this duopoly of DoorDash and Uber Eats is massive. No one else is getting in. Grubhub 9%. They're really on the edge looking in. Is this like an Uber story? Suddenly, profitability that we weren't sure they could ever get to is just going to show up and come flooding in with a bunch of free cash flow. Are we looking at the same thing? Is it just scale that's going to get them over the hump?
Well, especially if top line continues to grow and operating expenses continue to fall. I think last quarter they saw something like 20% growth in operating expenses, but then they had, almost 30% growth in revenue. So I think that if as the U.S.'s largest food delivery service, but DoorDash is also trying to diversify, get into the grocery space, get into partnerships with other retailers, just to kind of diversify. Obviously, there's other competition there from the likes of Instacart and other names as such. I do think that it's important to note that obviously drivers' wages continue to pressure DoorDash, hence why it continues to operate at a loss. But it did have this new partnership. I don't know if you saw it with Google's drone delivery arm, which is called Wing, to get food delivered by drone. They're partnering with Wendy's in certain markets. So if you get it delivered by drone, then you don't have to worry about those wage issues quite so much. So I'm curious to see what they're going to say about that, if that really is the future. I was taking a look at the analyst breakdown, though. We talk about the bar is high. We did see some price target hikes heading into this report. Oppenheimer still on the sidelines, but boosted its price target to Oppenheimer's outperformed, boosted its price target to 150. UBS bumped to 130, basically only $2 away from where it's currently trading in the neutral camp. But median price target is 137.50. So analysts see about 7% upside from current levels, 60% still in the buy camp despite this impressive 1-year performance. So the analyst community is still bullish on this name. We just have to see if investors continue to be impressed. We've seen, I heard you talking about with Nate Peterson too, even when companies are in line or even when they beat, sometimes it's not enough to see the stock move higher.
Yeah, that EPS number minus 7 cents, if that comes in positive, I think that's what everybody's expecting at this point. Bar's high here going in.
Drone deliveries.
Yep.
Please
Just give me 1 second, guys.
All right, thanks to Caroline.
I'm just eating a bowl of cereal.
Thanks to Caroline Wood, Senior Markets
And then we're gonna
Correspondent.
get
Let's
ready
bring
for this
Nate
Fed
back in
meeting.
here. Nate, when you
It's
look at this,
now,
I mentioned the EPS. If that thing's
12:30.
positive, I think the street's going to like that at this point. But the bar is really high going into here. And you know what? When you order $20 worth of food and it costs you $35, we just talked about Starbucks and McDonald's. I mean, inflationary pressures are hitting everywhere. This is going to be one of the first things people get rid of, right?
You would think so. Yeah, the absolute discretionary in terms of, if you're going to cut out your Starbucks, then you would think that this would be on the list. And it is expensive. I've certainly, utilized their services or similar services, and it's pricey, and it's nice to have that convenience. But sometimes you think, hey, if I'm trying to save costs, then I'm just going to get in the car. No big deal. So the analysts have been positive. If you look at the EPS revisions over the last 90, 60, 30 days, those have been trending higher. MoffettNathanson last month upgraded the stock. Loop Capital initiated with the buy. The technicals look relatively bullish. We're kind of flirting just below that 50 SMA. But, in terms of valuation, the forward PE here, if you take a $1.39 is what I'm looking at as a current consensus estimate. You got 100 PE basically going forward. So you're going to need to put up some good growth trajectory type numbers if you're going to maintain a valuation of that such. Implied move, roughly about $12. If you look over the last several quarters, this stock can move post earnings.
Yeah, definitely. We've seen some gaps over the last year with earnings on this. But you got an example trade for us because the option market's pricing in about $11.30 move either way, Nathan.
Sure, yeah. So, you take everything into consideration, the overall market conditions, they kind of tilted a little bit bearish on the technical side. You take into consideration DoorDash and what the analysts are saying, and maybe you don't have a clear direction of whether it's higher or lower, maybe a little bit concerned after Starbucks and McDonald's and what they had to say. And so if you had a view that you expect it to move, but you're just not sure about the direction, one breakout strategy
could
that
be
you
a
could
nice
employ
buy for
is
Tesla.
a long
You're
iron
getting a
condor.
little
This
bit
is
of a
buying
buy
the iron
trigger
condor.
here.
So what I was looking at is this Friday's buying the 122 put and selling the 118 put. And then buying the 133 call,
I'm thinking
and
about
then
it
selling
myself,
the 138 call. Noting that the
even if you
implied
take it
move
to
is
high a day,
$12. So if the
350,
options market is
184,
right, that would put you roughly at
that's a buy
140
trigger
on the
if I've ever
upside or
seen
116 on the downside.
Outside of the volume,
post
that's the only
earnings.
thing we don't.
So with this iron condor, I want to kind of take those wings in more so that I'm inside that implied move. When I looked at this, maybe about an hour ago, the net debit at the midpoint was roughly $2.95.
Yeah, let's take a look at this because Kevin and I, we looked at an example trade in AMD that worked out well as an example because the stock's down below the outer limit. So need a move type of strategy here in DoorDash. Let's break this one down. May 3rd, weekly cycles are just a couple days till expiration. Buying the 133, 138 call vertical, buying the 122, 118 put vertical. Paying roughly $295 debit. There's your risk, $295 per spread. But Kev, he skewed this a little bit because $4 wide on the put, $5 wide on the call. Break evens, you need it below 119.05 or above 135.95 to the upside.
Each earnings season takes on a little bit of a personality, and outsized moves seem to be showing up frequently here. The Pinterest trade didn't work because it went way further than the
that was a 2 standard deviation.
Yeah. So looking at these, you're paying $290 to make $4 on the downside. You're paying $290 to make $210 on the upside. But if you get the big move, you're profitable in either direction. So profitable is a good thing, right? And if you're not sure which way it's going, but you
those
think
185
it might move
calls.
big,
I don't mean to
this
shout,
is a strategy that will pay you for that.
It's got to hold here.
What happens if it doesn't move? Well, you've paid $290 for something that could theoretically go to zero pretty quickly. So you're looking for an outsized move. This has a history of some outsized moves. This earnings season is showing.
You got to break through this level here, guys. You got to break through on Tesla, like 182, 181.98. Got to break through that 182 level. But you could still, I would like to see a bounce into it. It's failed every other time that you did, so chances are that's not going to change, right? So, yeah, longer term, it does feel like you could get a little rally, even if it's for just a points or couple points. So I have up here the 185s. 185 calls for this week. Possible scalp. I'll just look at them, watch the options price. Watch level 2, time and sales on the top right. Yeah. See if this pullback can hold. That's a good sign right there. That's a good sign. Yeah, that volume is just a killer. Let's see. Let's see what happens. I'm not in this. I haven't taken it yet. I'm kind of just waiting for Fomc. There's going to be plenty of opportunity. It was just something that I saw that maybe you get a bounce to 182. Keep an eye on the options or just buying the stock itself, whatever. So just something I noticed that you could start to see. If you can hold VWAP here, you could start to see a shift towards high a day on Tesla. Just something I was bringing to the table. That's all. That's all. I got a bowl of cereal I'm eating. Just give me 10 minutes.
For the biggest earnings coverage, 3 p.m. Eastern, it's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy.
Yeah, thank you for having me.
All right, so we're talking eBay. It had earnings. The stocks had a good run. It had a good quarter last quarter. They're really shareholder friendly. But Andy, I mean, does your data support this? Because I don't know, maybe I'm just not the demographic. I haven't used eBay for years. I mean, I just don't see the I don't see the value here, but obviously a lot of users do.
Yeah, a lot of users do, but it's less users by the day. It feels like a lot of people think like you and I, where eBay's kind of the next iteration of Craigslist, both on the way up and now on the way down. The thing with eBay is, the company's doing a very good job of executing on lower costs, increasing the revenues they get for the amount of merchandise that they sell. But the fact is, less and less people use this site, and less merchandise is moving through this site each and every year. The company is aggressive about its stock repurchase programs. I think they're very good at managing the financial metrics that they have in front of them. The truth, though, is this is a company in decline, and we see that continuing for the long-term future. There's really no catalyst that we can see on the horizon that would switch eBay from, a slow decay mode that it's in now back into a growth mode in terms of users or total merchandise sales. And so, like Folio data continues to show deterioration in web visits. They had a decent holiday quarter, but we're kind of back to the same old trajectory of slightly negative, just a decomposing, slowly decomposing and decaying business that does a very good job of managing the decline so that they can continue to produce profits and produce cash to buy back shares and increase shareholder return despite the lack of growth. And so I think that will continue. I think eBay this quarter is going to have a tough time living up to expectations. But overall, this is a company that is well managed and in decline. And it's just, one of those stories that you see every once in a while. The opposite of a lot of companies we talk about on here, which are growth companies that have to manage growth in a meaningful way. Well, here's eBay having to manage a decline and doing a pretty good job of it.
Andy, when I look at a stock like eBay, I think of what could have been, right? Because they were early into this online shopping, and they were one. Look at the timeline. They were early into this, but they just kind of did their own thing, and they stayed in their little niche. And is this a company, because their fourth quarter was pretty good, the stock popped. Yeah. They gave good guidance for the rest of the year. A lot of their metrics, they're returning money to shareholders. Should we lower our expectations and just admit that this is a company comfortable in its own skin and they're going to do their little niche of sales and that's it?
Yeah, I think that's exactly right. I think that, if I'm eBay, I'm thinking, okay, I've got a pretty good business here. A lot of revenue. I can control costs in a lot of ways. The users that I do have, I probably can squeeze a little bit more out of every transaction over time because, where else are they going to go at this point? If you haven't left eBay yet, what are you waiting for? And so I think, they'll continue to reduce headcount. They'll continue to reduce that overhead cost and essentially wait until they've stopped bleeding users and bleeding merchandise volume. And, who knows when that will happen. But until then, this is a company that at least recognizes who it is, the trajectory that they're on, and is managing it in a really positive, shareholder-friendly way.
And increasing ad revenue was really a big thing last quarter, why the stock popped, even though you've seen active buyers negatively affecting this. But, Andy, do you have an earnings score going into this? Because, stock's up nearly 18% so far this year. It's had a pretty good run over the last 3 months.
Yeah, really up 23% since the last report. And we think that's setting up pretty nicely for a bearish play here. We've got a negative score on this going into earnings. The way that the market looks right now, of course, we've got a big decision here this afternoon that may impact things a little bit. But, going into this report, it feels like the type of earnings season where it's sell first and ask questions later. We saw that with Starbucks. I think that eBay is set up where the risk is definitely far greater to the downside than to the upside. So I'd be comfortable with a defined risk bearish position here.
Yeah, high bar going into earnings. That's pretty amazing for eBay. All right, great data.
Hold on. This is the first time we've ever used the term decomposing on Fast Market. I just want to note that that event.
Awesome.
It's happening. It's happening.
Yeah, great stuff, Andy. Have a great day.
Thank you, you too.
All right, that's Andy Swine, co-founder at Likefolio on this. Kevin, they're expected revenue estimates over $2.5 billion. That's growth, but less than 1% from year over year. But the EPS estimate, $1.20, that's supposed to be an 8% gain year over year. Asset light model.
Yes.
Over 130 million active users.
I mean, it's hard to argue with the results.
Yeah.
They had a great quarter last year, and they guided well.
Yeah.
Now, do you think they're going to do that again? I don't. Is the consumer getting weaker? And if what Starbucks and McDonald's and what they're saying about, is that coming over to here? I don't know.
Yeah.
But the stock's up, and the stock's had a nice run. So following Likefolio's guidance, the paper money trade I have is a May 10th, May 3rd put calendar spread. Here's the thing, Tom. Look at the divergence in implied volatility, 99 in the front month, 99.5 to 57. Tom, you can do, it looks like right now, the 48 put calendar is pricing for about 7 cents.
Yeah, we've got 10 cents up there. That's where it was earlier. Yeah. It's down to about 7 cents is the midpoint.
You can do a put calendar that covers right up along. It's the 48, so it's the expected move is about $3. Mm-hmm. Get you right down into that level, less than a dime.
Yeah, let's break this one down. This is interesting as far as the risk on it, which is the debit you pay, which would be about, we've got $10 up here, $7
like I said,
is trading right
guys,
now.
I'm almost done.
Is your risk,
my bowl of cereal.
May 10th weekly 48 strike put, selling that same strike in the May 3rd weekly options, paying that roughly 10-cent debit for it. That's going to be your risk on it, $10. Break even, so about 44 on the downside, about 52 on the upside. It might tighten up just a little bit. But the idea here, Kev, is, as you mentioned, going at or near that 48 strike. Now, option market's pricing in about a plus or minus just under $3 move either way. That sets up with the stock currently trading about 51.5 to the downside. So if you think this thing is going to grind lower around one standard deviation, this type of strategy may work in that scenario. But Kevin, that divergence between you're buying at 57% implied volatility on aggregate, selling at 99%, that's why the calendar spread is so inexpensive. Time decay is in your favor as you're short the options that have a higher theta number, and you've only got 2 days to expiration on those two, so keep that in mind.
Really inexpensive way to look at this based on, remember, what we do as traders, what we used to do as market makers is look for edge, right? And maybe the new edge is that divergence between the two. Now, doesn't mean there's no risk. There's still plenty of risk. The risk in this trade, every penny you spent on it, that's your risk, right? So make sure you understand that, but that divergence leads to a pretty, I don't know, inexpensive way to do it.
Yeah, and
look.
And to that point, if you're a little bit more bullish on this one, the call calendars are just as
deep
on the upside. Right, so if you want, if you think this is going to pop like last earnings, you do that. You just put the strike where you think it's going to be over the next couple days, and remember you got assignment risk on that short option over the next couple days until expiration on that one. But
look at that, that's a quick 40 cents, guys. I drew the candle for you too. That breakout candle right there. I said that would be a nice scalp to go to high a day. And that right there is exactly what I would love to teach people. That's a nice trade. In my opinion, I'll take that all day. I almost took it, but I had food and I was hungry. I said, let me just wait and wait for FOMC. What time is it? 1 o'clock. We got an hour coming up here. I am almost done. Man, that was a nice trade. I kind of wish I would have got on that scalp, man. Even just putting it on at those 180s to 190s, carrying it to 230, and just getting on that pop. That could have helped you with your risk during FOMC if you were to trade, right? Using that to manage risk. So, all right. Let me go let me put this bowl in the sink. I'm pretty much done. Let me go run to the kitchen real quick. I'll be right back and we'll get right into it. Man, if only I had somebody on here that took that. I would love to see if anybody took that. See if you can hold 182. That's the level we were watching. That was a nice trade, man. Fuck, that was a nice trade.
A look at Qualcomm ahead of their earnings. Let's bring in Ben Lichtenstein, senior futures contributor here on the network. Benny, stocks kind of mixed right now. The Dow's the only major indice in positive territory ahead of this Fed meeting, but this comes after an ugly, ugly April for stocks.
Yeah, under pressure here to begin the month of May, Tom, that's for sure, ahead of the Fed announcement this afternoon. And you know, off the session lows of the day, but I noticed 3 of the 4 majors are still below yesterday's lows. So that gives you an idea of how we're still kind of struggling to recover from some of the selling we saw into the end of April. Definitely a big move lower last month, as you mentioned, and today the S&P is down to 5013. I saw the NASDAQ down below 17,300. You had the Dow down below 37,800. And the Russell down to 1968. As you mentioned, large caps are kind of faring pretty well relative to the broader market or some of the other majors here, but it definitely was tied to some of the data that we saw today, the selling. We've watched rates, which have been at stubbornly elevated levels, and a fair amount of anticipation headed into that Fed meeting. Concerns about stagflation. I mean, multiple TIONSs, I feel like, that are weighing on the market here, Tom. So lots of focal points for investors and traders, to say the least.
Ben, crude oil, 7-week lows here. It's below $80 a barrel. What's causing this?
Well, we had a build in inventories today, according to the EIA. We actually had a build in distillates as well. I'm sorry, gasoline as well. Distillates saw a small draw, but we've got some peace talks, ceasefire talks, which have been progressing in the Middle East. So I think that's what's weighing on crude prices. Also, some demand concerns, I think, out there as, you know, we see rates at these higher levels. Ultimately, if we start to see the economy starting to falter, amid some of these price pressures, well, you're going to see some of that demand start to wane. So, yeah, as you mentioned, down below $70, below 80, I should say, to 79.11. Off that extreme low, but not by much here, as you can see, currently trading down today by about 3 1/3%.
All right, great stuff. Thanks to Ben Lichtenstein, host of the Future Show here on the network. But now let's bring in George Tillis, senior markets correspondent here. George, we're talking Qualcomm had earnings, and I'm looking at the chart over the last year or so. Bar might be pretty high in this one. And then I look at the reactions in Intel, AMD down nearly 10. What's your backdrop here for Qualcomm going into these results?
Yeah, well, I think first, I'll talk about the comparisons, I think, with
plays out. I feel like the risk of a more hawkish Powell for the most part's in the market at this point.
To a degree,
right? We've been prepping ourselves for days now.
I mean, I think to a degree, yes. I think nobody is expecting an outright dovish message. Therefore, it's probably in there. I still think this isn't really crucially a Fed-driven market. It's more about, let's get past this meeting. We seem to be on board with the idea that we can wait a few months if the next move likely is a cut. So that probably holds up. I think the options market, though, is looking at a 1% S&P move after this meeting. I'm not necessarily sure specifically why, but that has been the setup.
I feel like we talked ourselves out of being a Fed-driven market,
What is this,
but now we've talked
Stellantis?
ourselves into, once again,
IPO?
sitting in that seat.
Well, you're getting challenged on both sides of the
There's
Fed
Nasdaq.
equation,
Oh, no, that's
obviously.
Viking.
The inflation numbers have not let you relax about the easing story. And then, you know, the growth, I think we overshot on the indomitable U.S. economy narrative.
let's
And
go
now
run
anything
through
that
these.
complicates that and says maybe some consumers are hesitant, I think starts to create some doubt. But that's what the market needs. The market needs doubt because you had an excess of certainty at the highs and you want to kind of reset expectations. I've thought you get, you know, even an 8% decline goes back to the old high of 4,800. That would probably
Viking
reload
just
things
opened
pretty well.
up.
I'm not sure we have to get
So this is
Bit of commotion over your shoulder.
Looks like they're close.
If that's the right
this is for 80-year-olds, like people that are older that like to go on cruises. There's no casino, no slides and stuff. I don't know. I think they got, in order for them to make money, they have to go to the market.
And the stock's going to
I'll be honest.
by about 9%. They continue to have the festivities just behind us here at one
So
of
that one girl that you saw there is, I think, floor operations. You'll see her a lot
maybe this is the beginning of
on the
a parade
Nasdaq.
of them, maybe not so much, but nonetheless, it's a big day down here for Viking. Coming up, we have more of Joe T's big moves, energy, financials. They're front
I
and
guess
center
we're past that. I don't know if she's like director of operations or something like that. I think the Nasdaq really, I mean, you have the CEO. Let's see, Nasdaq, because there's two. The one girl is in really good shape. She looks like there was like 3 different ones that I just see them all the time. Nasdaq. So this is Adina Friedman. She's the CEO. And then there is... Okay, never mind. Hold on.
This is the carry-on closet. A suitcase with a one-of-a-kind patented closet system that keeps you organized anywhere. Pack all you need for up to 10 days and travel without ever unpacking. The comfort of home on the go. Unpack in seconds at Solgard.co.
Everyone in the neighborhood is talking about huge casino. I won so many jackpots this game. And that winning feeling. Huge casino. Now you get it.
Well, I'm a paid actor, and this isn't a real company. There's no way to fake how Upwork can help your business. Upwork is half the cost of our old recruiter, and they have...
Yeah, the one girl was the floor operations or something of that nature. Yeah, I'm not going to get into it.
The place where you create those special moments. We celebrate the home and the way you live in it at 3 days.
I wouldn't mind working at the Nasdaq. I would love to be a part of the Nasdaq. All right, so we have private employers on the right, poll better now. Dow Jones consensus outlook 183, down from the firm's wage. Any gains from a year ago? We'll react to the Fed. I think it's going to be a boring day. Oddly enough, guys.
Interesting moving through today, lowest level now since late March. It brings us to you again, energy. Well, you significantly increased your ownership here to 10.4% from 6.4%. Give me a quick on why, and then I'll run you through quick names.
Throughout the quarter, I'm tracking the criteria of which we're going to score on both the factors of quality and momentum. I knew that energy was looking as if we were going to increase exposure back once again. It goes from 6.4% to 10.4%. As you said, we added 5 names. We now own 13
In consultation.
and I knew once that was
She's such an asshole.
Interesting move in crude today, lowest level now since late March. It brings us to you again, energy. Well, you've significantly increased your ownership here to 10.4% from 6.4. Give me a quick one, why, and then I'll run you through quick names.
Throughout the quarter, I'm tracking the criteria of which we're going to score on both the factors of quality and momentum. I knew that energy was looking as if we were going to increase exposure back once again. It goes from 6.4% to 10.4%. As you said, we added 5 names. We now own 13 energy names, and I knew once that was affected on the close that the price of spot crude oil would be lower today.
Right.
But that's not why.
Well, but that's what I'm thinking, right? You buy Conoco, EOG, Hess, SLB, and Halley. And I mean, at a time, I think where some are wondering whether the momentum in energy is running out.
Listen, it could be in the spot price of oil, but if you tell me that oil is going to trade in a tight band, and Mark Fisher said this a year ago with us, 65 to 85, boy, that's perfect for all of these energy equity companies.
Even if the economy continues to, well, let's say if it gets a little more squirrely, like you worry it might.
If it gets a little bit more squirrely,
you're predicting that.
Nope. If it gets a little bit more squirrely, then I think as you progress through the course of this year, the supply to demand imbalance becomes more in line, and yes, there could be pressure on the energy names.
Yes. Inventory's up today, by the way. Did you see that?
I did.
Okay. Regional banks. Well, you picked up 5 regional banks. Cincinnati Financial, Huntington Bank Shares, M&T, Regions, and Hartford.
If you ask me what's the headline of the April 30th rebalancing reconstitution, it is the increased exposure in the financial sector. Steve, you're going to love this. 23% exposure.
Wow.
Now. 1 year ago, we were at 8.8. That's our second largest sector weighting. What's coming down? Industrials are beginning to come down lower and lower. Industrials had been the second largest. So we're adding names like CME,
That's
T.
so
Rowe
weird.
Price.
Sorry, guys. I know I got off
RJF
track. Let's
to
get
the
it.
Financial services names we already.
Oh, you added back Berkshire.
We added back Berkshire without question.
You just sold it last rebalance, right?
Look at that tail on Viking. That's weird.
On the last rebalance, we sold it at 384. We get it back here a little bit higher. Why did we get it back? Because we're seeing the improvement on the return to equity. That's an important quality criteria. So we have no problem. To your earlier remarks in the show, we have no problem going right back in once again. Regional banks, we picked up
We've
5
seen that with
regional
some of your
banks
mega
as well.
cap moves.
Oh my God, Joe, what are you doing picking up regionals, bro? Oh my God, you're kidding me, bro. I would love to know why. I would let them get smacked and then pick them up. I don't know anything about really about how.
What we're going to see, the massive refinancing bubble, coupled with a major write-down.
Right.
Get taken over.
Right.
This weekend.
Why would you?
M&T, Huntington Bank, Cincinnati Financial.
Oh my God.
Don't like it. So you
don't like it. Yeah, M&T is okay,
I'm Team
but.
Joe on this one. Like pick and choose. They're not all the same.
Okay. Well, final trades are next.
20 seconds a week, you lose 20% of your weight in a year with diet and exercise. That's the power of GLP-1s through Row. Connect with the provider today at Row.com/20.
I don't know. I think that's a gutsy move for Joe to add retail. To add regional banks into it. I don't know what he sees that I don't see, but this is when financial conditions are about to tighten up, and when they do, that's the class that should get hit. Like, I don't understand that at all. I really don't. And that's okay that I don't understand it, but, you know, like I said, maybe he sees something that we don't, but I don't know, man. I would definitely wait, and I feel like in order to get those banks, you need something bad to happen and then or something to happen and then get them at a discounted price. This is not about to hold well for regionals. You know, I don't know how far this is going to trend upwards, but unless it's going to ease more, I mean, it could. It could ease more. You know? It could ease more. A lot more. $19.90.
pneumonia vaccine.
So am I, because I'm at risk for pneumococcal pneumonia.
I already got a pneumonia vaccine, but I'm asking about the added protection of Prevnar 20.
If you're 19 or older with certain chronic conditions like asthma, diabetes, COPD, or heart disease, or are 65 or older, you are at increased risk for pneumococcal pneumonia. Prevnar 20 is approved in adults to help prevent infections from 20 strains of the bacteria that cause pneumococcal pneumonia.
You know, maybe this. I don't know. No comment. No comment.
Fatigue, headache, and joint pain.
I want to be able to keep my plans. I don't want to risk.
That's all I'll say. No comment.
That's why I chose Prevnar 20.
Ask your doctor or pharmacist about the Pfizer vaccine for pneumococcal pneumonia.
Am I still on target to have enough for retirement?
Am I saving enough? Is the economy turning? Can I afford for college?
You know, technology can't answer those questions, but RIAs can. And when you're supported by someone who's faced them too, it's much easier. It's more than tech, more than service. What matters is having a custodial service provider who gets you and treats
Right.
RIAs like they treat.
So what are some stocks that everybody is watching today? What are some names you guys are watching? And Apple has earnings, so I don't want to play something with a bunch of volatility or a bunch of IV priced into it. Let's go get the Fed minutes, or Fed notes, or yeah, whatever we're about to get, the rate decision. Let me see here. What am I doing? What am I doing? What am I doing? What am I doing, man?
A CFP.
Well, you know what's coming 3 o'clock Eastern time today on Closing Bell. That man right there, Jeffrey Gunlock, Double Line Capital. Right when the Fed chair finishes, we have a conversation about what the Fed chair just said, where interest rate policy goes from here, what it means for markets, and the best investments that you can make. So I hope you'll join me 3 o'clock Eastern time. Jenny Harrington, you are first.
Okay.
What's your final trade?
One Oak, they announced earnings. It's actually totally good news. Raised guidance, trading at under 16 times earnings, 5% yield. Meanwhile, the stock's down 2% today because their numbers were a little squishy just for this quarter. I'd buy it, I'd own it, I'd shut my eyes and enjoy the ride.
Weiss.
I'm going with Leidos. Leidos reported a phenomenal quarter yesterday. Since new management came in a year ago, each quarter's been better than the last. It's cheap and just perfectly positioned as a defense player.
All right. Joe T.
CrowdStrike. It was added yesterday to the Joe T ETF. I own it personally as well.
All right, good stuff. Thanks for all of
Thank you.
The information on the Joe T. I'll see you at 3.
Scott, thank you very much, and welcome to the Exchange. I'm Tyler Matheson, in for Kelly Evans today, and here's what is ahead. It is the final countdown to the Fed decision on interest rates today. Market probabilities indicate no chance of a cut today, but could what Powell says move the markets one way or the other? We'll take you through the best and the worst case scenarios. Plus, 3 more names on deck to report. It's all about the consumer, inflation, housing. Our trader will buy 2 and fade 1 name into the print, and we'll tell you which are doing which. And speaking of the consumer, the high end mostly holding up. So far, so good. That's good news for TaylorMade, the company taking a big swing at athleisure with Tiger Woods' new clothing line. The CEO will be here to talk about that partnership, spending trends, and whether an IPO may be in play for TaylorMade. But we begin with today's markets and Dom Chu with the numbers. Dom.
It's wait and see, as you might suspect, on a Fed rate decision type day, Tyler. Now, we are seeing a bit of a mixed market, but it's fractional moves and not dramatically so one way or the other. The Dow Industrial is outpacing the broader market here, up 0.25%, 93 points. 37,908 there. The broader S&P 500 is at 5,019 right now. It's down 16 points, about 1/3%. Even at the highs of the session, we were down a modest 3 points and down a rather modest 22, perhaps, if you want to look at it that way, at the lows of the session. So again, very much a wait-and-see type trading range with the rate announcement coming up later on this afternoon. The NASDAQ Composite down 0.5%, 66 points to the downside for the NASDAQ Composite, 15,591. Here is the current state of play for the macro market as we head into that big rate announcement later on. The 2-year note yield ticking slightly lower, but still above that 5% mark right now, 5.02% there. The 10-year note yield drifting a little bit lower, 4.655% there. COMEX gold up 0.5%, 23.13. U.S. benchmark crude prices down 3.5% to $79 and change. And Bitcoin prices, they've been having a rough month so far. Now down below the 58,000 mark, 57,034, down 4.5% today. And then the big cap tech trade, very much about earnings in the S&P 500 these days. Amazon coming off a better than expected report. There may be forecast left a little bit to be desired. Nonetheless, it's up 1.5%. Supermicro and Advanced Micro, both computer chip companies that disappointed in some way or another. Those are down big, about 10 to 15%. Alphabet and Meta, recent earnings announcements for the mega caps Magnificent 7 trade, up 1.5 to 1.75%. So Tyler, that's the current state of play with about an hour to go to that rate announcement. I'll send things back over to you.
All right, Dom, thank you very much. And as Dom just mentioned, we got less than 60 minutes until the Fed's decision on interest rates. Steve Leisman is now at the Federal Reserve with what to expect and what to watch for. Hey, Steve.
Tyler, good afternoon. It's a Fed meeting with, I'd say, mostly downside risks for investors, depending, of course, on how aggressively that downside may already be priced in. Talk about that in a second. The main question, just how sharply the last 3 months of bad inflation data have altered the Fed's policy outlook and what, if anything, they plan to do about it. Worst case scenario, I think, is Powell or the Fed introduces some hike possibility. The moderate case, I'd say the Fed backs off this outlook for cuts with a big question of how much they back off. Is it just temporary, or is it something where it's indefinite? The best case is they describe the recent inflation spike as just a bump along the way. Possible changes to the statement include marking down growth to being seen as moderate. Inflation, they'll say, probably remains elevated. They said it eased in the last statement. And the high-risk change would be one if they say that the goals of low employment and stable inflation are not moving into better balance, as they said in the prior statement. Most likely, Powell and the Fed play for time here. The 2-year yield has increased most of this year, and stocks are 4.6% off their highs. That's tightened financial conditions without the Fed having to change rates. So Powell and the Fed, their job today might be best to describe it as do no harm. Keep rates high, but don't create an unnecessary spike in rates or a sell-off in stocks that may not be needed. Here are the probabilities for the day. Well, May is right off the table. That's today. June, just 9%. That was 99% a couple months ago. July, well, just a 25% or 24% chance. September, less than an even chance. So here you see the market really, to the extent that it has hopes for cuts, has really moved those cuts into the fall and into the winter, with December at 77%. Now, I think it's best to expect the most moderate changes the Fed can credibly get away with, given what's happened to the data. There remains a persistent view among a lot of economists that at least some of the inflation we've seen has been seasonal, and the Fed will likely stick to the forecast that its current rate is sufficiently restrictive to cool the economy, Tyler, and bring down inflation.
Two questions, Steve. Number one is whether or not in the statement there is a reference to the possibility of interest rate hikes being brought back onto the table. It seems to me very likely that the chair will be asked in the press conference a question about whether rate hikes are a live possibility again. What do you expect him to say?
I don't think hikes get into the statement. There is a kind of, what would you say, lukewarm or backhanded bias towards cuttings, where they say in the statement that we don't expect the conditions to cut until we're confident. That could potentially come out. I don't think hikes go into the statement. I think Powell probably doubles down on this idea that our response to higher inflation is keeping rates restrictive for longer, not raising rates. I don't think he'll take them off the table, but I think he would say something along the lines of, it's not what I expect to happen.
Let me come to the question of the market as a predictor of what the Fed is going to do. As we entered 2024 or closed 2023, the market was predicting a very different reality than we seem to have encountered here. So my question then is, based on what the market is telling us right now, how much confidence should we have in what it's saying?
So, Tyler, I think of the question a little bit differently from how you posed it. Is the market's prediction for the Fed the right prediction for what both the Fed and the market believe the economy will do? The change that we had in the market's outlook is relative to the surprise in the data, both surprisingly strong economic data as well as stronger inflation data or lack of progress in data. That's what caused the change. So the market, I guess, the question is not do they have the Fed wrong? The question is, have they had the economy wrong? And I think the answer is yes, they have. That they've had the inflation trajectory wrong. They expected more inflation progress. They didn't get it, so they backed off. So this is the right call. Right now, Tyler, what I like to say is the market's prediction for the future is 100% correct for what they believe today is going to happen tomorrow.
Yeah, well, it's very interesting as we talk about inflation and the Fed's ability to predict what it's doing. You just said that they have been wrong in their prediction of the trajectory of inflation going down.
Right.
They were also wrong with the projection of inflation as it moved up. They called it transitory.
They called it transitory, but let me tell you another place they were wrong. If you want to go for strike three, they were wrong that inflation was going to come down as quickly as it did. Everybody was surprised at how much progress there was going to be, that there was in 2023. So what happened is they rolled over that trajectory into 2024, and it turned out, at least for the first 3 months, not to be right. But there are people like Goldman Sachs, they wrote a piece this morning, and they said, you know what? We're sticking with our call for inflation to come down. That's one idea. On the other hand, you have people like Larry Summers who say, hey, all of this inflation, this strong economic growth tells you that the funds rate is not restrictive enough. And Summers is out there predicting that the funds rate have to raise the funds rate. Summers is out there predicting they have to raise the funds rate.
Now, Subhadra Rajappa,
My
head
fault.
of U.S.
That
Rate
shit always
Strategy
cracks me
at
up.
Societe Generale.
I'm just
Coronado, founder of Macro Policy Perspective.
Just posting real quick. We're gonna go over some charts. Okay. We'll see what we want to trade. Obviously, AMD is weak sauce. Looking for 140 on AMDiner. Coinbase, I have not even looked at in a little bit, but we'll go over these charts. Let me go ahead and post it. Let me post it, roast it, and yeah, I'll be right back. Actually, I'm not even going nowhere.
Rates if they wanted to. You look at the market pricing, as Steve was pointing out, the market's not pricing in a cut for mid-year, so June and July is out of the question. September is a coin toss. The
June and
earliest the
July
market
is
has
out of the
priced in
question.
for,
No, it ain't. Yo, listen, do not listen to her. Don't listen to her. Y'all about to get Powell, and you are about to find out. Powell is worried about the lag effect, just like he said last meeting, but nobody hears that. They don't hear. They just hear what they want to hear.
But then the question for me becomes, as we embark on a rate lowering cycle, where is that terminal lower rate likely to be? In other words, how much higher is it likely to be than we've become accustomed to for interest rates?
So as far as the market pricing is concerned, the pendulum has completely swung the other way. Coming into this year, we were expecting perhaps a terminal Fed funds rate in and around the long run rate of 2.5%. But the market's saying that that terminal Fed funds rate should be perhaps above 4%, maybe even above 4.5%. So that's a very dramatic change in the market's perception of what the terminal Fed funds rate should be. I mean, our view is that the Fed is going to wait for as long as they possibly can before they start cutting rates. But once they cut rates, the terminal Fed funds rate is probably going to be above 3.5% when it's all said and done. We'll just have to see how the data plays out.
We'll come back to that and its implications for the economy, but it's a different spin on that phrase, higher for longer, is basically what it is. Let me turn to Julia Coronado, if I might, and ask a question that I asked Steve a moment ago. It seems unlikely that the Federal Reserve statement, said Steve, will include any reference to the possibility of raising interest rates at this time to combat inflation. But it seems very likely, I think you would agree, that the chairman will be asked about that. What do you expect him to say? How will he dance on that head of a pin?
I think that what he'll say is that it's not something that they have discussed, and it's not something they think will be necessary at this point. That so far their strategy of holding rates at what they believe to be a restrictive level for a longer period of time is the right strategy. But at the end of the day, they'll follow the data. So he'll confirm data dependency, and he will also confirm their commitment to restoring price stability. So he's always very forceful and strong in saying, we'll do whatever the data dictate in terms of restoring price stability. But at this point, I think Chair Powell is not going to want to indicate any degree of panic given the firming in inflation in Q1. There are a lot of reasons to think that progress will resume as the year unfolds. So let the data deliver. If the data don't deliver that cooling trend as we move through Q2.
Did he do it? Did the data deliver? She said it really quickly, like.
Math meetings that really struck me in a world of
all right, let's do this. So I got the FOMC. I got the page up. I got everything ready to rock and roll. So as soon as 30 and the first, 30 and the first. 30, 30, 30, and the first. Okay, so April and May. April and May. It'll pop up right here. We'll hurry up and refresh it as soon as, 2 o'clock comes around. We'll go over, let's go over the indexes first. Or if you guys have any questions, we could go look at, we'll look at the bond market. We'll look at where we think we want to be and what is it that we want to play. So if you guys have tickers, throw them in the chat. I'll post my own as well. Energy is down. What is the effect on gold? Right, you've had gold rally every time that we've had these, the SPY or these Fed minutes. You've had gold when rates and when the dollar is pulled back. You've had gold really rip. So we're gonna want to keep an eye on the dollar, obviously. That's going to be a big one. Watch Meta here, guys. Watch Meta. If you get a fake out at 440 on Meta, just keep an eye out for this. You could actually, so I just gave out Tesla a few minutes ago. There was a nice buy trigger on Tesla. And I just gave that out a few minutes ago. I just gave Tesla out right there. Wait, what's going? Oh, that's GLD. That's why. I got scared for a minute. So I gave Tesla out right here at VWAP, which was a failed breakout, and I mentioned that, hey, this thing is broken out from VWAP. Chances are it's not going to stay going higher again. Like, it's going to be just another failed breakout, and that's what it was. But it was a really nice move that paid you. So it was a nice little scalp. I drew the candle and everything. Meta. Meta. Sorry, I drank a Red Bull. Alright, I drank a Red Bull. Sue me. Alright, this bounce into here, you could start to get, if you get a bounce here and a rejection at like 181, 180.80, right in this area, you could get a nice rejection on Tesla and start to pull it back. I'm not sure if it's going to pull back right in front of the FOMC meeting, but it could. And I think these people are crazy to think that we're not going to get a rate decision the end of the summer. They don't know that. We might not. It's only a few months away, but anything can happen. And those rate possibilities can and will change as he talks today. So, real quick though, Meta. I wanted to just bring this up because it was on the thing when I brought it up. 15-minute chart. Look here. Watch for this. Watch for Meta. If it rejects, it could give you a nice little move here. Just showing you real quick, and then we're going to cover. Then we'll cover what I want to cover, or what you guys want to cover. You can see you're putting in this flat top, this ascending wedge there on the 15-minute chart. See, it's rejecting. See if it breaks down now. See if this is either a failed breakdown. If you don't see what I see, I'll try and draw it for you. Look at that. It's just a beaut of a wedge right there. Doesn't get any better than that. So I would keep an eye on it. I think it needs to pull back. I think you need to pull back here to like 430 and then get a bounce. Maybe it's a failed breakout, but I don't know. I just noticed that, so I figured I'd bring it to your attention. That's all. If you guys have tickers, please throw them in the chat. What we're going to do is let's go look at the dollar. Where do we think the dollar's going to go? We'll go with the overall indexes. Obviously, yields pull back. We're going to be long tech. If they go higher, you know, we're not going to be long tech. We're going to want to be short technology. Come on. Oil is getting spanked. It's in a downtrend right now. It broke this level of 80 bucks, and now it's got a nice support zone here. I doubt it'll break that. All right. But anyway, DXY. All right. DXY. DXY. All right, so gotta look for 106.30. I did show you guys we have a nice gap fill here on the dollar, right up here at 106.5, 106.6. If Powell starts to talk about that he's not worried about holding, you know, for too long, I want to know how the last message, how the last Fed meeting relates to this current meeting. I want to see if he still holds the same, has the same shirt on. Because last meeting was we are not blind to a lag effect, and it sounded like they're happy with 3% inflation and a tight labor market, over like just trying to just crush the economy over trying to get inflation under control when you're only, you know, a basis point or a percent away. He also mentioned that, you know, the more they do now, the more that they can do later on too. So that's also in the back pocket as well. But if you don't have to do anything just yet, then why go through it if you don't have to? You know, pretty much if rates are at 4 and inflation's at 2, you know, they have their little formulas. They have, I guess, 6 or something. I don't know. I don't know how they do it. All right, I'm not an economist. Just give me 1 second.
And maybe lock in what is, by today's standard, a more appealing fixed rate.
Yeah, it's absolutely what you should do, and you can even fix for up to 10 years. You know, adjustable rate mortgages are considered riskier because at some point they will adjust to what the market is, but the market could be lower than it is today. And as you said, if you expect rates to be lower in 5 years, as long as you're at least 50 basis points lower, that's when a refinance makes sense for most homeowners. If it's close, the refinance is too expensive and the math doesn't really work out. But again, if we expect rates to go much lower in the coming years, a 5-in-1 ARM is perfect.
Yeah. I've had almost all of the different types.
Of course, my cat wants to eat again.
An unsuccessful career in real estate. Diana Olick, thanks very much. Coming up, we're halfway through the busiest week of earnings season, but it's not over yet. We've got 3 of the biggest insurers, plus Zillow and DoorDash on deck. The action, the story, the trade there.
All right, so the dollar. It's going to be one of the first things we look at. Is the dollar. All right, looks like it's going to want to start to pull back here at 106.1. Look at the 10-year. If you want, you can write down these. You can write down the.
And less than 40 minutes till the Fed decision on rates. The exchange is back after this.
That's not good, guys. It looks like the 10-year wants to hold here and bounce. That's not a good look. You guys see that? Look at that. That could really be not cool. Right there. Look at that. It's about to hold it as support right now. That 10-year might bounce here in a minute. It may start to bounce. That's not a good look. Thank you guys for the likes. I do appreciate it. All right, let's go right. And again, if you guys have tickers, throw them in the chat. Let me know where you're tuning in from. If it's your first time here, how long have you been trading? Been trading for about 10 years, guys. If you guys have any questions about me, let me know. I trade here live every day, Monday through Friday, 7:30 to 4, sometimes 6:30. All right. So you've seen how I said I put in this box from low to high, and we'll usually run right back up to right around where we opened, that middle ground here going into the Fed meeting. It is about that time. 1:30. Abby, please. Sorry, my cat is just. I guess I'm gonna have to go feed her real quick, guys. Give me 1 second. I do apologize. Give me 1 second. I'm gonna get it, baby. I'm gonna get it. You're okay. You're alright. You're okay, love. Give me 1 second. Let me go give her some fresh food real quick. I mean, she's got fresh food. I just gave it to her. She just ate it all. Like I said, she's been going crazy for this turkey stuff. Alright, Amazon. Come here. I'm coming. Amazon's circling back up. Watch Tesla. Keep an eye on Tesla. It may start to drop down. And again, AMD, we're looking for 140. We'll cover. I'll go into that more in depth. Just give me 1 minute. Let me go run out here so I don't have to continue to leave the stream because it's about to get busy. All right, shit's about to get real. Take notice of this pattern we're putting in too. Fuck. I don't know if I want to make that dollar. It's kind of hard to look at. If that's hard to look at, let me know in chat. Let me see. I'm coming, baby. I know, she's calling me now. I'm coming, boo-boo. I'm coming. I'm coming, baby.
Treasury Department issuing some new sanctions, and Eamon Javers has this breaking news. Hey, Eamon.
Tyler, these sanctions are coming from Treasury's Office of Foreign Assets Control, just posted within...
Hold on. I'm coming. I'm coming. Hold on. Come on. Let's go get you some more turkey. No, come on. Let's go get you some turkey. Come on. I know you're hungry.
What's interesting about this list as we're looking through it now just for the first...
I'll be right back. Give me 1 second, guys. I'm sorry. Sorry about that. Come on.
And when he was with Ed effectively, if you guys don't clamp down, we will, and this
Right.
is that we will part, right?
Yeah, this is clearly the follow-through on that conversation, but also clear that, you know, the United States telegraphed this to the Chinese side. This will not be unexpected now to the Chinese side that this is happening, and it gets at this relationship geostrategically between the Chinese government and the Russian Federation. There are some that argue that the war in Ukraine now has effectively become a proxy war for the Chinese against the West, using Russia as their proxy in the same way that the United States and Russia had proxy wars during the Cold War, that this is a new Cold War proxy in which Russia has now become the proxy of China. And this now would be the U.S. effort to get at the root of that and at least eliminate some of the economic support.
History never fails to give us with lots of surprises. Eamon Javers, thanks very
Always
much.
something.
Appreciate it. All right, time now for our earnings exchange, and we are going to trade insurance, housing, consumer names today. Here with the trades, Delano Saporu, New Street Advisors founder and CEO, and a CNBC contributor. Welcome. Good to have you with us. Let's kick things off with three insurance names that report after the bell. You got your Allstate, your Aflac, and your MetLife.
Sorry, guys.
All higher
Again,
so far this
apologize.
year. Investors watching for increases in premiums to offset on.
Insurance is sad, man. For people, it's crazy. All right. So, 2 o'clock, obviously, same time as always. We get wonderful interest rate decision. I wonder if we're going to get talks of more of the last Fed meeting. You've had them talk about, oh, we could hold it higher for longer, this, that, the third. That may be true. That may be not true. Why would you take the chance? I think the longer you try to hold a tough stance, the more you put yourself into a hard landing. But if you put yourself up there to an X amount, that means like if you go up to like 6, 5.5, 6.5, whatever, that gives you more of a tool of a recovery, right? It actually helps you on the recovery side. But I do not expect them to cut or raise, but I do think we'll get cuts. I do. I think cuts will be coming because they care more about the labor market. Inflation is starting to show once China opened up that, you know. And also demand. Demand still is just kind of falling. You're seeing it in these retail earnings. They will pay attention to that. They do talk to the CEOs. All right. They talk to the CEOs about layoffs, about what's going on. They know each other for the most part, and they keep. Look at Coinbase just going quietly. Look at Coinbase just quietly going back. Let's see here. What do you guys think? 210? Kramer went ham on that guy. Kramer was going nuts on him. All right. So I just wanted to see Coinbase and see where. Baby, what is it? Come on, come up here. Come here, because I can't have you doing this, baby. You're okay. You're all right. Again, if you guys have tickers, throw them in the chat. Why does this keep doing this, man? My right AirPod is just giving me issues. Like, I don't know what. Come on.
28 miles per hour, up to 65 miles of range, and equipped with hydraulic brakes. This is the Electric XP 3.0. Fully foldable, fully assembled, ships free. Simple as that. Go to electricebikes.com and come ride with us.
We empower those who act. Those who see the correlation between predictability and probability. Those who manage risk by anticipating each movement. Flawless execution, timing, and accuracy. Identify the goal, match power with precision, reach new heights. CME Group, where risk meets opportunity.
The road to opportunity is often the road overlooked. At Enterprise Mobility, we guide companies.
Game time. Sorry, I had to use the restroom. I was getting a little frustrated there for a minute. Come on, man. And look, in the chat, just goes to top chat, not live. I just want the chat live. Okay. We got a half hour. Let's go right to the SPY. I'm going right to the SPY, and I'm going to get that because it'll be the most liquid, the most easiest thing to trade. And I will say this. You may be able to get... I'm kind of... See, we've already started to bounce a little bit here. 501. Let's go look at the contracts and see the volatility that is there. Just give me 1 second. I had to log back in real quick.
Welcome back. I'm Pippa Stevens with your CNBC News Update. Arizona state lawmakers are making the final push to repeal the state's Civil War-era abortion ban. 14 Democrats in the state Senate are hoping to win over at least 2 of their Republican colleagues to win final approval of the...
So what are we looking for? All right, we want to find an area on the S&Ps that we can get into or reject from, and it gives us a range that we know once we've gotten into it or we break out of it, we can expect to get to these areas. All right, so let's write this. I'm going to write this stuff down. That's up to you guys if you guys want to write it down. If you guys have any other tickers or ideas, just throw them in the chat. We got a half hour before this comes out. I'm still looking for 502, guys. I'm still looking for 502. All right. You know what? 504 looks good, but let's look for 502. A break of 502, we should shoot right to 504. But I think the heavier level would be 506. My cat cannot make up her mind. All right. Now I'm just using this because it's just easier to see right now.
Again this earnings season, names like McDonald's, 3M, Newell brand saying it is pressuring low-end customers.
Come on.
But luxury also showing some signs of slowing spending. LVMH, Keurig, both
I don't like the way that looks. I don't like the way that looks. All right, so we're going to go top end of the range, 506. 506. I still don't like the way that looks. 502 is our support level, and we've held it pretty nicely. No, 500. It's a nice little support level. 502. 502, 501.99. It's another minor level right there. Bada bing, bada boom. Come on, you can do it. There you go. That's how I like it to look. You guys can't tell, but this gray, it's a little off because of, it's not perfect. Actually, might fix it real quick.
We've built an incredible platform at TaylorMade, one in which most of you know well and your audience knows well.
Why?
We have 3 specific businesses. We have an equipment and golf.
There it is. There it is. There it is. All right, so let's go to an hourly chart. I'm going to show you guys something.
With Tiger Woods and Pop Stroke Entertainment, which is 36 holes of synthetic putting. But it was a very, very
502. So 502. upside resistance. If you guys again have tickers, just let me know. This is such a pain in the ass. It really is. It really is a pain in the ass. That's why I hate trading view.
A wonderful opportunity for us to expand the comprehensive nature. So I guess the flip side of that question is, what took you so long on this? I mean, you have hats. I know that because I wear them. But the other apparel, it's
505. Let's just put a box here to 505. So the SPY upside 505, 506. I already had this on my chart. And again, 502, a break of 502 and a hold 502. And look, this doesn't mean that we can't wick through 502, pull back, try to hold it, and fail hold, and then we just start running and gunning back to 494, 495. So I just want to write, see, and I already know these levels. I had these levels already on my head. I know, you know what I mean? Nothing's really changed. But 505 for the upside. 505, 506. I need, oh my gosh, bro. I need new gel pens. I gotta go get pens today. On the downside, 500, a break of 500. We're looking for 498. 498, is that it?
We thought about where we've been, but importantly, where we want to go. To bring a new brand to market, to bring a new option to the TaylorMade portfolio of brands and categories, this was a very, very clear synergy for us.
495, but 498. So yeah, 502 break. You're looking for 506, 505, 506 area on a break of 502. Not much, right? It's enough. I don't know. Hold on one second. It's always something, isn't it? Okay, downside. Let's hurry this up. I gotta hurry up. We break 500 and we're looking for 497. Come here. God damn it.
And so Sunday Red is not based in Carlsbad, California, which is the world headquarters of TaylorMade. It's based north of us in San Clemente, so we can leverage the talent in
There's a little gap.
fashion and design out of Orange County and Los
495.
and the organic golf talent that you would find in San Diego. So
I don't know why I'm doing it on this chart because I will have, I'm going to be using my other ones. I'll have options, I'll have time and sales, I'll have level 2 up for everybody. I wouldn't mind like a 502, 50250 rejection to get back down to 495. All right, so that's that. Let's go to an hourly chart real quick, and let's pull up a longer term. I wouldn't be surprised if we get some upside. Everybody's expecting downside, especially after we closed the way we closed Monday and then the way we opened up Tuesday. Monday was a significant day that we held, and then we just did not gap above Monday's price action or get up there. I knew Monday morning that we were in trouble. I did, and I said it. I said, don't be surprised if we get some downside today. All right, so 498. So we pretty much have the levels here. There is a minor level that I don't have right now, 404 on the hourly chart. That could be, 404 could be another small rejection point. I don't think I'm going to use that though.
to answer the question around normalization. If normalization is up 40% from pre-COVID in equipment sales, from pre-COVID baselines, and 19% in apparel and footwear, we'll take it. That's great. The beautiful thing is we've seen millions of golfers, both on-course golf and off.
Let's do this. Let me do this. Look at this. If I go,
purchase in different cycles and different stages of their playing abilities and development. We talked about your kids, right? What will your kids be playing, not just today, but 5 years
if
from
we
now,
go
10
here,
years from now. And then the replenishment cycle of those that have come to the game from recreational or starters to more advanced players. So we are bullish on the state of the industry right now. We believe that for the foreseeable future, we'll see constant, predictable growth, which enables us to run a very effective.
this isn't giving me, this isn't an info line, but if I had to,
That you talked about. Next, I've got to leave it here, but the next big thing in materials is carbon, you said. Carbon.
It is. We believe we are in the carbon era, right? One of the beautiful things about advanced technologies and innovative companies, TaylorMade, selfishly, I believe the most innovative of all, because we're willing to take on risk of new design language and new materials management for the benefit of golfers of all skill levels to play better. We have entered the carbon age, and so we no longer, as I was sharing with you at the break, Tyler, make drivers out of titanium faces. We have 60-ply thermally compressed carbon in the QI10 products that Nelly and Scotty are winning with, that Tiger and Rory are.
look at that. It takes us right to that double top.
David, we got to leave it there. Thank you, my friend. Tom Chu, thank you. Thanks. Got to leave it there. All right, we've got a quick news alert on Google. The tech giant laying off at least 200 employees from its core organization. That's according to a scoop from CNBC.com's Jennifer Elias.
CBS, Charlie Victor Sandy getting a downgrade at Cantor to a neutral.
Behind the company's
Cantor says still too much uncertainty.
users' online safety. As part of
That's
the
Charlie
industry
Victor
reorg,
Sandy.
Google will move some of the positions to India and Mexico. The layoffs happen just ahead of the
All right,
company's blowout.
that's that.
Coming up, this name down about 17% after missing
Downside, what?
that has bearish sentiment on the street brewing. The name
498.
analysts concerned. That's next. We're right back.
We're gonna try something new today.
TELL.
That was close. Now get the top of the circle.
Tellurian sends home workers from its upstream gas production business that from sources has been holding talks to potential buyers to sell its Haynesville shale gas business.
Let's make it happen. At Truist, we believe the same is true for banking.
498 and then
That's Tango Echo Lima,
498
TELL.
and 495.
You mean armed?
It's all connected. Asking the right question can greatly impact your future.
Are you sure you're an orthopedist?
Actually, I'm a Sagittarius. Especially when it comes to your finances.
Do you have a question? Are you a certified financial planner? Yes. CFP.
Okay, so there's that chart. Let's go here.
Why it's gotta be a CFP. Find your CFP professional at letsmakeaplan.org.
All right, guys. So you guys can see here 502 as it was resistance this morning. Looks like we still can't gain anything. If we get above 502, we got to look for the top end of like 505, 506. Possible rejection at 504. We got 15 minutes. That 504 level. Yeah, I have it marked here. It just looks like
With the Fundrise Innovation Fund, you can invest in
that's
some of
it.
the world's top tech.
Because you guys remember that once we went below this Monday's close here, this 504 level, it became a rejection point, and we tried to reclaim it. Look, you did it once, and it failed. Right? You rallied right back up to it. We do have lower highs going in here. I don't know. I'm curious. That's all. I am really curious. That's all I have to say.
Symbol RNAZ. With top scientists from Harvard Medical School, developed a disruptive
So for the upside, a breakout of 502. You got to look for the top end of the range of 505, 506. Okay? It's a dollar area. That's why I have that green box up there. I could make it red. I don't want to get it confused with the 50-day. It's green because we were above it when I put it there. But just because we break out of, if we break out of 502, we still have 504. So just be cautious of 504. If you see a stall at 504 and reject this 504 level, then you'll kind of have an idea. Okay, chances are we're going to pull back. It all depends. If I got to be honest with you, if I had to read the chart, if I had to just say, what does the chart tell me? Whether the chart knows something or it doesn't know anything. All right, what is it telling me? I gotta be honest. I would like a little bit of a pullback short term and then rally. I would. It's kind of telling me that we're going to hold and we might end up back up to 506 or so. If I had to be honest. What's up? How are you doing today? I'm doing good. How are you? I'm doing wonderful. It's that time of the year again. Papa Powell. We all gather for this moment. But I'm doing great. How are you doing? I'm doing wonderful. I'm actually doing really good. I'm thankful. I've been doing call-outs have been really good. Just being consistent is mainly another reason why I'm happy. So, but thank you for asking. Yep. How are you? How are you doing today? So if I had to say, though, just looking at the chart, it is a sign that we broke. Like the way we opened up Monday, or what we did Monday, and where we opened up yesterday, because I almost bought calls out. If you guys weren't here in the morning, I talked to you guys about how Monday was a really good consolidation day. You quickly failed and tested 507. Cool, that's no big deal. And but you quickly regained that 20-day, and it's like, okay, cool. If you look at the daily chart, 510 held. You held above it. You closed above it. When we came in Tuesday, when we came in yesterday, and I fired everything up, and then I came in to look, and I seen that we were still below Monday's low, I said, uh-oh, this isn't good. Because we made this rally, and we had a nice pullback, we rally, and we still hold 510. Like, yeah, we get a small little pullback off of the 50-day, but I could have swore we would at least get up there to 512. We didn't get there. Tuesday morning, we were still below Monday's highs pre-market and below the close Tuesday morning, because I almost bought calls Monday, or not Monday, but yeah, Monday afternoon. I almost bought calls at the close off of this 510 level, and I would have known in the morning, like, look, we turned it into resistance. Like, this was a sign that if you're an experienced trader, you would have known that Tuesday, you could have looked at everything you wanted to look at. You could have said, all these stocks are down, and the market's up. It's only up because of energy, and then once energy starts to give it up, this is what you're seeing. And what's energy doing today? Pulling back. This was not a good sign to me Tuesday morning. The fact that we did not at least come in with, like, even a small gap up, like, at the 50-day, right? And then to, like, pull it back towards the high of day or even the close. We opened below. We had somewhat of a gap down, you could say. So that was kind of setting you up for failure from the jump. If you didn't recognize it, you could join us and, you start to see those things. When you make a climb and you consolidate, and you're just seeing this is just one big rollover. And once you didn't make progress Tuesday, I felt it. Like, it was what I would call personal. It was real personal Tuesday morning. I'm like, shit. Looks like 512 isn't in the books. But anyway, we got a few minutes here, guys. We'll get Powell. I have everything up for us. All we have to do is we'll refresh this, refresh, and it should pop up right here. And we'll pull it up, scan it. The thing is, institutions have scanners where they run through, and they look for keywords at certain points. And then we'll have Powell. On here. So yes, let's see what this move's going to be. I think the initial move might be to the downside. That's where I would like to do it. If we do get a move to the downside, depending on what it says, I might try for a long. I don't know, though. I don't know. I'm not going to force a trade here, just a trade. And that's trading just to trade. So we're going to find out here in just a few minutes. Really, it's not about the decision. We know the decision, but the outlook and what is on their mind. Where's their stance for the next meeting? Things of the sort. So let's do this real quick. What do I have? I have a still 3-minute. Let me use a 2-minute actually. Anybody else like nervous a little bit? I still, man, all these years I still get like, you know what I mean? I still get like this feeling. It's weird. And when the Fed meeting comes on, I won't talk too much at all, unless there's something that like that I want to point out. You know, that like, hey, you know, like listen to what he's saying here. Like, this is a good point here. Oh goodness.
%. So
and just so you guys know, too, I will be watching gold and stuff. Gold, TLT. These are all plays that won't have a bunch of theta, you know, whatever you want to call it, a bunch of premium caked into it. I kind of feel like it might be a boring day. I'm not going to lie. Hopefully we can get this initial reaction to the downside. Try to pick up a long. Because usually you'll get the move and then we should end up right around where we are after we get the decision, which we kind of understand the decision. I think you're going to get a lot of movement from like, okay, what about balance sheet runoff? Okay, balance sheet runoff is going to be on there. There's going to be stuff with there's just going to be a lot. Sorry, I can't think clear. I have a lot of stuff going on right now. Let me get this. Okay. Boom, boom, boom. All right. Good luck. Do not overtrade. Do not overtrade. Don't put yourself in a bad spot. If there is not a clear setup, I'm going to let you guys know exactly what it is that I'm doing. That does not mean that you follow. Because I too will be wrong. And I will be wrong. Yes, I will be wrong. We'll keep it at that. All right. So we have 5 minutes. I still didn't do what I wanted to do. All right, so know the levels, right? A break of 502. We're looking for 504. You probably get your pullback off of 504, but what I want to see is something like this, a pullback, and then a possible reversal. Or if that downside is big enough, we get the reversal back to where we are. We might just get a straight shot. I mean, I don't want to sit here and say everything, but I think you'll probably get like a quick wick down and then like a nice reversal, depending on what's said here. I don't know. I'm not going to try to make any guesses, but I'd have to say down, then up, and yeah. And we should get some continuation after this, depending on what's said. Depending on what's said, we should get some continuation. Wow, I was sitting here talking the whole time and the mic was off.
And come ride with us.
Welcome to Power Lunch on a Fed Day, everybody. I'm Tyler Mathisen. We are just 4 minutes away now until the Fed's decision on interest rates. And let's get a check, meantime, on where the markets stand as we head into it. Some big reactions on earnings, among other things. There you see the industrials, the loan index that is markedly higher by 113 points. But the S&P 500 and the NASDAQ composite are roughly flat, let's call it. Starbucks, meantime, falling to a 2-year low. Supermicro losing more than $100 a share. We've been talking a lot about that one. On the upside, however, is Pinterest, up nearly 18% at $39.35. Meantime, let's get right to our all-star panel with the Fed's decision just minutes away. Joining us are David Kelly of J.P. Morgan Asset Management, Kristen Bitterly of Citi Wealth, and Jim Caron of Morgan Stanley Investment Management. Let's talk a little bit. Welcome first to all of you. David, let me begin with you and just sort of get your thoughts as we head into this meeting. I know that you are sort of in the camp that says,
2 minutes, guys, 2 minutes.
But we got to listen to what gets said.
Well, yeah, I mean, when it comes to interest rate cuts, I think the Fed's basically ready, set, wait. And so we're just going to have to wait a while here.
You got to be kidding me.
Inflation, the last few inflation reports, and CPI, just a little hot. The ECI number, a little hot. So I think they're just going to, the message is going to be, look, we don't think we're going to have to raise rates again, but we're going to take our time about cutting rates. And they want to give that sort of generally hawkish message that they just don't have any tolerance for sticky inflation, and therefore they're in no mood to cut
Excuse my language,
right now.
I'm sorry.
Kristen, so what could be the worst thing the Fed could say in its statement or in the press conference that would spook the stock and bond markets? What would be the danger
A definite no rate cut for
I think the danger
summertime?
it actually would be two things. One is that inflation is more entrenched, and two, Chair Powell is going to be asked about whether a rate hike is on the table. And so anything that would allude to that, I think you would see a market
No, a rate hike is not on the table. Stop it.
He's going to do that. I think exactly as David mentioned, this is going to be, we're data dependent. We still see the trends overall going in the right direction. We didn't have the data that we needed within Q1.
Let's do it.
So we need a more disinflationary trend to begin our rate cutting cycle.
Thank
but I don't
goodness
think there's going to be too many surprises.
All
right. All right, let's get to it. Come on, let's go, baby. Come on. Come on. See, this sucks because we got to click on it and everything. They'll have it automated. It should be right here, right? It should pop up, right?
Fed leaves key overnight
Oh my God.
interest rate unchanged in the 5.25% to 5.5% range. Says recently there has been lack of further progress to a 2% inflation target. Fed voted 12-0 for the Fed funds rate action.
It was right here the whole time.
The slow runoff of balance sheet starting in June will maintain $35 billion.
5 1/4, 5 1/2 consider adjustments target range.
Mortgage-backed securities strongly committed to returning inflation to 2% target. No rate cuts until inflation moves sustainably towards 2%.
Market's going lower. If that's it, the market's going to go lower. Look, pop. Hold on. Hold on, guys.
S&P futures getting up to a little pop here now.
Is the goddamn remote.
75.
Look, there's your breakout. Testing 502.
63 now. Down 3.
Bro. My cat messed with me. And there's a rejection. I know it. There's no way. There's no way. Okay. Recent indicators suggest that the economic activity has continued to expand. Oh, God, my leg. I just hurt my leg, guys. Sorry. Job gains have remained strong and the unemployment rate has remained low. Inflation has eased over the past year. Here's the thing real quick. While I read this off. Happy Fed Day, Anson. Listen. Understand that we could get a different Powell to a different press release, okay? Just remember that. Powell could act totally different from this. And you want to go with this. The committee seeks to achieve maximum employment and inflation at a rate of 2%. So right now, just reading this, they really want 2%. Okay, cool. Higher for longer. Over the longer run. The committee judges that the risk of achieving its employment and inflation goals have moved towards a better balance over the past year. The economic outlook is uncertain, and the committee remains highly attentive on inflation and risk. To inflation risk. This fucking AirPod, man. I'm sorry for cussing. I do apologize, but it should not be going out like it does. All right. In support of its goals, the committee decided to maintain the target range of federal funds rate at 5.5 to 5.25 to 5.5%. In considering any adjustments to the target range for federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risk. The committee does not expect it will be appropriate to reduce target range until it has gained a greater confidence in the inflation is moving sustainably toward 2%. In addition, committee will continue reducing its holdings of Treasury securities and agency debt, which we already see. I showed you guys that earlier, right here, right there. That's it. That's one of them. Okay, that's one of them, and that's going to allow the S&P to also go lower. All right, showed you guys this earlier. Oh my gosh. I think the market's pulling back, guys. I'm going to tell you right now, just reading this, I think we got to wait for Powell, but okay, hold on. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities beginning in June. So, talking balance sheet runoff. Why does the AirPod continue to... It's not dead. Slow the pace of decline of its securities holdings by reducing a monthly redemption cap on the Treasury securities from $60 billion to $25 billion. Okay, so that's good. So they're easing up on balance sheet reduction. So this is how they're going to try to maintain a soft landing. They're not going to increase. They're decreasing balance sheet runoff. They're pretty much there, and I said that last meeting. For anybody that's new here, I said he's pretty much saying balance sheet runoff is done. I said that for the most part. They're done. So this is the beginning of being done. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at $35 billion and will reinvest any principal payments in excess of this cap into the Treasury securities. The committee is strongly committed to returning inflation to its 2% objective. It'll get there eventually. And assessing the appropriate, that was not what they said, but in assessing appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy at appropriate if risks emerge that could impede the attainment of committee's goals. The committee assessments will take into account a wide range of information, including readings on the labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. Okay, this last thing right here is telling you, hey, we're watching earnings with all these companies that are down and out, talking about the consumer is pretty much starting to get strapped. That's what that's telling you. We remain to talk to CEOs about layoffs. We're still looking. We have our binoculars and we're looking and seeing what's going on. If we have to cut, we will. I think the market right now likes the fact that which we were given, okay, a heads up on balance sheet reduction, which the market is kind of feeling right now. Two, you have them pretty much saying, you know, if we need to cut, we will. But we're still worried about 2%. It feels like they know they're going to get to 2% over time. We got to wait for Powell. I think you got to wait for Powell. Let's go look at yields real quick and the pricing in of rates. Let's go to CME. I got to put these things together. Got to put these things together here. January, March, April, May, June. Okay, 90. So that jumped up to 90%, 89%, 75%. September 52. Yeah, September's it looks good. September's crazy. They're still saying, damn. I want to see January. Look at January. January 2025. They're still right now 36.7. Let's go to doesn't seem like much move. We reiterated this last time that balance sheet reduction or balance sheet runoff was about done, and they're starting to slow that up. I don't know. We gotta wait for Powell. I think this talk about we're gonna hold rates at 2% or until we get to 2%. Like, what are you saying? You saying you're gonna hold rates until you get to 2? Like, is that what it's gonna take? Is 2% before you cut? Like, come on, guys. Come on. You know you're gonna get 2% inflation. It's not like inflation's just gonna continue to run 5, 10, 15 for 20 years. All right, you're going to get it in the next few years. By next year, if things remain the same, you will have it. You'll have it. You might even have negative. Right? So, I mean, we're what, 2-3 years in on this inflation shit? You know, from when, you know, we went through a year of just craziness. The following year, data got better. We're on that, you know, third year, and we're down at just about at the target. So give it that 4th to 5th year, and we should be okay for the most part. Depending on what's going on. You know, depending on what's going on. They may have to raise prices because it sounds like they're trying to raise taxes on everything and everybody. Take. So, that's the administration. Take. Okay, so we got a pullback here on the 10-year. We're kind of just hanging out with where we are. Watch gold. Okay, watch gold, watch rates. Like TLT, HYG. TLT is just right where we left off at. Sorry that it's on a 15-minute chart. Oh my goodness. Alright, so that's a nice rally pullback. Let's go here. Man. I love all these people that say there's nothing wrong with the economy. I mean, they're right. Okay, yeah, you're right. But banks aren't safe just yet. And the longer we hold up here, the more the chances of doing more harm than good, they just become more of an issue. You know, now if they had raised rates a little bit higher, that would give them more room to lower rates. I don't know. We'll see. I'm not an economist. Again, I'm not going to try to act like it. I don't know, man. I think if you're telling us that you need inflation down to 2%,
that's from the Federal Reserve. And I think the one thing that strikes
exactly.
me is they could have cut the Treasury runoff
exactly.
from 60 to 30.
Well,
the fact that they went that extra 5
my
million,
guy just said it.
Doesn't sound like a lot, but it does say
he just said it.
Trying to
Hold
send
on, I'll let you guys
here
know
that they're not going to be too hawkish here. So if anything, I would regard the statement as being slightly on the dovish
what's
side,
his name from?
And it gives me more confidence that they won't hike again, but they will eventually cut rates this year.
I'm going to come back to all of you or several of you on a terminal question here about the terminal rate of interest rates. But Rick
Santelli, right here. Listen to this.
You know, to me, it's not that my
the GDP,
or many
like we said this morning,
confidence in to gauge the future.
We went from like
2.33
down to 1.
Rate of change argument. It's impossible to look at the GDP report and not say that growth is slowing. The rate of change is slower. So, yes, the economy's fine, but it's much less fine than they thought it would be. It's much less fine than the previous quarter. And if you looked at the pricing components in the last GDP report, inflation, the rate of change, is moving back up. So it isn't that stagflation's here. It's that you can't put your head in the sand, okay? We had guidance from a dovish Fed that was very wrong, okay? Didn't hear much grumbling about that. But to have forward-looking notions regarding the glide path and rate of change of the economy that may point to stagflation, that to me makes sense, and I don't think we should ignore our eyes. Our eyes aren't lying. Things are slowing but still growing, and inflation stopped going down. You could call it anything you want, but what you can call it is a reason to ease.
How about what Rick just
Watch
said?
the cues here if they're going to break.
Well, I'll say something. Just
ahead,
briefly,
Bob.
just from the stock market's point of view, I cover the stock market here. The reason the S&P was down 4% in September was not because people were concerned that earnings or the economy were falling apart. The concern was higher for longer interest rates would bring down the multiple. So instead of 21 times forward earnings, we went down to 19 and change because higher
Now
for
we
longer,
gotta
of
sit with
course,
the number and
impacts
just kinda
future stream of earnings or the
sit here
perception
till
of
we
the
get
future stream
Powell.
of earnings. Now, if there is some kind of slowdown in the economy, which we don't see yet, or
No,
the job
we do
market
see
slows
it. What
down,
the hell are you
then the
talking about,
earnings numbers
goofball?
themselves are
You
gonna
didn't just
start
look at the
coming down,
GDP
and that's a
number
whole other
from what it
scenario.
was the
Rick
past
says
two
we are
quarters to
seeing
what it
a
was
slowdown
now?
in the economy. Rick said you got to look at
Yeah.
the numbers.
Yeah,
they
but
are
Tyler,
slower.
Yes,
Tyler,
they
here's the
are.
thing. Jobs numbers, which is what matters, are still pretty robust.
I'm going to let Steve jump in and then Jim.
true.
Steve, go ahead.
I'll keep it quick. The idea of stag, that means stagnate. It means we're not growing. A slowing in the pace of growth is what we all have wanted. It is the soft landing scenario. So it would seem a little bit extreme to me to jump from we got the slowdown we wanted to the idea that the plane is stalling and about to crash
Coinbase
land.
just
Look,
slowly
I
going
think Rick
higher.
is right. You got to factor that into your possibilities.
AMD
I
did
just
not
don't think it's the
drop.
most
Take notice of that.
probable outcome
There was no
because
volatility
of what
with
you
AMD,
expect to
guys.
happen with prices in that scenario. In
If
a
AMD
scenario
holds
of
up, I might
stag,
trade
you
AMD
get
to the
D,
long side
not
here.
Inflation.
Well said. Jim, I want to get your final thought, and then I'll go one
Sorry
more
if
time
that's
to you,
too
Kristen
loud.
and David.
You guys let me know if it's loud, not
look,
loud.
I think it's premature to talk about stagflation, but there's a lot of noise out there, so let's focus on the signal. Tyler, you were going to talk about the long-term terminal rate. I call that the forecastable horizon of Fed policy rates. What the market has been very stable on is that the market still believes that the Fed policy rate's going to 3.5% to 3.75% sometime by 2026. How we
True.
get there, how quickly we get there in 2024 and in 2025, there's going to be a lot of debate about that, and there's going to be a lot of noise. But what keeps the market stable, equities and fixed income, is if that longer-term forecastable rate stays stable. And right now it's staying stable despite all the confusion in the markets, and that is actually a blessing for asset prices at this point. If that rate moves higher, that could actually spell problems.
So that's
What's
where I
wrong,
wanted to
Turkey?
end
Come
things,
here.
and that, Kristen, why don't I turn to you about that long-term terminal rate for interest rates? Jim just said 3.5, 3.75 by 2026. That's a little higher than we've been accustomed to over the past decade and a half, but maybe it's just not too hot, not too cold.
Exactly. I think it's higher than what we've experienced, certainly, and it's higher than what expectations are. I think since we've seen resilient growth, and I'm going to go back to something that Steve said, where it was, we are seeing.
Can I
a decline
ask
in
you
the
guys
growth rate.
an
We're not
honest
seeing a contraction.
question?
We're seeing a slowdown in growth, which is exactly.
I wonder
what the Fed
if some
wants to see.
people
Whether that's
even
the
know
data
what the
that
hell
we've
they're
seen,
doing.
In GDP, whether
really
that's
wonder.
the data that we saw in Jolts this morning, and so finding exactly what is that neutral
Sometimes
rate and what is that balance
I
is something
wonder.
that I think that is going to take its time.
I just
and
seen
it's
the
gonna do it
funniest
gradually
shit.
in
I'm
terms
not
of the
gonna
rate
say
cuts
it.
that we'll see in 25 basis
God
point
bless.
increments, that if we get the data from an employment
God
standpoint, we
bless.
get the data from a disinflationary
It's okay.
standpoint,
I
we'll
just don't
still
want nobody
see
getting hurt.
maybe even up to 3 cuts this year.
Listen,
Mr. Kelly, you get the
I
final.
said this a little bit ago. I wouldn't be surprised if it was a boring day. I kind of like slowly got that in my mind, and I'm like, please, Lord, don't give us a slow, boring Fed day. But I feel like it might be. We need Powell to open up. We need him to not be like what do you call them when they don't want to do anything? We just need Powell to open up when we ask questions. Okay.
Down. Unemployment
That's
is
all.
very low. This is actually a pretty good economy for Main Street. Not quite as good for Wall Street if you really want.
I'm gonna go
short-term
grab
rates to come down to 2.5%.
an
but
energy
frankly,
drink
I think
and
this is a
another
glass,
bottle of
not
water,
just half
and I'm
full.
gonna
This
be
is a
right
glass about
back.
80% full here.
All right, that wraps our conversation.
praying
Thanks
to
for
the
a
good Lord
lively
above it's not
conversation.
gonna
We
be
stirred
boring.
the pot a little bit there. Thanks so much to all of
If
you.
anybody was
for
here,
your participation.
a half hour leading up to it, you guys heard me say, I'm afraid. I hope to God it's not boring. I'm getting this feeling like it's going to be boring. It might be the same talk as last time. And we need to look on a daily chart where that's going to put us. And if you guys want, in my opinion, what I think is a good tracker for future price movement, financial conditions, and your bank term lending. All right, credit spreads. Right here. You start seeing this rise, you should start to see the SPY go lower. Along with liquidity. All right, this in part ties in the financial conditions, credit spreads right here. I think that this goes a little bit lower. All right, I think it does. It's supposed to come out every Wednesday. I don't know if you need like a sign in my account type stuff. I'll probably be getting this data late. Comes out supposedly every Wednesday. Let's see what has moved the most. Look, technology, software infrastructure went green. I'm kind of wondering if AMD is going to be able to turn around and semiconductors kind of turn around a little bit. Look how the market changed, guys. We got a nice little bounce back here. There was something I was wanting to do with this. Shoot. There was something that I was wanting to do here. Oh my god, I just forgot what it was. I wonder if we can pull up his opening statement, but look, we're going to start turning this into resistance. That's not a good look. You're going to start turning that into resistance, it looks like. Let's see. 50140. Okay, so Microsoft. So an eye on what sector to look at. You have banks, insurance, but technology, as far as technology is concerned, Oracle, Adobe, Microsoft. All right. You really have, because of yesterday, Pinterest, Meta, all right, internet content and information. Meta, Google. Meta looks stronger.
It may be a low probability that we get to stagflation, but you can't dismiss it out of hand.
No, listen, Tyler, there was a lot of ifs and maybes that were just
I'm going to go through a couple charts real quick before Powell comes out. We got 10 minutes, guys. If you have questions, please post them below. If there's anything I can help you with, whether it's trading, questions about interest rates, the Fed decision, what's going on, what happened, throw it down below, and I will do my best to help put you on the right side of information. And it is not, we are not on a break right now, so... Listen to what he's saying.
It's
3 point. Listen to this.
Low probability that we get to stagflation, but you can't dismiss it out of hand.
No, listen, Tyler, there was a lot of ifs and maybes that our guests put forth, okay?
He's
Maybe
right.
This will happen. I'm a numbers guy, okay?
Right.
I look at
GDP fell off a cliff.
GDP in the first quarter was 1.6.
Right.
In the fourth quarter last year, it was 3.4.
Exactly.
That is much slower. And
Yes.
if our guests say, well, wow, 3.4 was too strong.
This is what's
I understand
important.
that. But what was the consensus call? 2.5%. We got 1.6.
Damn, this is crazy, bro.
That's slowing. And if we look
Are
at
you
the GDP
serious?
price index, it was 3.1. Okay. Last look, it was 1.6.
I can't get over 4 viewers. God damn.
2%. There is no denying that.
I gotta show my face reveal.
The numbers the government puts forward are
Damn.
accurate, and many who look at the labor market
I gotta be
don't
honest.
think it is. But I will go with
I think we got the
numbers. I don't
best
like
and
changing
most winning trades
midstream,
going on
so
here
it could
on
be a
all
consensus
of
call
YouTube.
that
I would put my own money on it.
stagflation is a but it's
I'm gonna put my own money
higher
on it.
probability than it was a month ago, and much more significantly,
I'm a
higher
stand-on
than it was
business.
a year ago. And once again, the guidance from the Fed has been very wrong.
Looking like
People want to blame the
looking like
market.
the rest of the public sleeping on it.
Point to anything you want, but even the Fed chief.
All right, so I'm going to keep my eye on Coinbase breaking out, Meta breaking out. If we're looking at and if we're looking and talking upside, all right. I just seen something on Twitter, crypto, or I should say Bitcoin. Bitcoin's still got a ways to make up, man. I don't know what Coinbase is doing. All right, look for Bitcoin to hold 57.5, 57.4. Look for it to hold this area here, 57.4. Yeah, 57.5. All right. If it can't hold it, which I think it could. I think it could. I would like a bounce back of some sort, but we don't have anything stopping us to fall either. So don't listen. The market may sell off. When I say we listen to Powell, but we pay attention. We pay attention to the notes, and we listen to, like, we hear Powell. If you remember, about 2 years ago, a year ago, the notes came out, and they said one thing, and then Powell came out and said one thing. He said this the exact opposite. And the markets, he sold the market off. But we were like, there's no way. Like, you're listening to the notes. Like, that is what you guys said, because they have a 2-day meeting. They had a meeting yesterday and this morning. And now we're getting that, where it's Monday and Tuesday, and then it's today. All right? And then we get the information today. So, the market liked that balance sheet runoff is stopped, and we talked about that last month. So that's liquidity. That's a good sign. I think the market wants to question, are you going to wait? Are you telling us that you're wanting to wait? And that is the questions that need to be asked is, are you telling us that you're waiting until 2.5% or 2% inflation numbers before you cut? Like, you're seeing GDP come down. This is the first sign of initial jobless claims starting to rise. You have just numerous things, right? Between GDP, unemployment, and industrial production and retail sales. You're getting retail sales now, guys. They're not good. Starbucks, look at it. Ulta, not good. Right? McDonald's. They're all saying the same thing. Nike. Okay? So, once they start running out of money, the consumer, they stop spending less. And when they stop spending less, or when they start spending less, that means that those companies that provide people jobs, they start laying them off. And this is that's why they say the jobless claims and unemployment is the last to go. Because it's the last to happen. All right, before you know, you're like, okay, shit, we are in a recession. Energy's high, rates are high. You know, people are just done, and it takes 1.5 to 2 years before so. My cat's going crazy. So, are you telling us you're going to wait till 2% before you cut? If then, I'm gonna start pricing in a hard landing. I'm gonna price in a crash. Because you brought up the lag effect last time. I mean, if we go to the FOMC again, the committee seeks to maximum employment and inflation rate of 2%. Okay, over the long run. The committee judges that the risks achieving its unemployment and inflation goals have moved toward a better balance over the past year. The economic outlook is uncertain, and the committee remains highly attentive to inflation risk. Okay. You ain't going to have much inflation if the GDP numbers keep dropping. That's number one. They're going to keep it here. In considering any adjustments to the target range federal fund rates, the committee will carefully assess incoming data, the evolving outlook, and the balance of risk. The committee does not expect it will approach. So you're saying you just need like a quick jump in unemployment, like where one of these Thursdays we come in, we're expecting 220, 215. Maybe we go a couple weeks and we're looking for 225, 228, and bang, we get a 280. right? Massive layoff start. They started with the drug. They started with drug test, right? Not raise your hand if you want to leave, right? It's or they might say raise your hand if you want to leave and or drug test if nobody volunteers. Bang! Out of nowhere, we get a big initial jobless claims. Is that what they're going to wait for those things? Okay, then I think you see this market start to price in a lower. I think you see this market start to go a bit lower. It does like the fact that balance sheet reduction is easing, so there isn't going to be as bad of liquidity concerns. You got to think about the banks too. What are you just going to keep going until you get a couple more banks to shut down? I think those questions need to be asked. Are you waiting for 2% before you cut rates? Is that it? That's what I would ask.
Or what inflation's markets, or are they both equally wrong, equal amounts of time?
Well, I think you're both spot on that it's like predicting the weather, 10 weeks out. But investors should invest based on the climate, not the weather. And we've got a good economic climate here. We've got a climate which seems to allow steady economic growth. I do think that inflation will gradually moderate as it did for many decades before the pandemic. And the unemployment rate seems to be pretty low, and workers don't seem to be demanding huge wage increases. So the climate's pretty good. The weather's going to bounce around, but long-term investors, shouldn't play the trading game here. They should invest based on that climate, which, as I said, I think is pretty positive.
Good wisdom there. Mike Santoli, your reactions to the Fed decision and what we might expect to hear from Chair Powell.
Yeah, clearly the market is taking it as the Fed electing not to turn more explicitly hawkish. There was perhaps some idea that it might do that. It just acknowledged the data that's happened in the 6 weeks since the last meeting. And of course, in those 6 weeks since the last Fed meeting, 2-year yields, 10-year yields are both up 40 basis points.
Wait for the pullback into
so there's
it.
been some market, tightening of financial conditions. The market, the Fed wants to preserve optionality, keep its options open as it usually does, and that does mean being data dependent. So I think that that's sort of better than we could have feared, perhaps, and from the market perspective. The issue to me is the bond market has implicitly.
What time is it? Oh, we got 1 minute, guys. Let's go find Powell.
As the Fed has been testing the economy's tolerance for higher
find
short-term
Powell.
rates. So far, it's been okay, but we're searching for this new equilibrium out there. And I do think that in the press conference, what the market would like to hear is that Powell still thinks you can have inflation continue its decline without undercutting economic growth. That was the main premise of the December pivot. And if he sort of goes back on that and starts saying, well, maybe the services sector really does have to be restrained more to get wage growth down, and I don't think the market wants to hear that there's going to be that economic cost for a resumption of disinflation. I also think they want to hear him point out that PCE inflation is not terribly far from where the Fed thought it was going to be by the end of this year at the latest reading. Remember, there's no dot plot in this.
And we're seeing energy go lower too, guys.
Dance around in his response.
Quick final
thought. We're
We're
seeing energy go down as well, too. So I want to see.
Building your online business?
Oh my God, I'm so sorry. I'm so sorry.
Go to Wix.com and set up your store.
What does that sound like?
Basically, at this point, how much is that a structural change? Why is this the case? Is he going to come out and say essentially?
My colleagues and I remain squarely focused.
Bro, come on.
To promote maximum employment and stable prices.
No, Ricky, you're a goofball, bro. Stop it.
The economy has made considerable progress toward our dual mandate objective.
And that's very good news. But inflation is still too high. Further progress
There we
in
go,
bringing
we got
down
it.
is not
It's up.
assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation.
I knew it.
And the
Y'all
risks
got
to
pump
achieving
faked.
our employment
What did
and
we say?
inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly
Let me know if you
economic
guys can hear me. I'll let you guys know what I do and don't do.
Recent indicators suggest that
spy
economic
up.
activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter,
That was a fail and
private
hold of
domestic final
502.
purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected, although some measures of short-term inflation expectations have increased in recent months.
I thought we would go higher.
Longer-term inflation expectations appear to remain well anchored, as
The chart
reflected
had
in
to
a
tell
broad
me
range
anything?
of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence.
We're just back and
in
forth,
particular,
guys.
and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market.
An unexpected weakening
We
in the
know
labor
that
market, like I
reducing policy
stated a little bit
restraint
ago.
Too soon or too much
to you
could result in a reversal of the progress we've seen on inflation.
Yes.
At the same time, reducing policy
I
restraint
literally
too
just
late or
said
too
all
little
this.
could unduly weaken economic activity and employment.
Yes.
In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities.
Does the market
run,
price in a soft
we're leaving
landing?
the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities.
He just said exactly what I said.
With principal payments on agency
You're
securities
seeing
currently
retail
running at
get
about
hurt.
$15
Consumers
billion
are
per
hurting.
month,
They're
total
spending
portfolio
less.
runoff will amount
Initial
to
jobless
roughly
claims,
$40 billion per
boom,
month.
rise out of nowhere.
The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition.
That's what I'm trying to
reducing
figure
the
out. What is the
possibility
market
that
going to
money
price
markets
in?
experience stress, and thereby facilitating the ongoing decline in our securities holdings.
I think we go to
that are consistent
506. I
with reaching
think
the
we
appropriate
might
level of
try it,
ample
but
reserves.
we've been sitting up here for a while.
We remain
I
committed
don't
to bringing
know.
inflation back down to our 2% goal
it goes.
and to keeping
Nail it.
longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
There it goes.
To conclude, we understand that our actions affect
Fuck, I
communities,
should've took
families,
it.
and businesses across the country.
Watch 504, though.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
He seems to be in a good mood today.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive.
Watch
and is weighing on
504.
demand. And there are a few places I would point to for that.
The
You
labor
can start with the
market.
labor market. So demand is still strong, the demand side of the labor market in particular, but it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the Jolts report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the Jolts report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also we look at surveys of workers and, surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that that the data will have to answer.
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Thanks for taking our questions, Chair
So
Powell.
it sounds like they're going to cut
I wonder, obviously,
when they
Michelle
get a
Bowman has been
surprise in
saying
numbers.
that there is a risk that rates may need to increase further, although it's not her baseline outlook.
No, there is
I
no
wonder
risk.
if you
Just
see
stop.
that as a risk
Jesus
as well,
Christ.
And if so,
Why
what
do they let
change
these people in
conditions
here?
would merit considering raising rates at this point?
No, shut the
So
hell
I
up.
think it's
Go
unlikely.
leave the fucking
that
building
the next policy
with that
rate
stupid
move will
shit.
be a hike. I'd say
Please.
it's unlikely.
Where do they find these
policy
people?
Focus is really what I just mentioned, which is how long to keep policy restrictive. You ask what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not.
No, we
that's not
didn't
what
just
think
have
we're seeing,
GDP
as
go
I
from
mentioned.
3.1 to
That's something
1%.
like that is what it would take.
Come on,
We
dude.
look at the totality of the data
Jesus
to answer
Christ.
that question. That would include.
That's not a good look for
inflation,
women. She just made what?
Expectations and all the other data too.
Why you got to do that? Jesus Christ. I don't understand these young.
Well,
young
I think
people.
again the test.
I
What
know
I'm
you're
saying
better
is,
than
if
that
we
woman.
were to come to that
That's not a
conclusion
bad
that
look.
policy weren't tight enough,
That's
to
her.
achieve
That's not
that.
y'all.
So it would be the totality of all the things we'd be looking at. It could be expectations. It could be a combination of things. But if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
I would look for a rejection.
Thank you,
up
Chris
here.
Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy
Ew.
rate are going to depend
It's
on
so
the incoming
expensive.
data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts, and those would be
Yes, he
two
keeps
of those
going
paths
there.
would be
You guys
that we do
hearing
gain
this and
greater
seeing what's
confidence, as
going
we've
on
said,
and tying the two
that
together?
inflation is moving sustainably down toward 2%, and another path could be, an unexpected
Jobless
weakening
claims.
in the labor market. for
Yes.
example. So
You're
those
seeing
are
it
paths
right
in
now.
which-
Retail
in which
earnings,
you could see
bad,
us,
not good.
Cutting rates. So I think it really will depend on the data. In terms
Rates are
in terms
coming
of peak
soon, and
rate,
he's telling you,
I think really
not
it's the same
necessarily they're
question.
not coming soon, but
I think the
don't
data
be
will
surprised
have to
within the
answer that
next
question for us.
4 months,
Can
3
you just
months.
follow,
By
on the
July,
path
we
where
get a
you might not
surprise
cut,
in
is
initial
that-
jobless claims.
You mentioned that it would be inflation persistent. I mean, is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably.
Bad
down to
news is
2%.
good news.
For sure, one of the things we'd be looking at is the performance.
That's where
of
we're at right
inflation.
now.
We'd also be
If
looking
y'all
at
are
inflation
listening.
expectations. We'd be looking at the whole story, but clearly, incoming inflation data would be at the very heart of that.
And we should get it. Energy's starting to pull back.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained, tighter financial conditions will be needed
That's
to
a good
resume
question.
the sort of disinflation
That's a good question.
we saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at
Bank-term
growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably, that's what we're tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year.
Yeah, we're just
So,
stagnant.
What's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing, and also even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either growth or a strong labor market in and of itself
Looking for a 504
automatically,
test.
Create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else
Damn,
like to
thing
see
is just
high
monster.
wages, but we also want to see them not eaten up by high inflation, and that's really what we're trying to do is to cool the economy and work with what's happening on the supply side to bring.
This might be the
economy
last
back to
rally
2%
before we get a
inflation. Part of
pullback
that
off of
will probably be
bad economic
having
data.
wage increases
Unless,
move
bad
down
data is now
incrementally
good
toward
data.
levels that are more sustainable.
More sustainable levels to reach inflation goal.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way. What we said is that we need to be more confident, and
That's
we
the
said,
question.
My colleague and I today said that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Yeah, the labor market.
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter?
I heard the
see
question wrong. I'm
strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking now.
Wrong. That's a lie.
Mr. Chair, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter? And what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah. So we will, we will put the thing, we have put the thing under a microscope. I will say nothing is going to come out of that that's going to change the view. I think that, in fact, we didn't gain confidence and that it's going to take longer to get that confidence. But confidence, I just think, you know the story. What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened, I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast.
Well, you're seeing energy pull back. That's going to help.
Lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and
What's the question now?
I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates, and this is a plan we've long had in place to slow, really not in order to provide accommodation to the economy, but
looks like the whipsaw was right. Get everybody all bear it up, just to rip it back in their
of shrinking the
face
balance
up
sheet
higher.
where we want to get it is a smooth one and doesn't wind up.
Can't say we didn't see that coming.
With financial market turmoil.
Should have bought calls beforehand, but I was a little late trying to get Powell up. I was going to. I was going to buy some calls just to.
Boris from Bloomberg. Two questions. First, simple one. Given the run of data,
I don't think there's much that's going to send this market down.
Has the
just
probability
to let
in
somebody
your
know I don't want to
mind
be the
no
bearer
cuts
of
this
bad
year
news.
increased or stayed the same?
If you bought puts.
Question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here.
Right,
we
this
have
is good.
Strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree, it's, nobody likes it, but is there an argument for being patient and working with the economic cycle
keep
to
the
get
labor
it down
market tight?
over time? Thank you.
This is my
On
same
your first
question.
I don't have a probability estimate for you, but all I can say is that we've said that we didn't think it'd be appropriate to cut until we were more confident that inflation was moving sustainably at 2%. We didn't get our confidence in that didn't increase in the first quarter, and in fact, what really happened was we came to the view that it will take longer to get that confidence. And I think I think it's the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting, and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them's further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation. And this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it, and that's how we think about that.
Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It'd be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print has led to some to start mentioning the term stagflation with respect to the US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that. In terms of your second question was stagflation. I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%, and that won't be. So I don't see the stag.
Damn, that was we will get it there. Okay.
Michael McKee from Bloomberg Radio and Television. The vice chair of the FOMC said
told you right there,
he's
isn't that
willing to consider the idea that potential growth has moved up, and of course he's Mr. Potential Growth, our star. Do you share that view, and would that imply that maybe policy isn't tight enough?
So I think I would take that question this way. We saw a year of very high productivity growth in 2023. And we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. The question is, will productivity run? There are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy that's not about productivity. It was about having more labor, frankly, both through, in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for potential output this year and next year and last year for that matter too. So I think in that case, I think you really do have a significant increase in potential output, but you've also got you've got more supply, but those people also come in, they work, they have jobs, they spend, so you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive, and our evidence for that I went over earlier. You see it in the labor market, you see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years, and that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how.
This is insane, bro. This is insane.
Thank you, Mr. Chairman.
I should have just got my calls, but I was trying to get my guy up.
Growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state.
Soft
landing. We
landing.
have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in today's meeting? And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
Was there a discussion about a rate hike at all?
So the policy focus has really been on what to do about holding the current level of
higher for longer.
That's really
not
that's part
how
of the
high
policy.
can we go.
That's where the
how high
policy discussion
can you
was
go?
in the meeting.
Yeah, I wanted to follow on the 3%. Is there a time frame of persistent inflation that would trigger a rate hike?
There is
No, just 2%, my guy. Stop asking stupid ass questions.
Clearly, restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will take and how patient we should be, it's going to depend on the totality of the data, how the outlook evolves.
Hi, Victoria Guido with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher?
She must not
close
have
to an
heard what he
election?
said. Have
And,
some dignity.
Similarly, is there a significant economic difference between, starting to cut in, say, September versus December?
Oh, okay. I thought shit was going to go off the
So
handles there.
we're always going to do what we think the right thing for the
gosh.
economy is.
You guys gotta see that
when we
microphone.
come to
It's
that
so
consensus
big.
view that it's the right thing to do for the economy. That's our
Communication
record. That's what we
services
do.
up,
We're not
materials up,
looking at
discretionary
anything
real
else.
estate
It's
all in the
hard enough to
2%
get the
range.
economics right here. These are
Communication
difficult
services up the
things,
most
and
at
if we're-
2.3%.
If we were to take on a whole nother set of factors and use that as a new
And we
filter,
identified
it would
that.
reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And we're at peace over it. We
Here,
know that we'll do what
communication
we think
services,
is
we
the right
identified
thing
this
when we
earlier.
think it's the right thing. And we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the
Have
American
some dignity.
people and making
She
our
must not have
decisions
heard it.
based on the data and how those data affect the outlook and the balance of risks.
That's why I said it, because I knew he was
And then,
gonna
is
get
there a
little-
significant difference between,
little hot, little
whether you
sizzled up
start
by the-
in, say, September versus December? And
There's
economic
a
difference?
significant difference between an institution
Pretty much shut the
that
f-
takes
up.
into account all sorts of political events and one that doesn't.
I did not
That's where
curse.
the significant difference is. And we just don't do that. I mean, you can go back and read the transcripts for this is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So
Right. Has some dignity. Next
Thank you, Chair Powell. Question about the labor market.
She
You've
might
mentioned
get
a few
kicked out
times
for
that the
that.
labor market is normalizing. Certainly today's
She might not
Jolts
be
data
allowed back
suggested
for that one.
Things are kind of getting
I'll
back
be
to
honest.
pre-pandemic levels. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wages peaked, wage increases peaked a couple, 3 years ago, essentially all wage measures
All
have
right, we're
come
getting
down
our pullback.
substantially to that. But they are not down to where they were before the pandemic. They're still
Where
roughly a
do we get
percentage
an
point
entry
higher.
to hold on for a
And we've
day or
seen
so?
pretty consistent progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down.
I
Essentially,
wonder,
it was flat
real
year over
quick,
year, I think roughly. So
I wonder if
yeah,
the market just realized, wait, what the hell did we go up for again?
target wage increases, but
It probably just got
you know,
reminded. It
in
wasn't
the
sure
longer
why it went
run,
up.
If you have wage increases running higher than productivity would warrant, and, then there will be inflationary pressures. Employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
Here we go. That's an entry point 506. I'm not in anything yet. Not yet. Just give me a second. I will be. Nancy. Nasty Nancy. All right, we're looking for 510. Go back to that
consumers.
5,
And consumers
12.
are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans.
That was
credit
such a huge
cards.
move.
People looking to borrow
Fuck.
are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well,
give us time.
The thing that hurts
You
everybody,
might
in
have high
particular,
inflation and be laid
people
off.
in the
Give us
lower
time.
income
You think it's tough
brackets,
now?
is
Give us some
inflation.
time.
If you're a person who's living paycheck to paycheck, and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%, and then people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large.
I thought he was about to say, you need to find your ass a new job,
And we
son.
made quite a lot of progress if you can think about it.
Here at
I
the
think
Fed,
core-
we
I
making
think,
a
headline
400 or 500
core
grand a
PCE
year.
peaked at 5.8, now it's at, anyway, headline peaked at
You know, I'm just
7.1,
playing.
now it's at 2.7.
You know, I'm just playing.
Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
I mean, we went from
Yes,
8,
I mean,
9 to 3.
I think
I
that
think
restrictive
so.
monetary policy is
Fucking goofballs,
doing what
man.
it's supposed to do, and but it's also in this case unusual.
Where do they find these
Working
people?
alongside and with
Where?
the healing of the supply side. That was different this time was that a big part of the source of the inflation and the reason why we're having this conversation is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And so this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
So,
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation and shelter that still hasn't arrived. So I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government data? And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have when someone a new person goes to rent an apartment, that's called market rent, and you can see market rents are barely going up at all. The inflation in those has been very low. But it takes, before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years, actually, to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident in the timing of it. But yes, I expect that this will happen.
Thanks.
Thank you, Chair Powell, for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same trajectory, easing during the pandemic, fighting inflation with restrictive policy on the way out. Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
So that you're right. I think that may happen, and you know that we all serve domestic mandates, right? So I think the difference between the United States and
Good
other
question
countries that
there.
are now considering
If he's talking about the yen.
rate cuts is that they're just not having the kind of growth we're having.
Nobody's talked about the yen.
Their inflation is performing about like ours or maybe a little better, but they're not experiencing the kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we'll be careful and cautious as we approach the decision to cut rates, whereas I think other jurisdictions may go before that. In terms of the implications, I think obviously markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think we haven't seen, in addition for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago. And that's, I think, partly because emerging market countries, many of them have much better monetary policy frameworks, much more credibility on inflation, and so they're navigating this pretty well this time.
What's wrong, baby?
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You sort of backed away from the notion that the economy would need to encounter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along a relatively painless path for the economy, or is some softening in the labor market and the economy likely needed to bring inflation back down?
So you're right. I think we thought, and most people thought there would have to be probably significant dislocations somewhere in the economy, perhaps the labor markets, to get inflation all the way down from the very high levels it was at the beginning of this episode. That didn't happen. That's a tremendous result. We're very, of course, gratified and pleased that hasn't happened. And if you look at the dynamics that enabled that, it really was that so much of the gain was from the unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply side problems, and also some demand issues as well. The unwinding of those really helped inflation come down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2% sustainably. We will bring inflation down to 2% sustainably. We hope we can do it without.
I'm just waiting for another pullback. I missed my first one on the SPY.
And speaking of dislocations in the labor market, in terms of cutting, you said that if there were weakness in the job market, that could be a reason to cut rates.
Oh, nice,
so if the
Tesla. Nice
unemployment rate were
pullback
to
there.
tick
There
above
we go.
4%, but inflation not back down to your 2% target,
Are you
how would
okay?
you look at that? Would the unemployment rate popping back above 4% catch your attention?
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly what I mean by that, but it'd have to be meaningful and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would probably not do that, but it would be a broader thing that would suggest that it would be appropriate to consider cutting. And I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
Hi.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You've said that broad and material changes are needed for the Basel III Endgame proposal, and you've mentioned that a reproposal is something that's on the table. As you've had more time to sort of sit with the public commentary, process that, and understand the options available to you, do you have a better sense of whether a reproposal will be necessary? And do you have a timeline in mind for when some sort of movement will be made on that front, either a reproposal or a move to finalize?
So let me start by saying that the Fed is committed to, completing this process and carrying out Basel III Endgame in a way that's faithful to Basel and also comparable to what the other large comparable jurisdictions are doing. We haven't made any decisions on policy or on process at all. Nothing. No decisions have been made.
Looking for 190 on
I'll say again,
Tesla.
though, if we conclude that reproposal is appropriate, we won't hesitate to insist on that.
And then do you need to resolve issues with the capital proposal in order to advance other parts of the regulatory agenda, or do you expect to continue to
good
make
question.
progress
This
on
is
those
what we
other,
need.
agenda items?
You know, there's no mechanical rule in place there, but I would say that the Basel III process is by far the most important thing, and really is, I think, occupying us at this time in terms of what we're moving ahead with.
Last question.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus, which you recently identified as a priority, while allowing for a range of views or even dissent? We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System. We have 12 reserve banks around the country where they have their own economic staff, not the people who work here at the board. They're different people, and so each reserve bank has its own culture around monetary policy and its own approach and that kind of thing. It guarantees you a diversity of perspectives. So I think that the perspectives are very diverse. But and in terms of dissents, we have dissents, and a thoughtful dissent is a good thing.
We have dissents, thoughtful
really
dissents.
think,
We have all kinds of dissents.
But all I can say from my standpoint is I listen carefully to people. I try to incorporate
big dissents, small
their
dissents,
thinking, or do everything I can to incorporate their thinking
happy,
into
sad
what we're
dissents,
doing.
all kinds
and
of dissents.
I think many people, if they feel that's happening, that for most people, most of the time, that'll be enough. But I'm not.
All kinds of dissents.
It's not frowned upon
tried to
or
carry
illegal or against the rules or anything like that. It just
All right,
is
Tesla,
the way
what are you gonna
things
do,
come
guys?
out. And
What you wanna do, gang?
I mean, I think we have a very diverse group around the table. Frankly, more
Right or
diverse
not?
than it used to be in many dimensions. More diverse from
I'm
the
so pissed I didn't
obvious,
right.
gender and demographic ways. But also we have more people who are not PhD economists. So we have people from business and law and academia and things like that.
From the
so I think you
markets.
actually do have quite a good diverse perspective. I think all of us read these stories about the lack of diversity, and we look around the room and say, I don't understand. I really don't understand what they're talking about. So, but I get the question. Thank you very much.
God damn you, pal. That's it. He said it. All right, it's time to listen to CNBC. Well, why would we get hawkish? All right, let me turn CNBC on. Up-to-date CNBC. Listen, here's what I want you guys to take away, if you guys take away anything. And you're seeing it with earnings. The labor market. Things are okay right now. But he is expecting that the labor market is going to start to loosen. And we are on that other path from last year to this year. Last year being that we had a lot of growth, a lot of things happened. And this year, just in the first quarter of this year, a lot slower. And that's why he's still saying, I wish this motherfucker would stop showing up on my shit. You know that
invest accordingly.
He's recognizing that we have just pretty much like slammed on the brakes with the economy, and we're going to start to see it. And that's why he's still saying, I'm certain that we're going to see X, and Y as far as inflation, 2%.
a hike off the table, calling those prospects,
listen,
quote unquote,
the market
unlikely
left
unless
me. It
something
is what it
dramatic were to
is.
happen.
I
We
get a
check the markets
pullback.
now.
There's
Clearly,
a few
the
things I'd
market's
like to
taking
look
this
at and go
as a
long.
bullish event
As soon
today,
as
at
I
least
get
for this
that
moment.
chance, I'm gonna
You
let
see the
y'all
Dow
know.
there, almost everything
I was
is
trying
higher
to
by
get
at least
Powell,
1%.
and as I was trying to get Powell, it just ripped and left, and I never grabbed the pullback because I wanted to hear a little bit more. And then by the time, you know what I mean, by the time it was said and done, the thing was already back to 506, and I'm like, whatever. You know, it is what it is. It's all good. At least it wasn't boring. Like I was scared that
Just
might happen. I'm freaking
Well, I think
starving,
you just
I know
said
that.
the most
I'll be
important
right back. Give
word,
me
which
1
was
second.
unlikely.
I gotta grab something.
Unlikely the next policy move will be a hike, and he went quite out of his way to make it sound like they're not contemplating a hike at all based upon
They're not,
the data
Jeff,
that's
stop.
come out.
Don't be
even
fucking
though
dumb.
He's being a little bit disingenuous by claiming that inflation is below 3%. Remember back at Jackson Hole in 2022,
Right,
I
Jeff's
think it was.
doing way too much,
we came
bro.
up with supercore inflation, supercore CPI, supercore PCE, and supercore PCE, which is
Supercore
excluding
PCE 3,224.
food, energy, and housing, is up 3.3% year over year. And what no one wants to talk about is supercore CPI is up 4.8% year over year. In fact, the CPI for the first quarter here in 2024 at year end was projected to be 2.7 on an annualized basis. Instead, it's 3.5 year over year on the headline. So it almost feels to me like he's hoping that the inflation data comes down without
No, he just knows the labor market's about to soften.
And I guess he feels that the lack of progress,
He
as
kept
framed
talking
it,
about the labor
during the
market
first
over
quarter
and
is going to
over
be transitory.
and over and over
So
again.
we'll see. With oil prices at $80 a barrel, I'm not
coming down.
See the inflation numbers come down in a sustainable way below 3%, particularly not on the core numbers. So the markets, as you correctly pointed out, love this because there was fear of a lurch toward some suggestion of maybe contemplating a rate hike.
Sorry, baby, I didn't mean to scare you. No, do not listen to Jeff. Were you expecting a rate hike? I wasn't. He's talking out of his ass. I don't know what's up with him today.
Down
He's
earlier in
mad.
the day, and they're now significantly in the green. So this is a interesting thing because the big pivot that started everybody getting happier was November 1st. And interestingly, rates are up a little bit since then, but not very much since then. So we've basically had rates go up and then come back down and go back up again. We've definitely been in a trading range for the fixed income markets and more recently sort of the equity markets as well. And this meeting and this press conference suggests to me that that's going to be sustained.
It certainly sounded like I guess we could say, a not yet chair versus a not at all chair, at least when it comes to rate cuts. I want to note going in that Goldman is still sticking to its view of 2 cuts because they say the 2 pillars of disinflation are intact, those being lagging housing data and the fact that we don't have any more supply shocks. I'm curious as to what your take is now. When do we get the first cut, and how many will we get this year?
It seems unlikely that we're going to get 3. That was in the Fed's dot plot back in March. I actually, based on what we're seeing in the inflation market and commodity prices, which have been weak recently, but they're pretty much at their 200-day moving average. Oil is up. I kind of feel that the base case now is 1 rate hike for this year.
Oh
and
my
I
God,
certainly don't
Jesus
think it's
Christ.
You mean
cut? Cut. Yeah.
Freudian, it's a Freudian slip.
got it backwards. But I don't think it's coming in June.
I was wondering what he was talking about. I'm like, there's no way, Jeff. What type of shit are you on right now?
Certainly respects the fact that, I mean, lack of progress on inflation. That was not unanticipated that he would say that because he can't disrespect the data. I mean, it is what it is. But I thought one interesting takeaway that I got was he mentioned that a couple tenths in the unemployment rate would not be a catalyst for easing.
Did he say
I had
that?
the feeling that he needs the unemployment rate to get up to 4, maybe 4.2 even. And so we'll see what happens there. The unemployment rate has been up a little bit, but clearly it's not to the point where the inflation fight is less important than as the dual mandate, because the jobs part is behaving quite well, and the
I mean,
inflation
it's not
rate
time
clearly
yet.
is
You
the
got to
one
wait till
that is lacking progress, as you put it. So I'm going to lean on one rate cut this year. I certainly don't think 3 seems very likely at all. So that's where it is. I think that higher for longer seems like the mantra continues, but without a rate hike. So this is a pretty good environment. The type of strategy that we've been advocating and implementing seems like it's going to keep working. It's been working really well for the past 6 months, and that is, that you can get pretty good yields by investing in securities in the fixed income market that aren't that risky. I'm not talking about triple-C junk bonds or even single B junk bonds. I'm talking about things like single A, triple B, maybe high double B, that are priced off of the short end of the curve, or say off the 2-year or the 3-year part of the curve, where you can get yields that are in the mid-7s without a lot of risk. And that seems like it's going to be a very comfortable place to invest without a lot of volatility. And so you want to take advantage of this inverted curve, which has been inverted for a very long time now. It's one of the longest inversions in the history of the bond market in modern times. And it looks like it's going to continue for a while. So that means that you can get decent returns without a lot of lost sleep by staying in some credit securities, but really pricing off the short end of the curve. So we've liked bank loans in the double B area. They continue to do well. We like consumer receivables, parts of the commercial real estate market, away from office. These types of things can all generate 7.5%, even 8%, depending on how much risk you're willing to take. And once again, with some uncertainty having developed, maybe it's going away now with this Fed meeting today, but for retail investors, gone back to trading at discounts broadly involved there. There's double-digit yields available without taking a ton of credit. Seems like a pretty good environment for risk assets, and it seems like we should probably not have a terribly volatile environment before the next Fed meeting, which I know you're coming out to Double Line for the next Fed meeting. It'll be fun to do it in person.
Forward to that. What about the shorter end, the belly of the curve, even if you think that, I mean, Powell's all but telling you without saying it that they think the next move's a cut, right? I mean, they're pretty much alluding to that. It's just a matter of when. So if you think that rates are going to go down later in the year, what about treasuries now?
Well, I don't really like the long end of the Treasury curve right now. We had been owning some long-term Treasuries. They rallied a fair amount from October. And now we're more interested in, say, the 10-year than the 30-year Treasury, and liking the belly of the curve, as you say, pretty well. And pricing and assets that are priced off of the 2-year and the 3-year, you don't have to go into junky credits. You can get the yield of the high-yield bond market to a no-default scenario, basically, in single A securities that are priced off of the 2- and 3-year part of the curve. So that's what we really like. We haven't had a lot of changes in our portfolios since last we spoke, Scott. We've shortened our duration a little bit because we thought rates were a little bit too low, and the 10-year got into the 3s, as we suspected was going to happen. But now that we're up at 4.6, and well, we lost the 5 handle on the 2-year after the Fed meeting, but those are pretty attractive returns for the risk that you're taking, and the volatility just hasn't really been there. Since November, the volatility in the bond market has pretty much dissipated. I mean, a couple of years ago, rates were 200 basis points lower than they are today, but they've certainly plateaued. I mean, we're basically, many parts of the curve, very close to where we were, really been in the range for the past 6-7 months. So it's a low-risk environment, and it's appropriate that we got a big equity rally, because everyone was scared that, the Fed might mention a rate hike. And that absolutely did not happen. So I think we have to characterize the Fed today versus expectations perhaps yesterday as being incrementally dovish.
I'm going to come back to you in just a second, Jeffrey, because on that note, Steve Leisman's out of the room now, and I quickly want to go to him. That really is the takeaway, Steve, right? An incrementally more dovish Fed chair than I think the market was clenched up in fear of.
Yeah, I think there was probably some pricing, Scott, for a Fed that was maybe, more likely to talk about rate hikes, and that's not the case. And I think it was critical when Powell answered my question and said, you know what, I still have confidence in inflation coming down. Let's listen to that.
My expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen.
So the idea being that I think, as you said earlier, Scott, he said the next move being a hike is unlikely. It means rate cuts are still possible. I think it's worth talking about, Scott, when you asked Jeff about whether 3 cuts this year are likely. Well, we're in April now, right? So you know what, 30% of the year is gone. So that question is 30% less significant. I think what you want to be thinking about is over the course of a 12-month period. I don't think Jeff stops his books on January 1 or December 31st. And it's interesting to me to look down at a 1 year that's trading at 519. You know what? If we get on the trajectory on the path that Powell says we're going to be on, that may be a rich bond right there right now in terms of how it's priced in terms of the yield. And I'm looking down the curve at like a for next year. So anyway, it's time to start thinking about a longer period of time. We probably lost 1 or 2 cuts this year, but over the cycle here, period of time that's still within investors' horizon. Certainly there are terms for it out. Think about that said, Powell is saying, he's not, I think the word, that's the right word. There are still some pretty hawkish comments. And our cuts are not for sure.
Good points, as always, of course. Steve, thank you. That's Steve Leisman, our senior economics reporter. Jeffrey, I'll turn back to you. The other moment I think that people are calling a moment was Powell addressing the S word, stagflation, to which he said, I don't really understand where that's coming from. I don't see the stag or the flation. What's your take on that?
I agree with him. I really don't understand people talking about stagflation at this moment. I actually heard somebody on the radio earlier this week actually say that the economy is shrinking and inflation is going up, in real time in a measurable way. I mean, obviously the economy is not shrinking. 1.6 GDP isn't great, but it's certainly not shrinking. And we see that the GDP now for the second quarter, although it's very early, so it'll probably get revised substantially, but it's up in the high 3s. So the economy is not shrinking, and the inflation rate, it might be at 3.5%, but that's not exactly Jimmy Carter inflation. That's not 2022 inflation. Inflation is clearly less. Now, the thing that is, I think Powell is onto correctly is I think everybody, myself included, thought that shelter inflation, rent inflation, would come down faster than it did. Because the Zillow index and the apartment rent indices, they came down multiple percentage points. And they're down in the 2s, 3s, and 4s, having been up in the 8s and 9s. But yet the owner's equivalent rent stays remarkably high. We got some home data yesterday, and it said that home prices were up, depending on what zip code and what district you're in, but something like 5 to 8%, which sounds surprisingly high given the low volume of turnover and the interest rates. But maybe it's a mix shift. Maybe the data, maybe it's higher price homes are selling. That would actually make sense because it's the lower middle class and the middle class that's really getting buried by this inflation. And these prices, while the inflation rate isn't that high, the absolute prices are still high. And we have weird things going on, like insurance prices are up massively, which are one of the reasons why the CPI is so much worse looking than the PCE, because we don't have in the core area these insurance prices, and the shelter prices in the PCE are a substantially lower weighting. So where I am right now relative to the Fed is I'm going to be looking very, very closely, as closely as you can possibly look at monthly inflation data, and I'm going to be following the oil prices, and I'm going to be following commodity prices broadly. which had shown some strength but are now easing off, and it's nice to see oil back below $80. But if we see 3 4/10 inflation prints, it's going to be very difficult for Jay Powell to make the statement at the next meeting that he's going to get inflation down to 2%, and yet there's no need for any rate hikes. It's going to be difficult to call this inflation reversal or lack of progress transitory come the June meeting, and certainly the one after that. So that's going to be the story, I think, for the second part of the spring into the summer of 2024.
You know, if you listen to Powell's tone and you read into the demeanor and such, he definitely comes off exuding this confidence that he still thinks they can pull this off. And this being the soft landing, because he does expect that growth is going to remain strong enough and inflation later in the year is going to get down closer to target. You've been looking for a recession, albeit suggesting it was, getting pushed out. Do you still hold to that call, or are you changing that?
I am on the fence as to whether we'll get a recession in 2024, largely because the unemployment rate has been so stable. I would be very concerned if the unemployment rate went up by another 3 or 4/10. I think that would lead to a recession sooner rather than later. But we haven't had that happen yet. In spite of the fact there's been all these layoff announcements, it is weird that the weekly unemployment claims never change. Here we have this economy that has its ebbs and flows, and yet we get the same on Thursday. We get the unemployment claims, and they come out almost exactly the same every week. My friend Jim Bianco wrote a piece on this, saying this is almost statistically impossible. What is going on here? That it's always 212,000 unemployment claims every week. But those are the numbers, and unless there's something wrong, and they're going to be adjusted very substantially, and there is some evidence for that. I mean, there is data that's a lot weaker. The household data is a lot weaker than the establishment data. There's this BED data that tends to lead the establishment survey, and that's looking strangely weak compared to what's been happening in the establishment survey. But for now, those layoffs don't seem to be. They seem to be offset by hiring. So we have a labor market that's in balance, even though it seems with the inverted curve and how long it's been inverted and these higher interest rates, you would think the economy would have weakened. But we still have all of those distortions from the COVID response. There's still a huge M2 supply. It's still way above the trend that it would have been if we hadn't bulged up the M2 in 2021, 2022. We'd have had much lower M2 supply than we have right now, even though it's not really growing robustly anymore. So a lot of these things got way out of whack, and it's taking longer. And Powell acknowledged it himself, and I give him credit for that. That this normalization is taking longer than anybody expected, including myself and including Jay Powell. So I think we need the unemployment rate to go up, and it hasn't really happened yet. So that's number two. Number one is the inflation data. That needs to come down, and I don't really have Jay's confidence that the inflation rate is going anywhere close to 2% by the end of 2024 on a year-over-year basis. I don't care what you look at, whether you look at core or super core or PCE. I don't see any of them going to 2% this year.
I mean, on that note, do you take the Fed chair at his word that it's 2% or bust? Or do you think that they'd actually be willing, even though they're not going to say it, to accept a higher target now rather than what the alternative might be, and that is to ruin a good story that they'd like to be able to tell?
I think that he's doing a little sleight of hand with his inflation numbers, as I said earlier. He's making the claim that the inflation rate is in the 2%, 2.7. He cites the PCE. And many other inflation measures are in the 3s or 4s. And you'll remember the 3-month annualized trick that was behind the rhetorical pivot back November 1st. I mean, no one wants to talk about 3 months annualized now because it's not pretty at all. We had CPI come in 0.8 higher in the first quarter on an annualized basis than what was anticipated just 3 months ago. So I think that he's going to have to hike rates unless this transitory lack of progress reverses. And I don't have the same level of confidence that he has that that's going to happen.
And even with all of that, I think one of the headlines, my takeaway, at least from my conversation with you, is that Jeffrey Gundlach is bullish on risk assets, at least in the near term.
Moderate risk assets. I don't like really risky stuff because I think higher for longer is going to start taking some of the bodies out. But I do think that in the medium risk assets, I am positive for at least into the next meeting.
Okay, where would you put equities, for example, on your scale?
I think I'm sort of neutral on equities, but I have a very I don't like index fund approach at this time. I continue to like sort of Japan, Mexico, India as long-term holds, and I'm not a momentum guy, and I know that momentum has been a winner for the past 18 months at least, but I think it's not really leading the way anymore, and I just think valuations, while not excessive, I think they're on the rich side, and they really kind of need this Fed story to play out. But I think in the near term, we at least have the wait and see. We have the time on our side because the Fed has supported a lower volatility environment, I think, for the next several weeks at a minimum.
Speaking of momentum things, gold, you talked about oil for a minute, right? We seem to be on this march, towards 90. And then the dollar. How about your outlook for all three before I let you go?
Well, I've been bullish on gold. I talked about it in our roundtable prime here at Double Line the first week of January. I didn't think we'd go up so quickly. I mean, it went up to 2,400 in the blink of an eye. That's a pretty big run. But I would hang on to gold. I wouldn't be a seller. I'd probably wait for more like 2,200 to be a buyer. But I think that's fine. I think the dollar is going to weaken, but it needs the recession to weaken. And in the near term, the dollar appears to be stable, very stable, versus most other developed currencies. So I don't have much of an opinion on the dollar. And then what was the other you wanted?
Oil.
You said oil seems very, very stable at about $80. I think that if oil went to 90, as you suggested it might, or certainly to 100, the Fed's going to have a really big problem. So that's the biggest wild card out there in kind of the uncontrollable commodity markets. If oil puts on another $10, $15, $20, there's no chance you're going to get to a 2% inflation rate, as Jay Powell is hopeful for.
Jeffrey, we'll leave it there. And the next time we meet, we'll be in person, as you say, at Double Line in Los Angeles after the next meeting. I look forward to that.
Okay, sounds great. We'll have a good time.
All right.
Good luck, everybody.
Well. Thank you. We'll see you then. Jeffrey Gundlach. Let's bring in SoFi's head of investment strategy, Liz Young. Welcome.
Thank you.
So the markets, let's say, halved the gains on the Dow. Remember, the S&P was good for a pretty good chunk of 1%. It's given a lot of that back, if not almost all of it. What do you think's going on, and what do you make of what you heard today?
Well, what I think happened before this meeting is the market had priced in Powell's comments from a couple weeks ago, and he had very clearly stated what he reiterated today, which was we've seen a lack of progress. This is going to take longer than we previously expected. But then what we heard today was it's going to take longer, but we're still going to get there. I'm confident that it's working. Restrictive policy is restrictive enough, and the effects of it are finally being seen. So the calmness that the market has right now, that yields have and that equities have, largely are due to the fact that I think we did start pricing in the possibility of a hike sooner rather than later.
Starting to get worried about that, right?
Absolutely.
Are those fears now gone?
For the time being. I think the other thing that we haven't really talked about yet, he pointed out that he wanted to wait for an entire quarter of data before they really made a statement on inflation. So now, instead of thinking about this on a monthly basis for what the Fed is going to do, I think we have to think about it on a quarterly basis. They want to see trends in the data. So if they're going to get confident to cut or hike, they're going to need to see 3 months at a time of data to feel that way.
Well,
so
I think it was more citing
the
the fact that they've had, you've had the three CPI prints that were hotter than expected, as he termed that, basically a quarter's worth of data, which is why it was concerning. Now they're also working against the clock and the calendar.
Yep.
Because of the election.
Yep.
They're not going to be phased, he says, by necessarily the time frame of that. They're not going to be political.
Right.
And he made the point yet again, as he has consistently done. But you, as I said to Jeffrey, you do have the feeling that this is just a not yet, not a not at all
Yeah.
Fed chair in terms
Yeah.
of cuts.
I think today that's the case. And I think today that's the right way to put it, because they're just now getting what they wanted. They wanted to see slower growth. If you remember back to the things that he was saying all of last year, at some point we need below trend growth in order to achieve our goal on inflation. So now we got our first quarter of below trend growth, and I think that's a good thing. That's what they want to see. But he did point out that the underlying growth rate is still pretty strong. So if things continue at this pace, all he did today was reiterate, we have no reason to cut yet. And I do think that the bar is very, very high for them to hike. But I am with Gunlock that I'm not as confident as he is that that inflation is going to fall precipitously throughout the rest of the year.
Is what you heard today, we'll take a quick break after I ask you this question. Is what you heard today, does that make you more bullish on, let's just say, risk assets, equities, and other things than you were going in because you were fearful that he was going to be more hawkish?
It does for the near term, yes, because I think he allowed us a little bit more time to wait in this pause, and markets do well during a pause.
Okay. Quick break. Liz Young is going to stay with me, and we'll come back right after this. More reaction to today's Fed decision and Chair Powell's news conference. Plus, we do have Qualcomm and DoorDash. They're among the key names reporting at the top of the hour. Let's not forget about Apple tomorrow, too. It's a very busy week. We go in the market zone next.
Oh my gosh, I was making waffles. I did not see the reversal. Oh my goodness, I love it. Let's go. Holy shit, we just went all the way up there and we reversed it. Oh snap, bro. I feel so much better now that I missed it. I knew that shit was shady. Oh my gosh, what happened? We reversed it, we took it back, Jack. Oh damn, son. What news did I miss? What did I miss? Give me 1 second, guys. The market's about to close here in 10 minutes, but I gotta figure out what the heck I'm gonna do. As long as we can hold that man, we should have never cracked 503. Should have never cracked it, dog. You know, I usually don't call people dogs or anything, but what the just happened? I went and made waffles, fed my cat. Some young ball type shit, and then come back and the market turned around. Crazy. Completely reversed the move. I don't get it. So do we get calls for tonight? Did anybody hear anything? Let me look.
Markets commentator Mike Santoli here with SoFi's Liz Young.
Love, please give me a minute. You've been on me all freaking day. Did anybody see anything? I mean, I would just take it into tomorrow. Do what you want, but you're getting the sign right now. You could not hold those gains. So now they're talking about it on CNBC. I noticed that with TLT. Higher for longer. Or no, too high for too long. What, baby? Come here. I guess yields would be why. Maybe because of Powell saying that he's not putting a time frame on it. And maybe 10-year yields went higher. Maybe yields went higher. Well, they haven't went higher, but I don't know. I think everything that I'm saying and that I have been saying, yo, whoever the hell just clicked on and clicked off, don't you ever, yo, I swear to God. I swear to God. I ain't even gonna talk. Bro, what is going on? Oh my God. I have not lost money at all. What the do I do? Straight down. Straight down. Josh Brown. Holy hell. I knew that fucking run was shady. I knew there was something wrong with it. I thought, oh, okay, bad news is good news. Now are we getting bad news is bad news? Higher for too long. We're starting to see a slowdown, a major slowdown, and you're still going to hold, so you're definitely pricing in a recession. The chances of recession are going higher. Is this what this is telling you? Ask yourself. Okay, go ahead. Ignore the lag effect. Listen, it's what we want, pal. Send asset prices a lot lower, please. I urge you to, my guy. So I don't know where the European market's closed at. We got like 0 minutes left. Unfortunately, we got to see where we open at. See what semiconductors are still down. I know AMD was. I haven't looked at Nvidia. So I think you need to. I think there might lie the outliner. I don't know. Does that make sense? Outlier, bro. XX 600. Give me an hourly chart. This is like, if anybody is out there, like, do you fucking hear me? Like, am I making any sense? You're seeing GDP 3.1. Okay, yeah, quarter for quarter. Okay, it could be just 1 quarter. You're right. It could just be 1 quarter. But we are starting to see it through earnings now. The companies are coming out and telling you the consumer is now a lot pickier. They don't have money anymore. We're still going to just hold rates till we get to 2%. Okay, you're not going to hold until you start to see some type of get there, that we're on the path. Nah, we're just going to wait until we get there. Okay, cool. You're not going to count in like this like time that you still have. Like, I don't know, man. I think the market has it in its head that fuck. There's 1 minute left. I wish I had a few minutes to like analyze this to figure out what it is that I wanted to do. We just completely reversed it. I think I gotta wait until tomorrow. I can't make any plays off of this. I don't know what to do. I gotta see where we open up at tomorrow. There for a minute, I figured, I said it all day, they're just gonna send this market for a whipsaw, and we're getting that. 495 maybe? Like, you took it back. 495s? No, the fucking spy, motherfucker. Sorry for my language. On board type shit. I'm not going to be able to get it unless I do it after hours. 495s for tomorrow. What are they? Bro. What's today? The 1st? 490, 20 cents, 58,000. Damn, I should have got it way up there at the 20-day though. So did we crack the 20-day on the SPY? Fucking, I'm on the wrong side of the charts, guys. I'm sorry. Oh my god. I'm not gonna get it. I'm not gonna get it. This is fucking horseshit. Look at that tail. I want it. I want 495s for tomorrow. I'm going to try and get it. This might be a stupid idea. If we can get a bounce back, I'm going to try and get this. I hope everybody else had a great day today.
Qualcomm increased quarterly cash dividend to $3.40 annualized payout per share. That's Quebec, Charlie, Oscar, Michael.
Quebec, Charlie, Oscar, Michael, Quatisha. Look, I can't even, it won't even get me in. It won't even let me in. Howard Lutnick. All right, guys. I think we gotta wait and see and be patient. I'm looking for the 100-day.
CTSH Cognizant Technology Solutions, $1.12. The estimate was $1.11. That's a penny beat for CTSH. Charlie
Time. I'm.
Yeah, and we have got another jam-packed hour of earnings heading your way, including results from Qualcomm, DoorDash, Etsy, Zillow, and more.
Plus, billionaire businessman and Cantor Fitzgerald CEO and Chair Howard Lutnick joins us with his first take on the Fed and when he thinks cuts could be coming and so much more. But let's get straight to the market and that reaction to the Fed. Joining us now, David Zervos of Jefferies, Victoria Green from G Squared Private Wealth. And what an afternoon of trading it was. David, I mean, the Dow still eked out a gain here, but the S&P and NASDAQ, after a big pop in the midst of that Powell presser, finishing the day lower.
Bro, we sold off 10
Dovish
points
here,
in a
or
few
when
minutes.
you start to look below the hood and at some of the specific
Do we wait
words
for
that
the
the Fed
bounce
chair
back?
was using, including about the signals from data, was this really more down the middle?
I actually think it was quite dovish. I think the market's initial reaction was actually correct. I'm not exactly sure why the market got a little cold feet at the end of the day. Maybe we'll see something else that comes in. But I think from the Fed's perspective, this was a dovish move. It was a dovish policy move, a dovish statement, and a dovish press conference. The rate markets seem to embrace that story maybe a little bit more than the risk asset markets. There was definitely a lot of fear that he might go down a Bowman-type path and talk about the possibility of hikes. He really pushed back on that. He talked a lot about how policy was still very restrictive in his mind, talked about the demand side, indicators that are confirming that view for him. And look, they cut QT. I mean, that's a policy move. That's, in my book, an easing, Morgan. I mean, they eased today. So I know he's not going to say that. The primary tool for monetary policy is rates, blah, blah, blah. But the balance sheet's a big deal, as we've talked about a lot on this show. And they eased today. That's actually a pretty significant move.
Yeah, I want to jump in here. Qualcomm results are out. That stock is higher by about 4.5% initially. Let me give you the numbers. It's a beat and a raised quarter. Fiscal Q2 revenue came in at $9.39 billion versus $9.34 expected. Non-GAAP EPS at $2.44 versus $2.32 expected. The guide
guys,
is also
I'm outta here.
above for Q3.
Guys, have a great day.
Qualcomm guides to a revenue midpoint of $9.2 billion.
I knew
That's
there
better
was
than
something
9.
real shady about what was going on today. Real shady. Where did AMD finish up at? I think that needs to be the question. AMD not too bad. Nvidia, TLT. When I saw TLT pull back, I was kind of curious myself. KRE not bad. Look, there's some strength with KRE right now for some weird ass reason. That's so weird.
MPWR, monolithic power, MPWR $2.81. The estimate.
I'm not going to say what that looks like, but
was $2.66. That's a beat. Revenue $457 million is a beat for MPWR.
Nvidia. All right, guys. You guys have a great rest of your day. I'm Audi 5000, bro.
Coming up.
If only that was the thing. Hope you guys had a great day. Maybe I can be a little more entertaining. We'll see. Maybe I won't. Maybe we'll get a play tomorrow. Maybe tomorrow is the day. Tomorrow just might be the day. Just might be. All right. Peace out. Peace out, blank chat.
They reported $1.25. The estimate was $1.20 for eBay.